Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. Dennis is here. He just had to reboot his comp, so he'll be on in a second, we hope. It is a quad witch / S&P rebalance Friday. Also, happy March Madness to everybody, all the college basketball fans out there. We got a good show for you today. We got Marcus Heidkotter 8:35 or 8:30, somewhere in that range. Jason Rasnick at 8:45 or somewhere in that range. We got some earnings from FedEx and Nike. There's some NFT stocks doing weird things this morning. And same story really as the last few days. There's this tug of war, right? This tug of war between bond yields and high PE multiple stocks. And the bond yields are winning right now. We gave back those gains. I'll bring Joel on now, and Joel will tell us exactly how we gave back those gains yesterday from the Fed rally on Wednesday. Joel, good morning.
Yeah, nice, interesting day yesterday. Good morning, Spencers. Good morning, traders, investors here on this March 19th quad witch. Had to sell off yesterday into the close. They tested that level overnight, and it held. So 3,900. Get your blotter out, and boom, 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 right down 3,900. That's major level. That is the low for the week overnight. Thursday's low, that's the key to this market, returning to the all-time closing high made earlier in the week at 58.25. Crude down 29 cents at 59.77. Just got shellacked yesterday, giving back a couple weeks worth of gains here. Now under $60. Gold, that's up $8 at 17.40.50, inching its way towards 1,800. Silver, that's down 6.6 cents at 26.28. And Bitcoin trying to get up there, traded at the high of the futures session. That's up $1,835 at 59,200. Good morning, everybody. Right. What's up, Spencer? What's up?
Joel, let's just start with like the sell-off from yesterday, and let's go like into individual sectors here. Let's start with the banks. All right, the banks were getting punished on Wednesday after the Fed meeting, and walk us through the price action in like the XLF.
You got to be scratching your head on these banks here. Yeah, and the reason I'm saying that is that was one hell of a move. Was that the move? Was that the short-term high? JP Morgan got up over 160, reversed course. Let's see, how high did JP Morgan get in the session? Boom, JP Morgan got to 161.69, made a new all-time closing high. Well, I keep an eye on that today, folks. 157.65. That was the all-time closing high. See if anybody wants out at the mark. Below 157, look out below. Let's see, that would be Wednesday's low at 153. Bank America sniff $40. There must have been a trillion for sale there at 40. Hit 39.97. That ended up closing under 39 at 38.94. So big moves, new highs, not quite reversals on any of this stuff, but you have to be wondering on the next bump up if you're going to be finding sellers there in the bank stocks. Like I said, Bank of America getting near 40. I don't even know when the last time that's happened. I think you got to go back to the financial crisis here. Let me go back.
Quit being so dramatic. Is it really?
Yes.
Oh, man, you're right.
Yeah. Look at that. What was the high? Bank America, the high. Look at this. Boy, we're going back a long time. So, I mean, it's had a nice move off its low. 39.50. March of 2008. And that was it. That's the closest we've been to $40. So there's your hurdle. 40. We were over 40 in May of 2008 when we had 40.65, but probably going to be too far away in the book for Dennis to take a look at. But man, there is got to be $1 trillion to sell at 40 in Bank America.
All right. Speaking of Dennis, let's bring on our first guest of the day, Dennis Dick. Good morning, sir.
I was having technical problems there. StreamYard didn't like my camera, didn't like my mic, so rebooted the computer. Haven't rebooted the computer in a long time. Took like 10 minutes to reboot it. So I am here now. I'm with you guys on this quadruple witch. What's going on?
How you looking there, Triple D? I
Rough.
mean, it's rough.
Yeah, feeling rough. I need more sleep, man. I need a vacation. How do you get a vacation?
Well, it's a little harder in Canada since they don't let you leave your house. But
Well, I think we're actually in the gray, so I think we can do some stuff now. But yeah, I mean, we don't have any vaccinations, so that's why we aren't allowed to leave. We decided, we'll just stay in lockdown. We don't need vaccinations.
Well, I saw Biden's authorized us to give you guys in Mexico some vaccines.
Okay, thank you. We need that, Biden.
Yeah, you're welcome.
We're like last. If you look at the list of countries that are vaccinated, Canada's like last. Like 2% of the population is a joke.
Oh.
So I don't know what they're doing.
All right, smash the like button for Dennis.
That's out of my wheelhouse.
Yeah.
So, Dennis, one of your worst fears hit the tape yesterday afternoon. Some people are attributing the move down in the S&Ps to that news. How you reacted to it?
What news?
Tell him, Spencer. Go ahead.
What's the news?
Tell him.
Wait, I'm supposed to magically read Joel's mind.
What hit the tape around 1 o'clock yesterday? Spencer.
Dude, Joel, you have to remember, I'm
Spencer.
I know
like
France went into a lockdown. I know oil went down. I don't know what Joel.
Wait,
what happened here? I don't know if it's a joke or if it's not a joke.
No.
Thank you. Transaction tax. Thank you, guys. Sorry.
What are they saying about it?
I was up late last night. I was at.
Oh yeah.
No, I swear, I was at the bar with Luke and Bert and people till like way past my bedtime.
What time?
Well, like for me, like 11:30, which is
what bar?
Somewhere around us. Dennis, you've been fretting about the transaction tax, and there was a report yesterday that the senator from Hawaii, I believe, is going to introduce that on the floor of the House. No, Senate. I want to say it's Senate today, and that hit the tape at around 12:30, 12:45.
Well, we knew that's been coming. I mean, there's no doubt that it's going to get introduced. It's just a matter of whether it's going to get passed or not. So I don't know. I'm scared about it. Obviously, I've been scared about it for a long time. It's going to have its best shot that it's ever had, but I would hope that, smarter heads prevail here and they realize it can destroy liquidity. I mean, we've went into this so many times on the show. You know which side I stand on, and I think it really messes the markets up. So, and obviously, I also believe there'll be an exemption for Citadel, Virtue, and all your high-frequency trading firms. So basically just be Main Street paying it. So they won't pitch it that way, but that's the way it'll end up. So I wouldn't be in the backyard cheering for this thing. It's only going to hurt your bottom line. So hopefully not the case. Hopefully they'll be smart about it and not try to mess with the markets and not try to make the little guy just pay and bring back basically full-size commissions.
All right, so let's talk about the sell-off yesterday. Boy, I'm thinking about, you showed me that level in the Qs yesterday, and I don't know. I didn't pull the Qs up intraday, but how high did they? It was 325 that we were talking about, right?
2 days ago, yeah.
Yeah.
When we put the double top in, yesterday they pulled the rug out from underneath the whole market. I mean, it wasn't even the whole market, not till the afternoon when they really started hammering oil, and then it started to become the whole market yesterday. I don't know. Like, we're really at the crossroads here. I mean, tech growth is definitely now in a downtrend, many stocks in a full bear market, but value is still right up there. The SPY keeps holding on. We had a little sell-off yesterday because they started hitting some of the value names too, but it always seems like something picking up the slack. I mean, the bank still closed green despite coming off the highs. Oil was really the story. I mean, that really got hammered. A lot of the oil stocks were just so overbought. There's still rotation keeping this market up, so it's hard to just go full bearish here and say, okay, now it's time to raise cash, because we know this market can turn on a dime. even with the growth names, it's hard not to just come in and buy the dip because it's been rewarded so many times. So I say again, which I keep saying, it's about your portfolio allocation right now. What do you look like? Because nobody knows which way this is going.
Tech just won't rally.
I'm trying to talk here, and I'm trying to talk here. You guys are quiet, man.
I'm here.
Come on.
I'm here. I'm sorry.
Okay.
No, so it's a good point, though. It wasn't, I mean, oil, sure, was also overdone, but I mean, I guess you could argue most things. I mean, the banks too, right? Which we just talked about. It was kind of the same story there. I mean, everything that was in favor, that value kind of came off yesterday.
A little bit. It started to come off, but
Maybe
I mean,
not
really, when you put it in perspective, these banks still made new highs yesterday. So it's hard to get full on bearish when stocks are making new all-time highs on them. So I'm mixed. I don't. This is the market that I don't have any feel for right now. And then we have a quad witch today. So this is going to be like information central for us. What are they going to do on this quad witch expiration? Are they gonna, and it's mostly at the close, like what's gonna happen all day? Where are we gonna lean? We know quad witch can be turning days. Do they turn around, maybe sell it off and then maybe buy the hell out of it in the afternoon? We don't know. So all you can do is stay in your stocks, like rotate around, make sure your allocations are okay, stay diversified. I know people like to just put all their eggs in one basket. It's just not the way to go about it in this market anyways. But I think you got to get the information of today, Joel. Like you've been talking about.
We were going. I said that 2 days ago.
Yeah.
I'm trying to. I was hoping for a little bigger pop today. After like one of those 40, 50 handle rippers. Then I would have been it just would have been like a much easier fade, right? Just get all those losses back. Now you're at the point. I mean, you've only had a 20-some point range overnight. There's really not much resistance here, so they could open this thing and just not immediately roll over, jam it, until maybe 12, jam it up most of the day, and then pull the rug out on it. I mean, I'm so set in my levels. There's 3,900. That was a low a couple weeks ago in the SPOOs. We hit it yesterday. We hit it overnight. I mean, that is the clear line in the sand. I will get full-blown bearish if we take that out on a closing basis. And then I look at that high that we made. Believe it or not, yesterday, folks, we made a high at 78.50. That's a long ways away. That was the overnight high. It wasn't the intraday high. And then the intraday high was also really interesting too, because your all-time closing high was 58.50 and it got to 58.75. So 3 highs on the dailies up there. Your all-time close, well, actually, the all-time closing high is from the day before, 64.25. There's a pound of resistance up there. And we're on major support. Now, this market just hasn't given in to the support. It hasn't given in on the weekly levels. So that's what I'm looking at today. You could chop around from 3,900 to 3,950, but there are turns at expirations. And this has the one of the last 4 or 5 expirations, just going back to March. This one has the most bearish overtones that I could see. Now, one day, they come in and rip this and close it at 39.50, 25 points off the high. Turning point, and that's what I'm looking for.
I also thought the timing, particularly of yesterday's sell-off, was very interesting in light of the fact that a lot of the stimmy checks are finally hitting, and there was all those surveys done. I think Bank of America, they won, 35% of millionaires are going to throw their stimmy check into the market. Well, 3/4 of the S&P 500 was down yesterday, so if you bought in yesterday,
didn't get in there right away.
It's gone. It's gone. Basically, I was thinking of that line from South Park where and it's gone.
And it's gone. And we'll just invest in here and it's gone.
It's gone. It's gone.
It's gone. It's gone.
So the timing, awesome. Stimmy checks are hitting. How much that's going into the market?
Yeah,
nobody can say. But I just thought there was an interesting confluence of events there between stimmy checks finally hitting.
Is that really going to move the market?
No, not much. To move the market. I'm just saying it's an interesting confluence of events. Here's an interesting note from Bernstein. and we've been talking about this exact thing for the last few days. They noted that there is a significant overlap emerging between deep value stocks and momentum stocks. There are a number of autos, banks, materials, and energy. This is before today or before yesterday. That are screening as both value and momentum. Whether that trend whether it just took a day off or what,
crowded.
Yeah.
It's been crowded for a while. Money's been flying in all these names for a long time. We've been talking General Motors on this show for 4 months.
Yeah.
So it makes a new high yesterday. It kind of feels like a little bit like it closed weak.
Yep.
So, if we get up, and we have a crazy trading day today, that 62.24 looks tough. I mean, 60 could be tough now too.
Yeah,
it looks like it's kind of in the middle of that looks like a blow off top a little bit. Talking against my book, I'm long GM, and I've got puts sold as well, so kind of double long it. Still like the story going forward, just short term, it's overbought, and that kind of looked like even in all the value names kind of looked like a little bit of a blow off top yesterday. So that's why I'm just cautious, man. I think you gotta just be cautious. Need some cash. If you don't have cash, you need to be having some cash just in case this starts to get ugly. And I don't know how ugly it can get, but there's a lot of things to worry about. You gotta, the bubbles you have are just incredible when you think about it. You got a housing bubble.
Oh, we've got a new bubble. We got an NFT bubble. Just put
I don't even know if the NFTs have got started. That's so early. But you see some of these NFT stocks.
I'm not talking about the actual. I'm talking about.
Stocks. Give us that list again. So we'll go through it.
Just real quick before we move on from the GM, what do you think about the 60 grind today? Right? Well, I don't know what the open interest is out there.
Probably. Pin it.
Yeah, that's going to be a tough one. I don't know. I don't see this ripping back up over 62, and I don't see it, plunging down to 58. I think you're just going to grind. You're seeing it a little bit in the after hours in the pre-market, but those puts and calls, straddle, whatever you got there, strangle, they're just going to be battling it just to make all those options expire as close to worthless as possible.
I mean, I came in this morning. I did the same thing I always do, which is I look at my Benzinga Pro Movers tool, and what is on top is a stock I've never heard of, ZK International, ZKIN, and they had a PR. They had a PR out on Monday that they had entered the NFT market. That was on Monday. This is a Chinese company. I have no idea what they do. I went to their website. I looked at it for 2 seconds and I left. But all these stocks now. I mean,
what's the list? Give me the list. I'm writing it down.
Oh my gosh. Okay. I have to go find it now.
I have a few myself. Like there's, that we're just grabbing from Twitter. I think they're all the same stock. So like, you look what this WKEY. I don't have any of these. You look at this WKEY from yesterday. It goes from $8 to like 15, doubles in one day. JFIN was another one. Goes yesterday from $5 to $13. It's blockchain all over again. I mean.
Yeah.
When we're all excited every time somebody says, "Oh, something about blockchain," they're buying all these stocks.
I found that list. TKAT was the big one, but then there were a few more. Oriental Culture, OCG, Ideonomics was being mentioned. Again, these are just stocks that are being mentioned as.
What's the symbol on that one?
IDEX.
IDEX.
Yeah, you've got GRNQ. Again, don't even know if
GRNQ is more of a crypto play.
What's the difference?
A big difference. Some of the crypto stocks, I think it's a big difference because some of the crypto stocks have all topped out. So where these new NFT stocks, obviously it's all related, but some of these crypto stocks that we were talking about a month ago all topped out.
Yeah, YVR was the big one the chat's mentioning. You had TAOP was mentioned, CNET was mentioned.
Yeah. Is Christie's still a stock?
Is what?
Christie's Southeast auction?
Yeah. I think.
No, I don't think
it went off the board, right?
I think it might be OGC. I'm not quite sure.
I think it went off the board.
Yeah, it's possible. It's possible. But yeah, I mean, every day now there's a new one.
Sino, SINO. They were saying a lot of these ripped. A lot of these ripped yesterday though, and sold off significantly too. I mean, this TKAT has just been insane. It was $2 a week ago and got up to over $40 yesterday. So this is what people want to talk about.
Yeah.
I mean, we know that they want to get rich fast. Nobody wants to get rich slow. They don't want to read the Kramer book, Get Rich Slowly. They want to read the book, Get Rich Fast. You're not going to learn on this show, I tell you, man. I'm not teaching people how to get rich fast.
You've got Elon Musk making fun of the NFT things. He tweeted about it last night.
Next thing you know, he'll buy some of these NFTs.
Yeah, probably.
Swade. He starts out making fun of them, and then he's like, "Oh yeah, I own Doggy Coin."
Yeah.
Just a circus show in his head sometimes. I'll tell you that much.
I do want to give thanks to GWS for pointing out. Chris Kachi actually called out ZKIN on SPAC Attack a couple weeks ago. Thanks for the reminder, GWS.
Oh, good stuff. That one's ripping this morning.
Props to Chris, but I mean, yeah, it's just silliness.
He also likes Funko. Chris likes Funko.
He does.
As a more this isn't a smaller play, but just he thinks this could be one of the bigger, like, not that's a big NFT play, but it's a real company.
Yeah.
So some of these, like, you don't even know what the hell these things do. If it's just headlines, they're not really doing much at all.
Sell them on the way up, buy them on the way down. Sell it when you don't want to sell it. You just do it. It's the only way, because when they turn, they turn.
Oh, they turn. You're right. You got to sell while the peanuts, the circus is in town, because if you don't usually get a second chance on this stuff. So they start doubling and tripling. I mean, if I was in one of these, I'd be out way too early. Me, like TKAT, I'd be like $2 to $6. Like, whoa, big money, no whammies. And boom, $40. Like I never get to participate in those because I scalp out too quickly. Diamond hands not here. But anyways, it's not for me. I mean, This is just speculative capital only. If you're taking all your money, you're dumping in an NFT play, you're asking to lose a lot of money. Yes, you're going to hear about everybody who made the money. You'll hear crickets from the people who lost. You won't hear anybody on Twitter that bought TKAT at $40. They won't say it. People can't talk about their losers. They're too embarrassed. I talk about my losers all the time. I mean, that's why we try to talk. This is real trading here. Like losers are part of the game. I probably lose on, I don't know, probably 30, 40%. I've never analyzed it, but I'm sure I lose on 30, 40% of my trades. I'm looking, I have lots of red and lots of green overnight here. It's just a matter of being, right more than you're wrong, or at least making more on your winners than you do on your losers. But people don't want to talk like that. They want to just, say, oh yeah, I made millions of dollars in TKAT, and you're all idiots for not buying it. That's what they talk about on Twitter. It's so
there's guys in the chat that are like that. I don't know if we got rid of them yet.
No, we didn't get rid of anyone.
People like you were saying, you can do this. I don't. The difference is I don't want to do this because one, this distracts me from my consistent trading in mega caps.
Yep.
If I'm looking at this stuff, I have an opportunity cost. There's an opportunity cost. If you're sitting there, you don't know what to do, and you're learning, and you want to play around with this stuff, go for it. But I as a trader, I'm trading hundreds of stocks. I can't be watching some stupid NFT thing going, bananas. That's babysitting. There's an opportunity cost there for me. And I think it's more luck than anything. I think you could go buy a whole bunch of these things and maybe get in it early. And, I have played these things before. And I don't say I don't play these things. But there is definitely an opportunity cost for a professional trader to be managing a portfolio of these NFT stocks moving around 50% a day. How do you manage that risk? It's really hard. So if you got in it, and the buzz was there, and you're doing the social arb thing, and you were looking, okay, everybody's talking about this one, it might get hot eventually, then that's a different story. But if you're coming in buying TKAT at $29 when it had a bar yesterday of 20 to 40, I mean, it's gambling at this point.
We mentioned this yesterday. Yeah.
Just gambling.
Yep. And we did when the show went out yesterday. I looked at this thing, and I said, "Oh, range 20 to 40." I go, I think 30 is going to be a big number. That's the close. So people that are like bought it 2 days and they're looking at that close and trading under it. I mean, it's going to be up and all around. Do I think we're going to see 40 today? No, probably won't even see that low of just under 20. But man, let's see, 30 almost in the middle. If you're long, you want to see this thing get over that close, stay over that close, go 30 and a half, 31, 32. Boom, keep on going. Another thing, then, I don't, like you, Dennis, I don't mess with these kind of stocks, but just to give an example from yesterday, when you don't know what to do in something, scale out. That's if you wanted to exit this. AOUT yesterday, outdoor brands. It didn't, when we talked about it, it didn't look like it was going to 30, right? I mean, now it's an all-time high. That actually did that on the second day of trading and collapsed. So what do? You look, let's say you're long 1,000 shares. Okay, you're not going to pick the top. Throw a couple out at 27. Hey, I got lifted at 27. Throw a little bit more size out, 27 and a half. Hey, what do you know? I got lifted at 27 and a half. Throw a little more size out there at 28. You get lifted at 28. Okay. You also would have got lifted at 28 and a half, and you would have been thinking, man, those sales weren't that good. Then it comes down and ends up closing on the low of the session. Mr. Market helping with that too. So if you are trading those things, it's, just use scales, be quick. I don't know if you have it on your platform. That's really the only way, because when they turn, and you just gotta, it's better to go into the momentum. But
you gotta sell your peanuts while the circus is in town on all these stocks. You get lucky enough to grab one of these things that goes up 100 or 200%. I ring the register. That's how I would do it. I like I said, I've tried to play some of this stuff on the side. Sometimes you win, sometimes you lose. I mean, you got to get out when the getting's good. I tried Kodak. I was trying this off of this. And that one obviously wasn't working out. I wasn't expecting that to go up, 200-300%. I just thought, there's people talking about it as a potential NFT play. It doesn't look like it is, or at least the earnings stalled that out. So I sold it. Take the small loss and get the hell out.
Please, or not please, quick advice, and then we'll do some earnings. I was talking to a buddy of mine on the phone, and a friend of his had a kid. I think he put like 10 grand into GameStop, right? 19-year-old kid.
Okay.
And at one point it was worth $250,000. And my buddy was just like, he was begging the
still
guy.
Worth a lot of money, because it never really come down that much. It went down, then went back up, unless he sold it.
Depends when he bought.
I'm not sure what he actually did with it and what the pricing was on it, but he was up like $250,000. And my buddy was like, you know what? He's 19 years old. That could change his life. And you should just make him. He's like, no, it's going to he thinks it's going to 1,000.
Could.
And
it could.
He ended up. It came back down. The kid still ended up getting 88 grand out of it. He ended up
sell it.
Good.
Yeah, so he ended up selling. But man, 19-year-old kid, you got $250,000 in your pocket. Whew. Man, you're not going to get too many opportunities.
You're not going to hear the story, though, about the other 10 19-year-old kids that came and bought it at $300 and are down money, or $400. You won't hear that story on Twitter. That's why I'm trying to, I'm not trying to say that, everybody sucks. What I'm trying to say is everybody gets this fear of missing out. This is a driver. This story is a driver for FOMO. It's a driver for FOMO. And everybody goes on Twitter to brag about themselves because they aren't confident enough in their own abilities. They have to brag to you so they feel better about their own lives. I don't need to brag to you. I feel just fine about my own life. I like complaining to you because I'm like the glass half empty guy. I've got half winners, half losers, and I'll focus on my losers and say, man, I suck. But I feel like it's kind of fun to make fun of yourself to a certain extent too. Why do I got to go on Twitter and brag? The odd time, we all do it. We all do it the odd time. But if you got to go, if you're following somebody that's just constantly bragging about how much money they're making, it's one, probably, maybe not as true as you think it is. Two, maybe it's true, but consider the market environment that we've been in as well. I mean, I go both ways. I trade market neutral. The market going up 300 or down 300 is, pretty much meaningless to me because I'm trading market neutral. I'm trying to trade strategies that make money in up markets and down markets, and you've got to adjust. And do I lean long in the bull market? Sure. Do I lean short in the bear market? Sure. But if you're just, going all in all the time, coming in, you're benefiting. If you're a long only trader, you've been benefiting from an up tape. Don't kid yourself. Don't kid yourself. So your trading abilities might not be as good when we get into a different environment. We don't know when that's going to happen, but there are periods of 5 to 7 years, 12 years, 68 to 80. You can go back from 2001 to 2009. You can go from 2000, the financial crisis, just wiping out money. There are periods where, the bears do make money. And you've got to be careful if you're not in all these high growth names, like I said, on margin, you don't want to get blown out during those periods. So you're a long-term investor, try to go with it. I've had investments for years as well. You try to go with it. If you're a trader, you got to be able to read the tape a little bit and obviously know when to lighten up. I feel like we're still in a lightening up environment here right now. I've been lightening up in my trading positions. The long-term stuff I try to hold on to.
Let's just do a couple earnings, and then we'll go to Marcus. Let's do FedEx first because that one is ripping this morning. They had earnings after the close last night. EPS beat, sales beat, guidance also beat. EPS guidance for the year. Good report.
I got a trade on, so I did just tell you I'm long FedEx, or I'm short FedEx, long UPS, and I did it 3-1. So and if you look this morning, look at these percentages, how this stuff works. 1.87% up FedEx and 5.5. It's almost perfectly on that. That's a quantitative approach to an earnings report that I know on a FedEx earnings, it'll move 2 to 3 to 1 on the UPS. So I'm paired off in it. So I'm short FedEx. So you say, oh, you're hammered on your FedEx short. No, because I went long UPS on the report. So FedEx popped $5, I was able to buy UPS flat. So you do it 3-to-1. And, that's, just a classic pairs trade. But some newer pairs trader might just do it 1-to-1. You can't on an earnings report. So you got to have the quantitative numbers behind you because the leader moves a lot more than the laggard. UPS FedEx is tough. It sometimes is it's somewhere in between 2 to 3-to-1. So, just from my own numbers. So I did 3-to-1. It's working out. It's right on the money. I'm down, on the one, I'm down FedEx 15 points. But, on the percentage basis, it's almost perfect. It's almost perfect at 3-to-1.
And you wait till the liquidity comes in at the open, right?
Or if I can flip out the other way, if it gets overdone. I wait till it gets overdone sometimes the other way. If it continued to blow out and it wasn't working out for whatever reason, I take losses on that kind of stuff too. Right now, it seems to be working. I already got out of half the position, and I'm just trying to work the other half. But, this is classic pairs trading, relationship-based stuff.
FedEx makes halfway back. It had a big tumble, found that major monthly support at 240, trying to get half of the move back, trading at the highs of the pre-market session. So we're pushing. So no reason to get bearish on it yet. What do you got here? You got a daily high. I try and hold out if you think the momentum's really going here. You got a high at 284.52. I mean, why not? That's $6 away. I think a lot of people after the big decline, you're this close to 280, they'll be like, oh man, if I could get out at 280, just a nice round number. There's also a gap to fill in here. I don't think we're going to get that into play today. Oh, that whole gap area, 84.52 to 86.22. Boy, to me, that would be a sweet area. The other thing, if you can't get it on strength, just keep an eye on that pre-market high. Boom. Let's say we keep going. We go up to 78.5, have a little sprint over 79, and then come back down through that open. Because you also have people that aren't long above here, but you have people that have been dipping their toe in the water. I know it's going to come back. I'm just playing into earnings. I don't care what happened after earnings. I'm selling the earnings pop. So I think, I see some two-way action. I have no idea where to buy this stock today. I can only talk to potential sellers.
All right. Let's bring on Marcus Heidkotter, founder of Rockwell Trading. Marcus, good morning, sir. Oh, no. Wait, he's on mute. Marcus, unmute your mic in StreamYard. Try that.
There we go.
There we go. Good morning.
Oh, rookie mistake, as if I'm here on the show for the first time. Good morning. Hey, you talked about it earlier. Everybody can brag about winning trades. It's all about also showing the losses. And
Marcus, we love you for that too, because Marcus will own it. I mean, you come on and you own your trades. We love you, Marcus.
And today
we love having losers on like ourselves. We love it.
I mean, you guys say, I have losers all the time.
Hey Lou, if you go to the old winning channel, this guy Lou's been complaining for a couple days. Go to the old winner channel.
We have losers here, but
AWC.
Marcus wins on a lot too. Let's go to Marcus. Let Marcus talk.
Sorry.
All right. Yeah, no worries. So, if I can share my screen here, Spencer, is that okay? And just very briefly, if you're watching me for the first time, just briefly want to explain what I like to trade. And this is the strategy called the wheel, has been around forever. And the idea here is basically to sell puts and collect premium. I just throw it on the screen here, which is great because let's just stay at step number one. And here I have DKS. It's a trade that I am actually exited yesterday. So here I'm selling the 66 put, and this means that if DKS stays above 66 until expiration, I'm okay and I can keep the premium. Now, here's the deal. This works great in a market that is going up. It works great in a market that is going down. It even works great if the stock is slightly going down. Triple D, you said it. You have strategies that are for a bull market, for a bear market. Well, this here is for a bull market, a sideways market, and not really a bear market. But if the market is slightly going down, I'm okay because as you can see here, I mean, DKS could go down, like 10%, and I would still collect premium. However, I don't mind owning the stock. So step number two is If this dips below 66, I get assigned. If so, I move on to step number 3, which I'll explain in a moment. If I'm not assigned, I go back to step number 1 and collect more premium. Now, if I am getting assigned a stock, I still call against the stock and collect more premium, right? Because now I'm expecting the stock to go up. And this works great. And I mean, until it doesn't. And today we're going to talk about until it doesn't, because these are the trades, as you said, that very few people talk about. And I just want to show you, trading is risky. There's risk involved when trading. If you don't like the risk, don't trade, right? And I feel, as you said, it's very dishonest if somebody says, oh yeah, you will win all the time, because losses are part of the business. So DKS this week was great. Expires today, strike of 66, no problem. Mara, you talked about the crypto stocks here, right? So Mara, I traded a put on a strike price at 20. It expires today. We will be just fine. A few other trades here. Lumber Liquidator, I entered into this one, strike price of 22. We'll see. This morning, Lumber Liquidator is up. I think that we have some solid support here at 22 if I'm looking at this. So it'll be okay. GDXJ, also a trade that is just fine here. But I want to talk about the trade that is in trouble. And we talked about it last week, because when I was here on the show, the news broke on Ride and actually the Hindenburg report. So the Hindenburg report a week ago, right here, let me mark this. This is where you see Ride was just getting smashed. And they reported earnings 2 days ago. And that didn't really help. And so during the earnings, it was like, yeah, well, our losses widened. And yeah, well, we actually don't really have orders because we don't have a product yet, obviously. So here I sold the strike price of 21.50, and I did this early in February. I did this on February 16th. At that point, the chart looked like this. And I thought, oh, yeah, that's a smart trade. Well, it wasn't, apparently, right? Didn't work out. So right now, I'm pretty much down big on Ride. Let me just reset my chart here really quick. So the question is, what do you do now? What do you do now when it is down that much? So here's what I did. Yesterday, I sold another put, a 13 strike price. And this helps me if I'm getting assigned today to lower my cost basis, because that's what I need to do at some point. I mean, this trade is in trouble. I need to fly a risk emission, because here's why. So this year thus far, we talked about making money, losing money. So I'm up $57,000. This is realized P&L. However, caveat, this one trade, Ride, is right now down $40,000. Now, this is unrealized P&L, and I keep saying it. Unrealized P&L has been invented by somebody who must hate traders and works for the pharmaceutical industry to sell anti-anxiety medicine or something like this, because it can give you a heart attack. But it's time to really fly a rescue mission and get out of this trade. And my plan is to get out of this trade with either a small loss or even with a profit. So the first thing that I did yesterday, as we are going down here, is I sold a 13 put. So here's what happens. And I didn't go in with a full position for a very simple reason. I want to save some money for a rescue mission. So actually what happened after I sold, so let's just say I sold a bunch of calls and puts and collected premium. Let me just move this out of the way so that we see this here. But at some point I was assigned, so I bought 4,700 shares at 21.50. So this is the challenge. Here's what I did yesterday. So yesterday I sold the 13 put, and here I sold actually half of my position size. So I sold 23 times the 13 put. If I'm getting assigned, this means that I have to buy another 2,300 shares, and I have to buy them now at $13. So this is why, if you now take the $4,700 times 21.50 plus, right? I mean, this is how you calculate your average price for the stock. It's whether you're scaling in a stock or whether you're buying the dip and buy some more when you like the stock. I mean, Kathy Woods does this all the time, right? I mean, she buys the dip. Seems to work out well for her. So anyhow, so the 2,300 times 13. So this means that my average break-even price would be 1870. Now, this is not good. It's still pretty low, but it's already getting better. So I need to have a chance that this stock makes a quick bounce. And I mean, if it doesn't, it will be bad. But I usually, even if you see it here, a stock never goes down in a straight line. It makes these quick bounces. So now it's a question, how far down can I bring down my cost basis? How much can I average it down so that a small bounce will help me? Now, here's the good news. This is just for the stocks. I did sell a bunch of premium here on Ride thus far. And as you can see here, thus far, $4,935 in premium. So I need to subtract this here as well. I'm taking the 4,935 that I already collected, divided by then I would have 7,000 shares. And I don't even know how much it is. I need a calculator. I'm not good at math. So that's good news. If you're not good at math, you don't have to be good at math. You need a calculator. Unfortunately, we have it. So 4,000 divided by 7,000. So that's another 70 cents approximately per share. So that is what I collected in premium. So it's 70 cents per share. So this means that currently my cost basis comes down to $18. Now, I'm not done with this trade just yet. And again, a cost basis of $18 is getting a little bit better. This is right here. But hey, it's better than $21.50, but I'm not out of the woods yet. But this is why I keep always some powder dry to be able to fly these kind of rescue missions. Sometimes you need them. Because if you look at this, I mean, yes, this is great. I could just tell you right now, oh my gosh, look at my account. I mean, all these trades and all of them, every single one has been a winning trade. Yeah, great. Let's talk about what? 53 winning trades. No, it's not that much. 23 winning trades or something like this. You got to also focus on the losing trade and own it and have a plan for this. And this, I think, the most important thing that I want to give the viewers here today. I mean, you gotta have a plan and follow a plan, right? I mean, whether you have a stop loss on a profit target, or as you said, you're scaling in, you're scaling out, whatever you need to do, gotta have a plan, right? And know what you're doing here. So anyhow.
I mean, that's the thing, is you've got the plan and you're looking to sell into strength. You get a little pop and you're looking to bounce out of this thing. So, I mean, this is, it's discipline. It's figuring it out. I mean, it's tough. And you outlined it perfectly. Writing puts works awesome in a bull market. It works awesome in a sideways market. It can work well in a little bit of down market. If you get a market crash, it sucks.
It sucks.
And you get a stock that goes straight down. It sucks. And, you got to figure out, how to, cut your losers as best you can, and you move on. But I mean, it's the market environment that we're in, where, obviously, we've been in a bull market here, and some of these strategies have worked really well, and they may continue to work well, but it's also market dependent too. So if you go and start getting into a market where it's not working as well, Marcus, how would you handle that? Do you just scale back the strategy a little bit? Let's just say
this is when I'm moving to another strategy.
Let's talk
about a second strategy that that I call the Power X strategy. It's based on 3 indicators. These are the indicators that you see down here. It's the RSI, MACD, and the stochastics. And this is where I would then short stocks and trade to the downside, or buy puts. So this is where I'm switching from an option seller to an option buyer, because then it makes sense. If the market has a strong direction, I mean, the challenge is, if you look at the markets right now, here's the NASDAQ, right? If you look at the NASDAQ, I mean, overall, it has a direction, and the overall direction is up, but it's not really a strong bull market. It's grinding higher. And right now, the NASDAQ, I mean, you said it earlier, the rotation is going on out of growth stocks into value stocks. So we have the Dow hitting 33,000, making new all-time highs, looking way different than the NASDAQ. And then you have the S&P 500 that is almost like the stepchild of these two, somewhere in between, trying to make it, but also more tech-heavy here with Apple and Tesla in it, definitely. So yeah, I mean, it really depends on the market condition. And you see, my kids, they're both sailors, and they always say, you can't change the wind, but you can adjust the sails. And I think that as traders, we can do this. We can't change the market, but what we can do is we can change the strategy that we are applying to market conditions.
Yes, 100%.
So philosophical.
I love Marcus. He just outlines it all. He's honest. He shows us his losers. You have so many people on Twitter, they'll either show you your 50 winners, but they won't show you the couple of losers there. They say, I win on 95% of my trades. I mean, Marcus is honest. He's showing us it all. So we really appreciate, and it's different strategies that work in different market environments. And I love that analogy about adjusting your sales, depending on the market conditions.
Yep.
Wait, I'm sorry if I missed it. Did we cover the Apple from last week?
You're still working on the Apple?
The Apple, yeah. And you see, this looked really, really good. So Apple was grinding higher. So I bought Apple at 133. So right now here on Apple, you see, that's not really bad. This is a $250,000 cash account. So it's $500,000 in margin buying power here. Actually, I have portfolio margin, but I don't trade the portfolio margin. I keep the portfolio margin for these rescue missions. So I'm treating this account like a $500,000 account, even though with all the buying power, it gives me like a million
Right.
0.2 account, something like this. So here, I'm down $9,000. That's not a big deal. Still have not been able to sell for Apple. Let's just go there.
I thought about you
because
on
I
those
don't want to.
Apple
When you're
ops.
following the strategy, you don't want to actually sell calls that are below the assigned strike price. And if you look at the next week's expiration, I only get 17 cents for the 133. And in order to make this worthwhile for me, I would like to get at least 50 cents here. So this I said it last week. It's the lazy boyfriend sitting on the couch, not making any money, right? Playing
These
Xbox
analogies are
instead of
awesome.
getting out and getting a job here. So this is the only one that right now is not making any money, and I'm okay. Ride actually was good because until earlier this week, I have actually, if you look at the, here we go. If you look at the activity for Ride, I've been able to sell a bunch of calls. As you can see here, I sold a 23 call, I sold a 2250 call until just a few days ago, right? There was enough premium in there. Now I just got to see if it has to pop a little bit to give me some
Are you
premium.
looking for a scratch on these? Or are you looking, I mean, because you take some heat. Are you looking like to scratch? Or you're looking to turn a profit on these things? I mean, how do you define with the amount of risk that you're taking what the reward you're going to take?
Yeah, you see, excellent question. Apple, for example, I'm not trying to get out of this as a scratch. I'm still bullish overall on Apple. And yes, they're taking some heat, but I think Apple, super solid company. I mean, it's in many people's portfolio for a reason. So here, Apple, I'll definitely get out of this one with the profit. I don't mind owning Apple right now. I think we will be fine. But again, that's my opinion. You might have a different opinion, which is okay. Right? I mean, this was... I don't want to say it was a bad trade. At the time, I'm standing behind my decision, but right now, this is a stock where I just want to get out at break even, or maybe even at a small loss, right? Because this puppy, I mean, with everything that is going on, this could be another Nikola, right? I mean, Nikola also has been targeted by Hindenburg. And as you can see, what happened to Nikola after being targeted by Hindenburg, it's just hovering around there. So, right, I want to get out of this one. If I have solid value stocks or solid growth stocks like Apple, I'm fine holding them for a longer period and getting out of with a profit here. So it really depends. Great question, but it really depends on the stock. And right, there's a get out of it.
It's taking you for a ride so far, right?
Hell yeah, jeez.
All right. Well, you're working your way out of it. I mean, we've talked individual stocks here, just, any individual market thoughts, quad witch, any tricks of the trade you've picked up over the, your years of trading, any do's or don'ts you want to share with us?
No, way many years ago when I was younger and day trading and I could take the heat of day trading, I loved the quadruple witching days because they were just super volatile, right? And this is where you have nice intraday trends. Because the last thing that you see usually on a quadruple witching day is a flat line that like you see on other days, like we had on Tuesday ahead of the Fed meeting, right? I mean, we just had a flat line in the market. But for day trading, great. Right now, for the strategies that I'm trading, it doesn't really affect me.
All right, Marcus Highcutter is the founder of Rockwell Trading. Trade what you see, not what you think. To learn more, go to rockwelltrading.com/Benzinga. The link is up on the screen. Marcus, always a pleasure, especially on a Friday to wrap up the week. Thanks a lot. We'll talk to you again next Friday.
Yeah, hey, Marcus, too, if you want to get rid of that lazy boyfriend on the couch, just put a lock on the refrigerator.
Joan knows all about that.
There we go.
Joan knows all about that.
Thanks, Marcus.
Marcus. All right. Jason Raznick is going to join us. He is like in the middle of getting his COVID vaccine, I think. So he'll join us.
Really?
Yeah.
And he already had
doesn't
it?
even need.
That's
He's already
what-
had COVID. He's taking. I need a vaccine. Said
That
he should
doesn't
give me
make
his
sense.
vaccine.
That's what I said, and he said that's what he said too. But apparently it doesn't.
It doesn't work that way.
Dennis, what are you seeing in imbalances out there?
They flipped. So we had them all buy again, imbalances on a quadruple witch will just keep bouncing around. They'll be all sells, all buys, all sells. You can't put a lot of weight into the early morning imbalances. Even in at 9:29, you're looking, and then they flip the last second because there's some institution sitting back just waiting until the last second to come in. Okay, buy them all. So there's just so much institutional action that comes in balancing against open option positions on this day at the open and the close that it's very hard to give weight to it. But right now we have a lot of sell imbalances. That can change on a dime. There's some buys too, but if I just want to cherry pick a few for you, again, you can't give these any weight on this day. Normally you can, any other day, not on an option expiration Friday.
Mm-hmm.
So Chevron 300,000 to sell, ExxonMobil 500,000 to sell, Macy's 450,000 to sell, General Electric 320,000 to sell. Going the other way, General Motors 300,000 to buy, Ford 1.3 million to buy. Stocks even like Southern SO, which isn't traded. I trade it all the time, but not one because people are bored with utility stocks. But I pair trade these things all the time. 185,000 sell. If Southern was to open way down, the way I play this. So you want to talk about how I play it? I basically say, just if it opens way down, I'm willing to buy it. If it opens way up, I'm willing to short it. So I'm not coming in here saying, oh yeah, there's a Southern sell and bounce, so I'm going to go sell it here pre-market and try to buy it on the open, because what if it flips? So I'm doing the fade trade where I'll surround all these stocks, OPG style, opening only order, where stocks trading XYZ at 50. Maybe I'm willing to short at 50 and a half, willing to buy 49 and a half. It opens at 51, I'm going to be short. Opens at 49, I'm going to be long.
And the farther it opens from the fair value, the more shares you're going to get, right?
If I was to put multiple levels out there, I don't always do that too. Like because what if I miss a piece of news? I don't like to get like, boom, I have so much money in one stock. So there's a lot going on, and I do use algorithmic trading for this. So I don't like to get heavy unless I really feel like I got a big edge. If I was seeing S&Ps trading flat and everything's going to open up 1%, I'll load up that trade. I mean, that's a huge edge. Like I said, I'll enter a trade for a 0.1% edge. If I'm getting a 0.5% edge or a 1% edge, that's huge. So
real quick,
on these type of days, it can happen.
What's the most orders you've ever had filled like on a day like this?
Oh, I don't know. It ranges. It's typically like lately it's been like crickets. You think you're going to get a lot of stuff, and you're like right there, 30 seconds before the open, you're going to get a lot of stuff, and then it all flips. So sometimes it's 3, 4, or 5 positions. Sometimes it's 50. Yeah. I've been filled on 200 before. So you get 200 stocks on the open, and you're like, okay, now you got some work to do. And when I get filled on that many, if it was all one-sided, I would hedge immediately. So when you get filled on anything more than 25 or 30 stocks, and they're mostly S&P components, the one thing you just have to look at is your net dollar exposure at that point in time. I'm not looking at any individual position. The first thing I'm going to do is say, how much am I long overall, or how much am I short overall? I'm going to hedge it with SPY or hedge it with Qs if it's all tech, or if it's all banks, maybe I'm using another vehicle there. But if you're getting 30, 40, 50 stocks filled on the open, I'm looking at my net dollar exposure. I got to get back to market neutral, because boom, I just got short of these stocks. Okay, well, I don't want the market. The market's going to try to correct. There's two factors happening. Like if the market's here, stocks open here, it's got to come in. So you want to get your hedge on as quickly as you can. Sometimes I'll even anticipate, I'm going to get filled on it and pre-hedge. But then you get filled and you try to get as quickly as you can, hoping that it comes back in the line. I mean, the 500 stocks have to add up to the SPY.
To your value, right.
Yeah, so, if you've got them all opening here, and this rarely happens, but it can happen on some option expirations, I'm trying to make that gap. I'm not trying to necessarily, and I can make that gap in a number of ways. If I get filled on a whole bunch of shorts and I don't hedge and the market goes up, this can go up too, and then you would lose. So I'm trying to make the gap. So as soon as I'm getting filled on so much net exposure, I'm going to hedge myself out. I'm trying to make that difference, to bring it back in. That's basically.
You want to know what your call of the week was?
ETF arbitrage.
You want to know what your call of the week was?
What was it?
What? Yeah.
10.
What?
Penn Gaming.
I don't even remember what I said. Oh, for the S&P ad.
Y-
Yeah.
Yep.
You said,
Yeah.
did you see what that did?
I just said that just because a stock gets added to the S&P doesn't necessarily mean that it goes higher. And you could tell on the initial reaction that it did not want to go higher because, again, Tesla was a special animal. It was such a big component of the S&P. But if you're coming out of an index that you're a big component, you're going to become a little component. There can be a net selling effect to it.
Yep.
So, and that's what we saw with Penn. You know, Penn's come off with the market too, but I mean, Penn is down significantly from the S&P ad. So you can't just blindly buy stocks saying, "Oh yeah, it's getting added to the S&P. It's going to rip up 50%." Tesla was a special animal. That's not the case with Penn. So if you look Penn, straight down from the S&P ad. GNRC, basically straight down since the S&P ad. So you would think this just doesn't make any sense. It does make sense though, because they're coming from a bigger component and they're going to a little component. There's probably a net selling effect there. I don't have those numbers in front of me, but I'm just guesstimating it that there probably is. If you're still going to be a big component, it can be a different, NXPI might be a different story, but because it kept holding up. And then what was the other one? Penn. Oh, Caesars. CBR straight down since the S&P ad. So 3 out of the 4 S&P ads from 4 nights ago, straight down. You've got to understand those arbitrage effects. It's not necessarily a buying
people that aren't indexers, right? And they have Penn, they have a boatload of Penn, and they're like, "Oh man, I got a target at 130 here. I never thought I'd 135, 140." They don't care. They're getting their price. So you have those participants in the market that are, I mean, it's had a hell of a run, but that are, hey, wow, they're not indexing, they're not tied to doing anything. I want out of 135. I'm out of 135. So a couple different factors going into that. S&P's just hanging out, kind of quiet here. 39.15 and a quarter. You mentioned Tesla, and I know I was going to wait. Is Raz coming on?
I don't know, but there's also a headline this morning on Tesla.
What's the headline?
I guess the Chinese military is concerned about all the cameras and sensors and stuff, so they've banned Teslas on any military base, installation, complex, etc.
How many are there on their military base?
That's another question that I don't have the answer to.
Dennis, look at this Tesla chart here. I mean, is this thing looking tired at 700? I mean,
it failed right where you think it should fail.
Yep.
This was textbook trading. I mean, you could do the 50%, go 900 down to ballpark at a 540. So what is that? 360. So it's takeaway. So 360, 180. Add on 180 to that, you get right to that whole 720. So it failed right around the 50% retracement. Textbook fail. Whole number psychological fail. It makes you think that there's still a lot of pain ahead for Tesla longs. But again, you've got one smaller thing going for it, is the little double bottom from the last 2 days. So 651 and 652. This is just textbook technical trading. 651, 652. That's a little double bottom 2 days in a row there. That's a huge level. If it takes that out, I say no such thing as a triple bottom. It's a slippery slope down to 600. So if it holds 652, you still got a chance here. But that's where, right now, this was a textbook selling opportunity at 700.
Yeah, it gave you a couple different shots at it too. The 50% actually comes in. It's my lines aren't perfect, but right is 7.25. But good eye there on the double bottom there too as well. So just wanted to point out Tesla, and that's it. We got the S&Ps just hanging out, trying what to do with the imbalances. I talked about the support, the overnight low coincided with that low from yesterday, and there was also a low going back earlier in March at that level too. On March 13th.
We just puked. What just happened?
I don't know.
Now I'm pulling at Joel because we dropped 5 points.
I was going to say
6 points.
I don't really
6 points about 6 seconds. Oh,
something happened. Let's go. Capital relief
Spencer.
For
banks.
All right, yeah.
Something happened.
There is Leisman's breaking something right now on CNBC.
Something big.
It's time to cancel all orders.
Fed will not renew capital relief for banks. Okay, that's just breaking from CNBC.
All right, Tossie, I'm on it.
Yeah. All right.
You caught me, Dennis.
I gotta go trade. Good luck trading. Remember option expiration.
Let's pull up those bank charts now. Holy moly! Let's go look at all of them.
All right, let me go to shorter term chart here. Let's see here. 1 minute. Oh, now, wow. Just as we were talking about yesterday, man, this totally messed up my scenario for the open. I wanted a higher open and a rally. What could still happen? Just spiked down to 96.50, back above yesterday's low. Right now, we're going to be looking at the close. There we are. We just ticked green, 06 even. Let's see what happens now. Where's mid-range on the session? I'll have to flip to my other chart here for 1 second. See where we got mid-range. That's going to be your bogey now. But good eye on that. We will catch the bank stocks. I mean, why do the banks need money? I mean, they just got rich on these overnight, the big moves that they had. Maybe they don't need any money anymore. But where did we go to here? Let me get the mid range for you. So we're not going. Raz is not going to come on today, or what's the deal?
I'm trying to get this headline because I'm trying to listen to you and also.
Okay, 39.10, folks. That's what we're looking back on the upside. Right, so I just got that for you. We got to get back above 39.10.
The relief from the supplementary leverage ratio expires at the end of the quarter, and I don't think they're going to renew that. What else am I seeing here? God damn. Yeah, it will not extend the emergency that emergency program that made it cheaper for banks to hold cash and bonds. So okay.
Interesting move here on a cloud witch, but hey, buy the dip right there. We're back up. We're back green on the session. That's interesting news. Come out right at 9 o'clock. Mid range on the session, 39.10. Getting back, so we still got a chance for that early morning rally. Look at they hit JP Morgan yesterday. That was weak on the close. We'll be keeping an eye on the pre-market low. What did they do to Bank America? Bank America spiked down under 38.20. We got to 38.13. Didn't even get to yesterday's low, I bet. Let me see. We did get through yesterday's low. So keep an eye on that, folks. You did take out yesterday's low. The next daily low, and I don't know where Bank America is going today, but man, 3 lows flanking the 37 area. 3 lows between 697 and 722. But right now, pre-market low still, or yesterday's low still coming into play. XLF, they might have been a little slower to hit that. Let's take a look. That has spiked down. So right now, just another buy the dip so far. They didn't like being under 3,900 in the SPOOs. Right back here at mid-range now.
All right. Thank you to the Benzinga Pro Newsdesk for getting this page up. This is from the Fed. This is a PR this is what was out. This is what they were talking about CNBC. This is what was out at 9 o'clock just now. I'll read to you if I can for just the Federal Reserve Board on Friday announced the temporary change to its supplementary leverage ratio, or SLR, for bank holding companies will expire as scheduled on March 31st. That's what I said a few moments ago. The board will shortly see comment on measures to adjust, yada, yada, yada. Okay, so they're letting this program expire. That's basically all the press release says. 3 paragraphs, but the first sentence is the important part. So back to the charts. That SPY, those algos are fast, man. Those machines are real fast.
Yeah, and they sold it off and they bought it up, and now the battleground at the close, 39.06 mid-range. I mentioned mid-range right there was at 39.10, and I think that last bump got us there. Just let me take a look. So looks like we got some extra fireworks heading into the quad witch expiration, and let me see.
Between the quad witch and the S&P rebalance is as if we needed more fireworks, but
yeah, 12.25 you got to. So almost back. We were right when Dennis caught it. We were at like around 39.15. So digesting the information. I guess we're no Raz today. So
I don't know. This is what he told me. He told me he was gonna call in soon. This is at 8:42. Oh, there he is. Jason, you made it through the vaccine. I was worried about you. Oh, Raz. Okay.
What?
Can you hear me?
Can you hear me?
Yeah.
Yeah. Hello?
Yeah, we got you.
Can you guys hear me or no?
Yes.
Right, cool. So I made it through, Spencer, but guess what happened?
What happened? I don't know what
I
happened.
forgot to call in.
I
I'm
know.
on-
You told
I'm
me
on
you were going to call in. You forgot. It's okay.
I forgot. I was on the phone. You guys want to hear something pretty funny?
Yeah.
Is Joel here?
Yeah.
Yeah. Hey, what's up?
Hey, Joel. So my parents are in Florida, okay? All right. And I have a friend. You guys may know who he is. His name is Howard Lindzon.
Yep.
He he has a SPAC that's live in the market, StockTwits, bunch of other eToro, a bunch of other stuff. I set my parents up and him to go to dinner tonight at 6:15 in Florida. They don't know each other at all. How funny is that?
They're gonna have a blast. He's got a ton of personality.
Oh yeah, Brian. I don't think my parents have a clue what they're in for. My mom is gonna be like, I don't know what is going on, and my dad's gonna be like, what is Twitter? What's Twitter? What's
Joel, Jason, I want to know how the vaccine process went.
I'll get to 1 second. So, Joel, I started to get a little nervous about this dinner. So I'm like, should I just drive to the airport right now and fly to Florida so I could be there? So I could make. And then I'm like, that's pretty dumb to do for an hour, dinner. So I'm not going. Vaccine process was good. I mean, the vaccine process was good. No issues. You go in. They have Pfizer. They have Moderna, and you walk to the room that you're supposed to be in, and then I went to Pfizer. And then
Wait. I have a question. Was it like a menu? Can you like order? Like, can I get the Pfizer? Can I get the Johnson & Johnson? Can I get the Moderna? Was it like that? Oh, damn. I think I lost him. Damn it. I shouldn't have interrupted him.
Hello?
Yeah, I'm here. Okay.
You didn't lose me.
Where did you go to get that?
You lost me? All
No,
right,
Jason, we have you.
I went. Okay, I went to a facility. Okay.
Okay.
Can you hear me?
Yes.
Hold on. Are you guys there? All right,
Yeah, we're here,
give you some
guys.
more information.
Okay,
So,
we're ready.
When you get your Pfizer shots, when you get your Pfizer shot, they ask you if you've been exposed, have you this, any of that stuff. And I said to the lady, we got to make this more efficient. You should just have a recording, so you can just press the button and the recording plays. You know what I mean? And she's like, I would love that. I have to say the same thing over and over 600 times a day. That's my idea for them.
Okay.
All right, this interview.
Okay,
is
so
great.
you
You guys not hear me?
No, we hear you. You're a little quiet, but I've turned you up.
Hello. Is this better? No camera.
Yeah, it's a little better actually.
Is it better? Okay. So hey, are we up or down on the NASDAQ today?
Well, it's funny you ask.
Why?
It was a rather uneventful morning until a few moments ago. We are down. Oh, actually, no. In the NASDAQ, we're up. I stand corrected. In the NASDAQ, we're up. The futures are up.
All right. Because all I know is I interviewed Kevin O'Leary yesterday, and the market was up, and then it goes down in craziness, and I was up so much money during the afternoon, and I go to my account, at the end of the day, and I lost more money than I make in a year. I don't know what happened.
Oh, I'm sorry, man.
Did you follow your plan in Tesla?
What?
Did you follow your plan in Tesla?
Yes. So I still have puts. I've less calls, and I sold a little more at 700 recently.
Good.
705. So I'm down to it used to be 48% of my portfolio, or 51%. It's now down, Joel, to 28%.
Then I'm going to sleep better at night.
Yeah, well, Joel's still high. The reason I was down so much yesterday was because that Tesla and my travel stocks are going down. I need my travel stocks up. I mean, I have some stocks, Joel, that I love. STKS. I love it, Joel. You know why? It's a steakhouse called STK. And when things are fun, that place is the best. So I just keep buying it. I don't know.
SP? What?
It's ST like steak, like STKS.
STKS.
Jason's all in. Raz is all in on the restaurant plays, right?
Who do they own? I've never heard of it.
Yeah. I'm. Oh my God, Joel! If you want to have fun with me one night, we go to STK, and you'll think I'm the greatest guy ever created.
Jeez.
Where is there one around here?
No, Joel. Either to Vegas to Toronto.
Vegas.
Maybe, yeah, there's one in Chicago, but I like the Vegas one. So, I mean, bless.
What's it called in
my,
Vegas?
My cousin David Rosen, 10 years ago. STK. Can I just tell the story?
Sure, go tell the story.
Here, I'll turn the camera off. Okay,
All right.
so STK. Let me turn the camera off so it'll save the.
Yeah, we're good.
Turn it off now. What the heck? Anyways,
No.
If I go out, Spencer, just hang up on me, okay?
All right.
So STK, my cousin David, he was 54 years old. He passed what? Okay, he passed away of cancer, and he knew he was going to die, and so we went on a cousin trip to Vegas. We went to STK for dinner, and guess who I meet there? The Dallas Cowboys cheerleading team. I got the cheerleading team to come join our table for dinner for David. It was amazing. And so, I'm like, my cousin's here, this, and it's that STK, the Dallas Cowboy cheerleading team joined us. And here's the best part, Joel. They invited us to go to there's a club next to STK. I forget, it's the hottest club in Vegas. They invited us. They said we have the whole top thing. You guys will just be our, the 10 people with us, whatever. My cousin David didn't want to do that. He just wanted to go play blackjack. So we went and played blackjack. We didn't go with the Dallas Cowboy to the club. How about that?
That's a good story. Very good story.
It's a good story, but it's awesome to go into the club. It's also, but also, Joel, also going into the club with the Dallas Cowboy cheerleaders could have been pretty fun.
That might have been interesting.
All right, Rez, we'll let you go because it looks like you're almost at the office. So,
how do you know he's almost in the office?
Just saying.
I can tell by the background.
David, I love cousin David. Cousin David, I love you, but we could have gone into the place with Dallas Cowboys. All right, Zinger Nation, Benzinga pre-market prep. Let's party it up. Let's have a good time. Let's make some money this week. We finish it off strong. Thank you. Sorry for being in the car, but I had to get that vaccine because Joel was worried about me.
All right, see you, Rez. All right, that was an interesting interview.
All right. We're going to wrap things up here on this Freaky Friday.
Yeah, Joel, we'll let you go. Everyone smash the like for Joel, for Dennis, for Jason, for Marcus. Joel, I'll talk to you again at 3:30. How about that?
All right, have a good one.
All right, see you, Joel. Hopefully it's a quiet day, but who can say on a quad witch and S&P rebalance Friday. All right, guys, pre-market prep is always available as a podcast. You can listen to it on Spotify, iTunes, SoundCloud, Stitcher, etc., etc., etc. Please remember, all the information and content from this show is meant to be used as informational purposes, not for investing or trading advice. Final thing of housekeeping before we get technical. Today is Friday. It is the last day of the St. Patrick's Day Benzinga Pro sale. Oh, I messed up my link. Hold on. I want to copy the link and put it in chat. Get 35% off a Benzinga Pro Essential Annual Plan. I'm posting the link in chat right now. That link is fucked. God damn it. I gave you guys the wrong link. Hold on. I'm going to delete that comment and get you a new link because that link is messed up. I apologize. 35% off a Benzinga Pro Essential Annual Plan. Neil, I'm failing at this link thing. I don't know why. Maybe you can help me out because my linking abilities for some reason. Oh, here we go. Is this it? This is it. There we go. Okay. There's the right link. I apologize, everyone. Oh my God. Why is the link being so... I can't find the right link for you guys. It's not copying and pasting the way I want it to. Very, very weird. 1 second. I'm not going to leave until I can get you this link. Okay? I'm not leaving until I can copy this link directly into chat for you guys. I don't care if it takes me all day. Oh my goodness. All right, let's see if this works. No. Oh my goodness. Neil, help me with my link, man. I am YouTube is being super wonky.
I mean,
not letting me copy and paste the way I wanted to. I just want the damn promo code link.
look, if there's two things I know how to do, it's copy and paste.
Yeah, I really don't know why it won't let me copy and paste the way it's giving me like this link with all these crazy extra characters. I don't want that. I just want
where's the link, my friend?
Where can I
Already
find it?
done, man. Already done. Come on.
All right.
Come on.
Look at it. It's in the description of the video. It's in the description. Okay.
Come on, Spencer.
God damn, that was
Spencer.
way too hard. All right. Neil, thank you for coming on and saving me from a moment of awkwardness.
I don't know if I saved you, bud.
No, you didn't save me. Get Technical is live now. Guys, we've got a great slate of programming today. Get Technical with Neil. We've got SPAC Attack with another exclusive executive interview at 11:15. We got the Power Hour from noon to 2. We've got Options Explained at 2 o'clock. I'll do my ETF show. We've got At the Close, Zinger Stock Trivia, Cannabis Insider, a great day of programming here on Benzinga. And with that, I will sign off and transition this stream over to the Get Technical show with one Neil Hamilton.
3, 2, 1.
Here we go.
Welcome into the open where we get technical. You should have investments in long-term growth.
What's up, guys? I'm Neil Hamilton here for another episode of Get Technical. How are we doing today?
You killed my intro. I was so amped up to do an intro. Hey guys, that was Hot Stocks, Luke McCoby. What's going on, brother?
Just saying hi. I don't know. I'm excited. Power hour today, baby. I got a new trade. Noon Eastern.
All right, I removed Luke because he's promoting his own show. Yeah, what's up, YouTube? Ugh. My name's Neil. This is Get Technical. Crazy morning. Crazy, freaky Friday. But hey, this is a day where there's that one quote that one guy said that one time said. He said something like, there are days to trade, or there are days to go long, there are days to go short, and there are days to go fishing. I think that's the quote. At any rate, I'm looking for a good spot to fish in the Detroit area. So if anyone's been to Detroit lately, and they know maybe the Detroit River, a little bit hesitant. But how's everyone doing on this Friday? How is everybody doing? Really crazy. I want to share my chart really quick. I honestly, I see Luke in the backstage right now, and it's a fucking liability because I know that I'm going to get into the groove, and this motherfucker is going to. I'm self-censoring right now because our editors won't cut out my swears. I know he's going to come in and mess me up. So I'm going to get this on screen right now. NMM, you guys know it. You guys have basically been really immature. Like saying that I have a crush on NMM and you're going to tell her. And it's like, it's super high school and I'm over it. Yeah, daily data, no swears here. No swears. I know that you guys all have gentle baby ears, or at least your bosses do at work if you're playing on a speaker. But NMM, man, we were looking so good yesterday. I called my grandma. I let her know how rich I was going to be. I said, at this rate, I'll be a millionaire by Christmas. I can't wait. But boy, did we get shut down yesterday. And today's not looking any better. All right. I see you, Steven. You want the mood to be set. That's fine. All right. So anyways, not looking any better. So what's the first thing that I do? I find my support. I reach out and I find support. I play some chill jams, some lo-fi beats. I find this previous resistance before we got down and became an official rat snack with NMM. I drew my support here during this period of consolidation, although this was, just in general, regardless of what was going on in the market, NMM was getting into oversold or overbought territory. Yeah, thanks for reminding me to put on music, guys. So let's do a little consolidation, guys. I'm willing to hang out with NMM for the long haul. So at any rate, that's just an update on that for anyone that is curious. Just so you know, today is Friday Fun Day. So many of you might be going fishing today. We don't know what's going on. We had that weird like bank news. I don't totally understand it because I'm not the smart kid in class. But it seems to be affecting the market the past yesterday, today, this past couple weeks. It's been tough. It's been tough to find layups. Not saying it's not possible. There is the quadruple witching day, which I believe is some sort of ritual. There's a giant owl, and you get like the Fed and like former presidents together, and they all get together and take the shirts off, and they do like a weird thing. I'm not really sure how it works. But I understand that happens a couple times a year. Really hoping to get a press pass through Benzinga. But at any rate, taking pics from chat today. I don't got a really great one for you. Taking pics from chat. So feel free to drop your tickers for a little technical analysis pre-market. We're about 8 minutes away from the open. Feel free to drop your tickers with your time frames that you want to look at, because you know it's kind of like technical analysis can be a little bit like you're at a museum. You know, you're like you look at the paintings going by, and you kind of think you get it. You know, you don't get it when you see a painting or like a sculpture or something like that. So it's nice. It's nice to have like a friend there that's like, this is kind of what I think. What do you think? This is how we do charts. Day chart TKAT coming up. Also, guys, remember, today is the day that we sort out the man buns from the warrior tails. What do I mean by that? Today is the Get Technical Ponytail Showdown. So we figure out who has the best mother ponytail in the stock market. But there aren't that many. I thought there were way more, so I had to pull in some people that are not necessarily in the market. Maybe they trade. I don't know. But we'll be doing that around 10 a.m. with a very special guest for a commentary. Ponytail Showdown, guys.
Hey, Neil, I have a couple tickers that I feel bad we didn't get to during the last show. If you want to cover them, that'd be like nice.
You know who runs this show? Chat runs this show.
All right, I'm sorry.
Chat's the producer today. Friday Fun Day. Only on Get Technical. Okay, so I want to get TCAT and then I'll get Mara. Or Mara, however you kids are saying it these days. But Spencer, I feel bad for rejecting you like that. We can get to him because it sounds like there were some folks that are probably watching in the live stream that still want to see him. Nice looking stock. What's TCAT do?
Dude.
Technology services?
Dude, this is like NFT stuff.
Oh. Okay. Spencer felt the need to intervene. All right, guys, quick take. NFTs, I love the concept that it's built upon. In fact, I love much of the art. I am a follower of a few artists that have been using NFT technology to release their art and maintain or whatever you like pass. What do you call it? Provenance is an NFT term for a while before I really even understood how it worked. The next thing you know, it's the soup du jour. It is the Beanie Baby of 2021. I am very skeptical of any stocks that are based on flashy new stuff. All right. I don't know. Did Beanie Babies, was that publicly traded, TY? I don't know. My technical analysis on the day chart is that this thing is probably going to sell off because it's extremely oversold or overbought. I mix them up. I'm only a man. I'm one man. So if you look at the RSI down here, this thing is super overbought. So I would say coming back down to support, in my humble opinion. What was the other one? Someone said, oh, it's Mara. On the day. Oh, this is Such a good looking stock. Why you guys come up with such good tickers? I must have looked at it in the past, but I should have added this to my watch list. I'm getting better about stealing your guys' ideas, but I feel like I'm not quite there yet. So number one is we just resolved this big old hunk of junk right here beautifully. Right. Big rounding bottom. Got rejected a little bit at this level, which is where the meat of this action was. And here we are, having reversed our downward trend and turned it around into a beautiful upward trend. God, what kind of company is this? If you say NFTs.
This is crypto.
Okay. I should know this stuff, but meh. I just look at the charts. I don't know. All right. So sometimes that question is rhetorical, Spencer. Here's the channel that we're in. Looking nice. I'm going to throw a Bollinger Band on this, or a Bollinger Band really quick. Okay. So what I see here is a potential volatility squeeze. What is a volatility squeeze? I watched a YouTube video that taught me kind of recently. When you have big swings in price, i.e. volatility, when you have your Bollinger Band open, you can see that it creates big expansive blobs around your ticker. And then when you have periods that are not volatile, it tightens up. And the way that a lot of people think about markets in general is that they're cyclical. Price action is cyclical. So what we have is a cycle between periods of tightened volatility, or what's the term I'm looking for? The dampened, tightened volatility, I suppose is a good way to put it, and then expansive volatility. And what I see here is somewhat of a tightening as we enter this sideways phase. Question is, do we maintain sideways phase? Because right now the trend is sideways. Boop, like that. Do we maintain that, or do we break out above this resistance level? In order to stay in trend, you like to see higher highs, right? And the market's beating this one up a little bit. So what you really would have hoped for is something more like that. So let's zoom in on the action and see what we got on a much shorter time frame and see if we're going to return to trend or establish a new one. Delete that. No more Bollinger Band. All right, this is Mara. Over a short time frame. Preceding this was a long, really lovely, not long, but a nice upward trend. And then now we've gotten a nice little dip. Question in chat. Bollinger. All right. Yeah, I know. Keltner Channer with the Bollinger Band is a good way to, yeah. So guys, what do you see? What do we see? Do we see a double bottom? Perhaps a cup with a handle? What is the best wallet for staking ADA? Google it. John Bollinger. All right, so this is Mara. We'll get to the analysis now. So number one, we got a pivot point right here. So we're going to use our arc tool, our arc drawing tool. Pivot, pivot, low. Descending channel. Approaching resistance. Actually kind of broke out. Got a cup and handle forming up here. Solar up, sorry, I don't know. I don't actually have a crypto wallet and I should. Is the music too loud? Yeah, it's kind of loud. There you go. Oh, shit. Do the opening bell video, team. I can't find it.
3, 2, 1, 0.
All right, the market is open. It is the moment of truth. We see colors changing here on the watch list. So just finishing up Mara. I would say this is a cup and handle continuation pattern. You just want to see a break above this level. And then to measure the magnitude of the breakout, you'll add the depth of your cup up to this level to the breakout point. I'm on the logarithmic y-axis, so I've changed that. Whoops. The price target of 70. So just got this little period of downward consolidation on our little cup here. We want to break out of 49 and then see this trend continue up to 70 before the next period of consolidation happens. So that looks like, I think, impulse and then some form of correction before the next impulse. All right, so let's take a look at what the market's doing really quick. Tech ETF. Meh. What this means is that it's really just holding support, which is nice. This XLK tech. It's not letting me add a tool or a line the way I want to. So we're holding support. This is actually, that's nice to see. Let's look at home builders. This is one I'm interested in right now because it's been really performant. Let's look at home builders this whole time. We've got the big COVID drop, and then just this channel has just been kicking. So look at stocks that are in XHB. I think I forgot the company, but they just had really good earnings, and they stock spiked. XHB Holdings. Okay, yeah, Williams Sonoma just had really good earnings. We get a 1 in chat if you were in Williams Sonoma. How long to reach the targets in NMM? So Galapudi, or Glapity, I'm not sure how you say it. With Mara, it's as dumb as you would expect, where you're projecting how long it might take. It's usually just about how long it took for the previous thing to happen. Right? So we had, oops, and what do I mean by that? You have your impulse up, and then your corrective phase, impulse up, corrective phase, which looks like every single time here you get a cup and a handle before. And I mean, you've only had a few times, but this is kind of cuppy. Impulse up, corrective phase. It could happen quickly. It could take a long time. I was going to say the way that you tell is if you look at a stock like XHB, which is an ETF actually, you just compare it to previous corrective phases, and you can reasonably project that it would be near that in terms of how long it takes to resolve. But with Mara, it hasn't been in an upward trend for that long. It just had some really fast price growth. And you can see that the magnitude of each impulse has gotten bigger each time. And so has the magnitude of each correction or corrective phase. So yeah, it might take, just judging on this behavior, it might take longer than this did. That's my best guess. That's not based on any science whatsoever. Facebook up, tech down. Let's do Facebook versus QQQ. Yeah. This is showing relative strength of Facebook against tech. And we see that it's breaking out of a double bottom. Very nicely. Good call out. So this is not... I'm not looking at a chart for a tradable asset. I'm looking at a chart that compares the strength of Facebook against QQQ. The way I did that was just by entering Facebook FB divided by or slash QQQ. The numerator or the top number on your little division equation there is going to be the stock that is really being demonstrated. It's its relative strength. So it is outpacing, it would seem, many of the other things that are in QQQ very well. Look at this. We're strong. We don't even have an upper wick yet. It's volatile. So let's just look at Facebook. Sideways. Oh, Lord. Yeah, I don't really know. You got some levels to break out of, but I think if our friend JC Peretz from All Star Charts were here, he would categorize this price action as a hot mess. That's not like a joke or anything I'm making up. It's just like, well, what do you've got uptrends, you've got sideways, and you've got down, and then sometimes you just get a hot mess. This one I would say is a hot mess. Is it difficult to see? Wonder if I here, let me do this. Should help a little bit now. Yeah, scalp. This is like if you're scalping, sure. I mean, if you're scalping, you're looking at much shorter time frames and you're using different indicators. This is Trading View, Mark. All right. Wow, it's only 9:36. We're making incredible time. Any other stocks you want to look at? I'm sure you got them. While you're coming up with that, while you're catching up with the delay on this video, give me your stickers with your time frames. But I want to keep checking on our sector ETFs, see how our sectors are doing. Consumer discretionary is one that I'm sort of banking on and expecting to do really well. This is buying cool stuff for the hell of it, your Amazons and stuff like that. Not looking hot today. Not today. Ticker with time frame, come on. USAT daily. I just want to see what sector it is. Electronics technology. Okay, so it's a physical thing. It's not software. Look at the price it's at is exactly support. So I'm just going to go ahead and just use that. The work is already being done for me. Exactly support. And then that's also previous resistance. So it looks like back in, let me move my tool. Was this like September of 2018? We gapped down. We lost a lot of value on the stock. That's not the right term, but the price went down a lot. And then it spiked back up and it hit this resistance. You can also see this was relevant for a period of consolidation here before that gap up. And going back in history, it was also resistance in this rounding bottom that we formed that got totally faked out. So let's this is interesting. So I think we want to fill this gap. This is looking pretty strong over the past. This is the day chart over the past 1, 2, 3, 4, 5 trading days. We've got green candles. We got good closes. This one might have what it takes to break out. This is. Where is it? No. It took longer than I wanted, but I had to get it. This one's looking good. This is USAT with a rounding bottom. A very long one. USAT, get on that watch list. Let's do the work. Let's do this labor of love. At that resistance level, I'm drawing the left side of my rounding bottom, and then I'm going to bring the right one over here to illustrate a point that I'm learning as along maybe with you guys. Maybe you guys already knew this. But these rounding bottoms, they kind of always hit the resistance and then consolidate down. They like always do that. And then you get the second breakout. But then here's the thing that I finally watch for. This is what has been happening in my personal experience is you get this thing and then you get up and then you go back down and you get that bounce. Bigger the bottom, the better. There's a saying that I forget every single time. I think it's bigger the bottom, the bigger the bounce. Bigger the bottom, the bigger the move. I don't know what it is, but yeah, bigger the bottom, the better is all I got to say about that. I think that is enough. So at any rate, this is the type of movement that I would be watching for. So keep stops accordingly. And then for ultimate targets, because remember, guys, I think this was a question. So like if you get a pattern in the past and then another pattern forms, do we forget about the previous pattern? Does that no longer matter? Was all the work, the price action work, erased by this new pattern? No. I think 9 times out of 10, the patterns resolve, but they'll have patterns in the meantime. But the price target will be hit like to the T, to the tick. So let's measure this out. Let's see what our potential is on USA Technologies on the daily chart as a swing trade. So we go to the absolute low of our rounding bottom. We bring that to the absolute, well, the resistance line. It absolutely is resistance. This is the depth of our rounding bottom. Now we're going to add that to this resistance that we're trying to break out from, so we can approximate the price target for a breakout trade. Whoops. And that's about $20, $20.50, $20.69. It's right about, yeah, Big Reddington. This is a really good point I'll put in here. Yeah. Markets. Yeah. You guys, I think we should do like a getaway once this whole pandemic thing goes away. We talk about some charts. We eat some mushrooms. You know what I'm saying? Fire. Listen to some music. Markets are crazy. Charts are fractal. Patterns within patterns. It is psychedelic. So yeah, this is the price target from the resistance line on USAT. Let's measure that out. 72% gain from the current level. I think really watch this one. Really watch this one. I added it to my watch list. What gives me extra confidence is that it's outperforming half of the other stocks that have just been getting demolished with these green candles. It looks nice. It also has earnings coming up on May 17th. So that's something to be aware of, which might be the catalyst to really get this thing to pop. So good stock. Thanks for the pick. Voodoo. That's naughty. All right. So we want to look at Jets. We look at Captain Miles's pick. So was this the travel ETF? I want to see the holdings in Jets really quick. Yahoo, yuck. Airlines. Got it. Could have guessed. So yeah, not sure when we did this last time, but drew a line at this resistance that we were hitting, and where we formed a little cup here. Looks like we broke out. So this whole thing, this is one in the past where I would have said, oh, this is a rounding bottom, blah, blah, blah. But I think you can be more textbook about it. This is an ascending triangle reversal. Yeah, man. Ascending triangle reversal pattern. Oh yeah. And how do you measure your target from breakout? It is the swing high here down to the swing low added to the breakout point or the resistance line. So we go to our swing low, out to our swing high, add that to our resistance line, and set a price target, not surprisingly, just about at this previous point of consolidation. So I would say, markets are organic. I would be looking for something more around this consolidation before like literally hitting this price point. Not saying that it won't. Like, I bet you a candle will close perfectly on this line at some point. But in terms of a trade within a reasonable time frame, I would just look for a stopper on this period of consolidation that happened back in December 19. So that's Jets. It's broken out, but it is on support right now. But that looks like that could be the bounce. Any upcoming catalysts? Of course, it's an ETF, so of course there's not going to be earnings. But this could be the, just looks like a good entry opportunity. I would just watch it for strength. It's airlines. So something might happen where we break it back down. Never bet on Jets. On the Jets. I guess that's different. I don't really know much about sports. Sorry, guys. All right, drop your tickers. It's Friday Fun Day, guys. At 10 a.m., we got the Get Technical Ponytail Showdown. We're going to figure out who's swinging the most powerful ponytail in the biz. All right. This is very important. You guys are here for an historical moment. This will be in the history books that our children read in the post-apocalyptic future. This moment, it will be a scar on history. NI Daily. Let's do it. I literally just typed NI Daily. All right, so me source looks kind of messy on the daily. Very messy. Did I placate the person that hates music? Let me know if you're placated. This one I'm not really sure about. So this is what I see. Let's look it up. Is there a descending triangle reversal pattern? So you have them at the top. Yep. Look at this, guys. This is cool. Look how clean this is. This is a nice image. It's on the right of your screen. It's got some stupid letters on it. I'm not going to pay attention to that. It looks like entry is the breakout point, just like any other pattern. So let's go back to our chart. When that happened, so that thing it had, what is it? 2, 3. It had 3 touches on resistance before it breaks out. Whoa, don't look at that. You guys didn't see anything, which this thing has had. So, I mean, this could be the breakout, or you could get another swing low before coming out. I mean, that's the case with every pattern on the planet. But the main thing with patterns in general, and we actually haven't mentioned this for a while, is that usually if you have any type of triangle, whether it's a continuation pattern or a reversal pattern, you want the breakout to happen between like 50 and 75% of the way through the pattern. That's where the real breakouts that actually have volume and pop behind them happen. If it takes too long, it just really dissipates. And if it's too early, it's usually a fake out. So this is like kind of the sweet spot. So I can see this coming back down before it breaks out. At any rate, this is looking like it wants a reverse trend. But what I would say is, in general, whether it happens after another swing down, or if it just happens, next week or whatever, you want to see a close above resistance. So that's a daily candle, hopefully green, closing above resistance, which is the sloping line on NI here. And then you would set your price target. So this is a hypothetical price target, saying, assuming that it breaks out somewhere on the slope. We'll say it breaks out on April 21st, 2021. You would set your price target based on the swing high to the swing low. I'm going to check on that, like little Google graphic I found. Yeah, that's the swing high to the swing low. and then add that to your breakout point, which is, I think my dates are a little bit screwed up, but whatever. So it's not a confirmed pattern until it actually breaks out. So what we see is a potential formation of a pattern, at which point your breakout or your price target would be about $29. Yep. So this is like pretty much like all of these patterns is a swing high, swing low added to the breakout point. And then when you do those, Lord, don't pay attention to that. When you do those, you set your stop about 6 to 8% below the actual breakout point. Since it is, please post bold symbol. Producer AB, can you post the symbol? It's NI. Here, I'll put it in chat for you. Thank you. Okay, yeah, let's look at X. X has been topic of conversation, at least as of yesterday. So this is United States Steel. And here, can I just check something really quick on X? I just want to see how it's performing against XME, which is the metals and mining ETF. Not great, but I mean, nothing's super compelling at least, but it did have a period of outperformance. Yesterday it did well. All right, so let's go back to, whoops, not my Windows Explorer. Let's go back to X. Sorry for going so fast. That was just for me. But X is great. I still think X is going to get there. I just think that the market overall is having a lot of market structure activity in the background. So money's moving around to different asset classes. So overall, we're looking for what's the term I'm looking for? Like some type of consolidation, I guess. I know that's not the best term, but that's what we're looking for. Like if you looked at my portfolio right now, you would laugh. It looks like a freaking like one of those what are those things? The things that like track earthquakes that are about to happen. It looks insane right now. But at any rate, I'm still with you. I'm with you, man. This is a cup and handle. Look at it doing its cup and handle thing. And we just need it to get out. We're still now. I mean, what you don't want to happen, not saying that it would be the end of the world if it did, but ideally this doesn't happen, is that it comes back down and touches support again. But that's fine. I mean, in general, what you want is just a downward channel following your last resistance touch, for it to be just a plain old cup and handle, to allow us to break out of this big old rounding bottom. So I think we're still in the game. But me, like I'm not in X right now, or am I? I'm in XME, which is the metal and mining ETF. For me, because this base is so big, I'm fine with. I'll wait. I even set my price alerts. I'll wait for this thing to break above resistance at 24.39. That's fine, and then I will pile in. When X breaks out, I'm going hard on it. Do I have this? Yeah, I've already got our price targets up here. So we're gonna hit some resistance at about $38. Price target for this thing is 43 and change, almost $44. So just measuring that from the breakout point, 79. Let's go. Okay, so that's X. That's U.S. Steel, which guys it's in a sector that is showing relative strength to the rest of the market. So there's a lot behind it right now. Oh, nice. Michael has been in X since August. You dog. Well played, my friend. Well played. Smart. Actually, Michael, I'm kind of curious. When you got into steel, were you doing that? Why did you do it? What was your thinking? I'd love to know. Yep. For me buying calls on this, I would still this is my personal preference. I would still wait for the breakout. I'm fine with eating the premium from the volatility it took for us to get up here, because my target is much higher. Okay. Got it. Just looking at it cyclically, you just kind of timed it out. Makes sense. Makes sense. Here is what I will say. So someone mentioned in a comment that they want someone telling them what's happening in the whole market, not just with individual stocks. Anyone that tells you they know what's happening with the entire market right now is full of baloney. Markets go up, they go down, they're unpredictable. What you look for is sector strength. Hey man, the stock market might be getting beat up so bad that you might want to look at futures or some other asset class, right? When things get crazy, people look for easy answers, but there aren't always easy answers. And the sooner you accept that, the better off you'll be. Whoa, shit just got real. Sorry about that. Yeah, for real. People are telling you exactly what's going on in the market. Bullshit. Bullshit. Yeah, rotational. Yeah, exactly. I mean, that stuff. All right, Brett gave me the all caps Palantir with a please. What time frame? I'll pull it up right now. Yeah, so CR says a FinViz map. Yeah, I mean, just a heat map in general. I mean, but that just tells you this stock down, this stock up, this sector up, this sector down. You got to do a more of an. You need to do a comparative analysis. Oh, you want weekly, Brett? The stock's like 2 days old. You want a weekly on Palantir? I mean, not much has changed on the weekly. You kind of you pretty much have a bearish engulfing candle, but it's stopped at support here. We drew our line in the sand a little while back, and we're still there. I mean, you want the daily so you can really actually see what's happening here. We want to see this to reverse this downward trend. Well, it's sideways now. Sideways consolidation is good. It allows you to time your entry, but this doesn't look like an entry to me. This is the day. This is the day. You said it looks all right. I mean, it's got a red hammer. I mean, I don't know. This is not an entry to me. This is neither an entry nor an exit. This is not an indication to go long nor short for me. Yeah, and if you're buy and hold in your long term, I'm not going to knock you. I think Palantir, we talked about this. Spencer has a really good, I believe it was Spencer Israel, about Palantir, which is like there's just no competition there. And they've got government contracts for days, and they just keep coming. That's staying power. So this is a ticker we'll be talking about in whatever fashion. I'd venture to say for years to come. Actually, I'm just going to redraw my line here because I wanted to keep it. Yeah, Palantir, I don't think there's I don't see a long or a short opportunity there whatsoever. And look at how tight the volatility is. I mean, that's like, even if I go down to the 5 minute, I don't know if it's really going to be that attractive for anything. Guys, let me know the time frame, guys. Infrastructure. Okay, yeah. So infrastructure plays are also looking good. 13 mentioned that infrastructure is looking really good. I think XLI is infrastructure. Oh no, this is industrials. I think that when I just got really positive on infrastructure, that I meant industrials, but industrials are looking really good, like very good. So if you guys are looking for some picks, check out the holdings for XLI and see what the leaders are. Tilray Daily. So the body of this candle is trying to hold support where the body of this Feb 3 candle is. So I'll draw a line there. it would be great to hold this. It's trying. Everyone is trying to make it stay there. People do not want it to go below 25, 40 something. But again, this one is so tight and there's no clear entry. And here's something that's very clear to me. This is a very clear reversal when you see this on a pivot. This red candle is bigger than this green candle. Bearish engulfing candle. Very clear indication that we've got a couple more steps to go down. I would say that it might even be a full reversal back down to this support level at 21. It's really trying to hold today, really trying, but not looking that strong. When you have a candle, as far as I understand, when you have a candle that's like this, and then so that's the wick, and then the body is just very tight, like right in the middle. That's just very neutral. That doesn't really tell you anything. It tells you something if it's in between two other candles, but we don't have that next candle to determine what's next. All right, guys, I have something very, very special for you today. We've been talking about it for a long time. I think it's time to we got to separate the wheat from the chaff. All right, guys. We've all been locked up. We're all different people after what happened in 2020. What's still happening? I know I'm a changed man. Look at my LinkedIn picture. You wouldn't recognize me, guys. Oh, yeah, Sean. Oh, yes. It is time for the Get Technical Ponytail Showdown. Guys, if you know a ponytail that I do not have in here, go ahead and link me to the Google image. All right? Throw it in. Let me know. Sean, no, never. Sean says shave your head. Not today, my friend. Today, we rank today's contenders in the Ponytail Showdown. We've got Tom Sosnoff with his little hat. All right? We got Nicolas Cage, an interesting feathered edition of the ponytail with a fedora. Not only that, we've got the Nigerians, the brother Nigerian. We've got Ross Cameron from Warrior Trading is here representing the Gingers. Gotta have one at least. All right. We've got each phase of Steven Seagal. We've got older, kind of weird, that's not real hair, Steven Seagal, and we've got young with the peak of his career, making those Emmy Award winning movies. Yeah, you looked at my LinkedIn. Yeah, times have changed, my friend. So now I want to bring on my good friend and colleague, an expert on ponytail analysis, Spencer Israel. Spencer, welcome.
What I don't know what's going on right now. I don't know what we're doing.
That's perfect. Today we are having the semi-annual Ponytail Showdown. It is our job today, based on the following criteria: airflow, volume.
Yeah.
I don't want to use length because I don't want to discriminate against. We got a couple buns in here. I don't want to discriminate based on that. Volume, and authority. All right. Authority, very subjective measure. All right. So airflow, volume, authority. Ponytail authority is what we're looking for here. That's going to be the main determinant at the end. All right. So Spencer, let me cool down the music just a little bit.
Yes, please. Thank you.
Spencer, I can tell you had your coffee this morning. This is great. All right. Starting off, number one on the block, we're going to start off with an easy one. We've got Justin Bieber here. All right, Spencer, when you look at this ponytail, first thoughts?
I'm going to make my screen bigger.
Yep, here, let me...
No, it's okay. I got it. Okay. First thoughts?
Yep, the beats.
Trying extremely hard, I think. Not
in a good way.
Not natural. It doesn't come off natural, right? That's the vibe that I get. Like I made this decision, not so much. I may have forced it a little bit. I'm trying very hard. Is the vibe?
Yeah, it's too soon. I think it's too soon for this one.
You know what? I'm over eager, not in a bad way, but I'm over eager for sure.
Okay. So over eagerness is not going to get you far in this race. That's what I have to say. Okay. So Beebs, would you agree? Do you think a D is a good assessment? Well, like the final question here, I guess, is authority. Where are we ranking it on authority?
I'm unclear what that means. I'm sorry.
That's okay. It's not supposed to really mean anything, but I don't think it has much of it.
Okay.
Let's put him at D.
All right. Yeah, that's where I would. When you compare him against the rest of the pack here, that's where I'd slot him.
Got it. All right. Let's get someone from the finance space, someone we all know. We're going to look at John Najarian. Guys, let us know in chat. Let us know. Give us the letter. S tier, guys, means better than perfect. That means it's got some extra spice in it. It means that you got some takeout and you're like, what the hell is that? MSG? That means this ponytail's got some MSG on it. All right. There's something special about it. Let us know in chat what letter you would rank John Najarian's pony.
See, I want to give him more props, but then I feel like what hurts him is his brother. I feel like his brother hurts him here. If his brother was not in the field, I would be more inclined to go higher. But when you compare him against Pete, which just in terms of length, right?
Yep.
I mean, look, size doesn't always matter, but in this case, look, give him props because it's a sort of like a fake out, right? Like, oh, I've got no hair. Oh, but I do have hair, right?
It looks like that was hard to do with your hair that short.
Yeah.
Like he's got a team. That's the team at CNBC, like 3 interns.
Yeah,
pulling that thing back and making it a possibility.
So, it's not really fair to John, but unfortunately, when you stack him up against that other beast that his brother has,
exactly,
I feel like I have no choice but to just put him lower on the scale.
Yeah. So yeah, and I'm going to agree with you. What I'd say is great genes, obviously, but the execution's not quite there. We're getting a lot of sort of middling ratings in chat. We got some C's and some D's. All right, so you know what? I'm going to have to agree with the C because it's not a D. It's not this too soon Bieber stuff. All right, so we get a C here. Spencer, I'm not losing you, am I?
Nope, you're not losing me.
All right. Are you doing some research on the side?
Multitasking, like always.
Okay, whatever, dude. All right. Next up, we got John Najarian. John Najarian's a big guy. I'm sorry. Was this Pete? Yeah, this is Pete.
Yeah.
We got Pete. No. Pete's got the long one. John's got the short one. This was John.
Yes.
So were they the football players?
Yes.
All right. So big guys. Another big guy, the guy that played Thor in the Marvel movies, we've got Chris Hemsworth.
Mm-hmm.
All right. Little ponytail, probably had to grow his hair out for the movie. This is a little mid-Marvel movie management.
Mm-hmm.
All right, guys. So I'm wondering, based on airflow, is this ponytail breathing?
It's definitely not as tight as some other ones, so I'll give it some props. Like, it's not as tight as like Najarian or Leto. It seems like it looks like a smidge looser, like a smidge fluffier.
Yeah.
Looks very full. I think he should get some credit for the color of his hair. It's a little bit different. Right. It's sort of a mix. He's not quite blonde. He's not quite not blonde. You know what I mean?
I know.
So, all around, well-rounded. I mean, it's certainly not the longest, but again, size doesn't always matter. So at least that's what they tell me.
You've said that about 9 times so far. I just want the record to show.
Okay. Yeah. I A or B for sure.
I think it's an A. He's Thor. He's got authority.
Yeah.
All right.
Oh, nice pun.
Yep. All right. Next up, we've got Jared Leto. The dude's like 60, and he looks like Legolas from Lord of the Rings.
He's not 60.
I think he's 60 or 70. I think he was like he went to high school with Joe Biden.
Oh, he's 49.
Check me on this.
He's almost 50. He'll be 50 this year.
Oh, okay. All right. So okay. What do we got for airflow? Sean is giving them. Everyone's throwing A's in here. Pam with the A.
Oh, that of course that's
easy, guys.
That's the natural reflex, right? You want to give it an A. But I almost like it's too good. You know what I mean? Like it's too good. Like come on, dude, tone it down a little bit.
I know what you mean. I know what you mean.
We get it. You're an actor and a writer. We get it. All right. Just because it's too good, I want to knock him off a peg. Just
I feel like you're inserting your own bias here. Chat is saying an A, so I just want to take us back to our criteria.
okay.
Airflow.
You're right.
Airflow. I can see individual strands here, and I bet you when this picture was taken, this strand right here was going like this.
And you know what? He should also get some points for the creativity with that bun or whatever that is in the background. I'm not quite sure at the back there.
It's a bun and it's followed by a tail.
Yeah. Yep. I mean, hey, look, there's really on every objective measure, it's a fantastic ponytail.
All right.
You really can't argue with that.
All right.
Yeah.
So we got Leto with an A. All right, guys. Believe it or not,
Who was that?
Nicolas Cage.
No thanks.
Are you kidding me? All right. So the number one is, I don't think that's a real ponytail. I think that's an extension. Because why is he wearing this hat? Think about this. I'm gonna put my Sherlock Holmes hat on.
Okay.
All right. I don't think Nicholas has a lot left up top. Bless his heart. I think that in most of the roles that you see him doing, even the National Treasure movies, he's jumping around and doing all of these athletics and stuff because he does all his own stunts. Hair's not moving.
Wait.
Everything else is. You can see his eyebrows moving.
His own stunt, even with the bees, that was him.
Even with the bees. Yeah. Yep, that was him with the bees. Real bees on Wicker Man.
I just Googled Nicolas Cage hairline. Inconclusive in terms of the back of the head. So or the top.
So we don't know. So we don't know if it's fake or not. So we can't use that. We have to be impartial judges here.
Yep.
So airflow, I think we got it. Because look at how it's all split up and feathery.
Okay. I think I'm with you there. It's unclear to me. It looks like it's short in the back, but also long. I don't quite understand what's happening back there.
I think that it's a side pony.
Okay.
And it's a little bit like kind of on the other side, so you don't get to see all of it.
Okay. All right.
These shots were not. These actors did not agree to this competition.
Mm-hmm. Mm-hmm.
So I see feathers, so that to me is airflow. Volume, I'm not really seeing. With volume, I want like a paintbrush effect, right? Like a cartoon paintbrush.
Yeah. I'm with you.
Yeah. So I'm demerits on the volume. I think lacking. Yeah, I'm sorry, this is not Con Air Nicolas Cage. This is airport wearing a fedora. All right, that's what we have in the competition. Authority. The man is wearing sunglasses, obviously trying to hide from something. Low authority.
He's trying to hide from his debt collectors, I think.
I give him a C. What do you think?
It's a little higher than I would have gone, but I'm not going to fight it.
All right. You want to put him down with Justin Bieber? All right, we got to get trucking fast through these now.
All right. Yeah, we'll go quick.
All right. So I've got a couple phases of Steven Seagal. I think I only have two. So I've got I got 3 phases of Steven Seagal.
Oh, jeez.
Yep. All right. So let's start with today. No. You know what? Let's go with the past. We got Steven Seagal in his prime. He probably just roundhouse kicked a guy.
Yeah, he definitely
to death.
He definitely just punched a guy over a railing for sure.
Over a railing. And now he's got a gun out.
Yep. I mean, it's a pretty badass ponytail. There's really no other way to say it. Right.
Do you agree?
I maybe would have got. I don't know if it's better than Chris and Jared. I'd maybe go with A. I don't know if I'd go S, but
I'm putting context matters.
Okay. Look, you know what? Ponytail in action, he gets points for that. In action.
True.
Yep, he gets points for that.
All right, we got Middle Earth, mid career, Steven Seagal.
Wait, that's not Steven Seagal.
Yeah, it is, bro.
No, that can't be Steven Seagal.
It 100% is Steven Seagal, my friend. He's going through a metamorphosis, as we all do.
All right,
we all do. So So based on your reaction, I'm thinking this is not S tier.
This is Bieber level, honestly. I don't know what this is because it's like, what is it? It's like half mullet, half pony. What's going on there? It's not.
I don't even know if he has a hair tie. I think that might just be doing that.
I don't know what that is. I mean, he's got some product in there. It looks like it's slicked back.
Yep, for sure. VO5.
He's got some it's full
volume. It's volume. It's voluminous.
It's voluminous. Thank you. It's got some volume. I don't know what's going on there. So that's like Bieber level to me. I don't know.
When you say beaver level, what the hell does that mean?
Bieber.
Oh, Bieber. Okay, sure. I'll give it beaver level.
All right.
Sorry, Steven. Now let's get to local cop ? Steven Seagal.
I mean, at least he knows what he is here. And the last one, he didn't really know what he was. He didn't know what he was. This one, he at least knows. We've got.
Yeah, but something's different though, right?
Yeah. I mean, I'd go with C.
Guys, are we disqualifying for what do you call it? This seems like an unfair performance enhancer.
What, the hairline booster?
Is that hairline booster? I think those are full on plugs.
I don't know what that is.
You don't know what hair plug? Okay.
No.
Who doesn't know what hair plugs are?
I just don't know what he's got going on right there.
All right, yeah, we don't really know. I think it is like some of that like spray on stuff. But the tail is not. So here's my problem. This guy is on. He's on a hair system for sure. My problem with this is that I'm too focused on the front that I can't even pay attention to the back.
And then that's a demerit. That's demerits right there. That's what he gets negative points for that. He's for distracting you with.
Bad investment. I would say bad investment. All right. So now we've got. Before we get to these, I wanna get in a couple. I don't like this guy. You know what this is? I'm
sorry. You don't like. The thing is, like, it's unclear to me how real that is. Only because the front looks so short and good that it's unclear what is going on in the back there. I just, you know what I mean? I can't say what is it? Like, I can't say for sure if it's not extensions. I don't know. It could be. I know he did grow his hair out. So it could be, but like the front looks so self-contained that the back is just throwing me for a massive loop. Like, is that photoshopped? I don't know what that is. You know what I mean?
Dude, I think it's a rat tail that he braided, and it does look like it could be fake. Don't pull mullets automatically get a B. Yes, they do. The highest a mullet can go here is a B. I don't know if we have any qualified mullets. I guess this is a mullet. This is like a braided mullet.
I tried really hard to get in high school to get the speaking of mullets I tried to get the Anakin Skywalker episode 3 look, and I just couldn't do it. I couldn't do it. I tried really hard. That's my mullet story.
Bless your heart, Spencer.
Thanks.
Bless your precious heart.
All
right. I'm not giving him merits. Rat tail. He's not getting merits just because we like rats around here.
Yeah. No.
I don't like it. I'm putting this down here. I'm I'm wondering what he was thinking when he did this. All right. We got something that there's one thing here that doesn't match the others.
Is it the ginger? What is it?
Well, that's one. But what about this picture? Do you know who this is?
No, I've been wondering the entire time who that is.
This is Sylvia Bellrock. She was a late entry.
Okay.
She skidded into the application process right before we were about to go live.
Yeah.
Sent us a ponytail pic on Twitter.
Okay.
I think there are some unfair advantages here.
It's definitely almost you know what it is, like that fur hood is almost like a performance enhancer in a way, because it sort of blends very nicely with the ponytail.
That's true.
But of course, it goes without saying that it's more natural than anything else on this list. So
yes.
So I don't know where you want to put the slot that, if you want to go A or
if you're not sure, man, we stick to the criteria.
Yeah.
Airflow.
Yeah.
Look, she's by a lake. That thing is
rock solid,
freely moving.
Yep.
The opposite of rock solid. It's like it's floating on the wind.
Okay.
Volume. Look at the plume.
It's there.
out from where the tie is. The plume,
no doubt,
that's the shape you want to go for. Authority.
I mean, if anyone pulls it off, if anyone in this contest pulls it off, it's her.
Not sure what that means in the context of authority, but what I will say is Sylvia Bellrock really knows her shit when it comes to technical analysis and trading in general.
Mm-hmm.
And I think that It's just got to be S. I mean, it's everything in context. She's beating the living daylights out of everyone else here.
That's what I said. It is the most natural. If you're not going to give it an S, give it an A, but one of the two, I would think.
True. All right, now we get to the other brother. One thing that I just want to say to our judges here and to chat is that you are not allowed to discriminate ponytail, volume, airflow, and authority based on what you see on the chin. Okay? So do not let what you see on the chin of our combatants influence your decision. Okay?
That's good. Yep.
Let me know, Spencer. What do you got?
Again, it's almost the opposite effect here, where John gets unfairly dragged for comparison with Pete. Pete looks a little better in comparison with John. But I will say this: I mean, nobody on this list owns their ponytail. I think more than Pete Najarian. He owns that.
That's authority. That's authority.
Is that also him next to him? Is that?
Yeah, I got two of them. We're gonna use this one though.
Okay.
It's clear.
Nobody owns it more than Pete on this list. So, I mean, for that reason alone, you've got to get at least a B, right?
Sean says the harder he pulls on the goatee, the shorter the tail gets.
It's hard. It is hard not to be distracted by that goatee.
Yeah, but you can't. You got to put it out of your mind.
Volume, jeez, Louise. But
yep, that'll be the next showdown.
Yeah, authority. It's good, man. It's good. It's good.
It is good. It's strong.
Very good.
All right, so I think we give it an A. How about that?
I think that's fair.
Not quite peak Seagal.
No,
but up there with Thor.
Yeah, it's very good. All right, so that's Pete also. So we don't need that next one.
Yeah, so we're ignoring this one. Next up, Ross Cameron. Where you're traded.
If there's anyone on this list that owns their ponytail as much or close to Pete, it's probably Ross. I think.
Mm-hmm. It's part of his image. It's part of his brand.
Definitely part of his brand. He does get points for the red hair. I think that's in this case, it definitely helps him stick out a little bit.
Uniqueness.
He's got volume. He's got some airflow. Looks like.
Yes.
There's no reason to demerit him in any way, shape, or form on this. He's based on your rubric, Neil. His scores are solid across the board.
It sounds like an A to me.
Yeah, B or A is what I would say. Yeah, it's very good.
I'm okay with not having any B's. I'm okay with giving this man. This is an authoritative ponytail for sure. Next up, the man, the myth, the legend, Sean Connery. And special prize to anyone in chat that can name what movie this is from.
See, that can't be real, right? So what?
What are you talking about? This is real. You've never heard of this movie?
No.
Yeah, this is a real movie that Sean Connery starred
in the 70s.
I don't know. Probably it looks like it based on the film grain.
Yeah,
but that's real.
I don't know. I chat. I think I'm going to be way off here. I want to defer to the chat on this one because either it's terrible or it's amazing. There's no in between. There is no middle.
True.
It is either a D or an S. I really can't say for sure.
Let me make it easy for you.
All right, fine.
And here's why.
Yeah.
Authority is Sean Connery shirtless with a red bandolier.
Yeah. Okay.
He's got authority in spades, my friend.
Mm-hmm.
Airflow, man's in the middle of the desert. This thing is like 2 feet long. This thing moves every time there's a gust of wind. Reaction like this, he can use this to sense the weather. This is a defensive measure for Sean Connery. Volume, look at the little lion's tail at the end here where the braid stops. Pure volume at the end. S tier. Last but not least, Tom Sosnoff from Tasty Work / Tasty Trade. Has the man ever tied it back though?
That's a good question. I've never seen it tied back before. Doesn't mean he hasn't. I almost think that the hat, even though it's part of his look, it hurts him in this case because you can't get a full view of what's going on back there.
True. Yeah.
But it is part of his brand, the hat. So, and he owns it. He's got authority. It's almost like Pete in that way. Like, hey, I've got this flow. Deal with it, right?
Yes. Yep.
So,
But not a pony, my friend.
it's not a pony. Not a pony. Not a pony. Straight up. It's like I don't know what it is.
I'm sorry, but I gotta put him next to the Beebs. This is a ponytail competition. Yeah, Pam, Sean Connery is perfection. Absolutely S tier up there.
Again, I told you I was going to be either an S or a D. There's no middle ground with that.
So there you guys have it. That's our ponytail rankings for the month of March 2021 here at Benzinga. I want to commemorate this. I've been doing a lot of work. You guys know.
I don't know what I just did, how I just spent the last 20 minutes of my time, but it was fun.
Hey, man. You work at Benzinga, baby. Welcome to the party.
Guys, this is what we do. Sort of. Sometimes.
Guys, I want to thank everyone for participating in this. We still have a little bit of time. We'll get to some tickers, maybe. Overall, I think the market is still pretty chopped. I'm not really sure if I like anything from a swing perspective. What about you, Spencer?
Yeah, it's a total chop fest out there. All the major indexes are, well, not so much the indexes, but like the futures tracking them and the ETFs tracking them. We're just sort of hanging out. We never really got recovered from that 9 a.m. Drop there, which came from the Federal Reserve, and we're just sort of, you're right. It's a total shop fest for now. I mean, we're definitely on pace to close, if not at the lows of the week, then near the lows of the week. But again, it is a quarter which literally anything can happen. We could flip to a green day like that. So gotta have your head on a swivel today.
Absolutely. Heads on a swivel. All right. So we've got about 3 minutes left here. So let's go ahead and get back to our charts. Thanks, Spencer, for joining us. So everyone say bye to Spencer Israel.
All right.
Ponytail judge of the day. Thank you. Not sure how much authority my ponytail has, but I just wanted to get in the game, I know I have work to do to get to Sean Connery's level, to get to peak Seagal level, but I'm here to do it for you guys. What about Tesla? A reverse cup and handle. Is that what you just said? I don't know, bud. I don't know. I think it's going to take a while before you get Tesla into any meaningful trend. You want stocks to be in a trend. I think Tesla will pretty easily hit this line of support here. Not very bullish myself in the short term. At any rate, guys, let's do the dang thing. This has been Get Technical. I'm Neil, Ponytail Edition. Thank you so much for spending time with me this morning. I know that the markets are absolutely crazy right now. It's stressful. It's wild. But you know what? At the end of the day, focus on protecting capital and having fun. It's okay to laugh at yourself, laugh at the situation from time to time, because there will always be another opportunity. That's why we love what we do. That's why we love trading. That's why we love investing. It's all about opportunities, recognizing it, and seizing it. I want to give a big shout out to everyone that participated in the first semi-annual Get Technical Ponytail Showdown. I had a lot of fun. I don't know if Spencer Israel did. I think he was mostly kind of uncomfortable, but I think that's his natural state, so that's okay. If you guys like the ponytail, I actually made it from the band of a mask. I cut it while we were doing the show. If you like it, give me a 1. If you don't like it, give it a 2. It's whatever. I probably won't do this. I'll probably take it out as soon as we're done. At any rate, thanks so much for being with us today. Have a great weekend. Hopefully Monday presents some more obvious opportunities for us. This has been Get Technical. I'm Neil. Happy trading. And I'm going to come back on because it doesn't look like we have a producer to do the transition into the next program. So I'll do that. Thanks everyone for the ones in chat. 3 from Fed. Not sure what to do with that, bro. Next up, I would say actually I do kind of want to say I have the Mario and Luigi of the stock market. All right. We've got the authoritative mustache of Mario, and we've got the sheer height and jumping power of Luigi. I'm here to present to you some fantastic ways that you can use the research tools in Benzinga Pro to find opportunities in the market. That's Ryan Faluna and Jonathan Mallard with the Benzinga Pro Showcase.
Good morning and happy Friday. Happy Friday. Man, I'm going to start calling Neil MacGyver. I mean, who makes a ponytail band out of a face mask band? But that works.
Rumor is it that Neil actually got trapped on an island one time and fashioned a plane out of sticks and duct tape and flew himself to safety. So the creating a ponytail out of a mask, that's child's play for Neil. I will say though, the whole ponytail thing, that was impressive. I'm not sure that anyone is ever going to beat Steven Seagal's informed ponytail. I did like seeing Bert, our developer, on that chart though. Sure looked like Bert anyway. Neil, I believe that you can get to Sean Connery level if you work at it, right? If you try hard, you show up every day with heart and vision, you'll get there. I'm sure about that. So that was quite a segment.
Just resonate from the ponytail, that heart.
Yeah.
Anyways.
That's how it goes.
People who didn't see that segment are like, what's going on right now? But we are going to get into Benzinga Pro here. And Ryan was telling me about his pre-market workspace, how he sets up his Benzinga Pro workspace every day pretty much. And so we're going to take a look at that, take a look at the markets. So glad to be here with you, Ryan.
Yeah, likewise. Jonathan, unfortunately, I know I didn't tell you this. Unfortunately, I'm going to throw you a curveball today. So we are actually not going to be taking a look at the pre-market screen. In fact, we're not even going to be talking about Benzinga Pro today. We have a basketball tournament, and unfortunately, I'm busy. So I'll see you guys later.
All right.
Okay, just kidding. You should never leave your teammates hanging, and I would never leave Jonathan Mallard hanging. Let's take a look at Pro. I am going to check out some of this basketball a little bit later. I'm pretty excited about that. But until that starts, we're going to talk about Benzinga Pro. So I went ahead and shared my screen here. This is what I like to call a good pre-market workspace. Jonathan, you and I have talked quite a bit about finding new plays, coming up with a trading plan, doing all of those things. And sometimes I like to segment that into whenever I'm doing that research. So we had talked a few days ago about using the screener in the after-hour session in order to come up with a list of stocks that you can prepare for and watch the next day. That's one of my favorite things to do. It's very, very easy. The screener tool makes it very, very easy to do that. I often find that after work, if you will, after the market session is closed, I'm in less of a rush, right? You know, I'm normally thinking about dinner, maybe thinking about what's on TV or whoever I'm going to see that day. I don't feel as rushed. I don't feel as if I need to spend as much time doing research. It's normally been a long day. I'm trying to move on to other things. So when I'm preparing in the afternoon, I often don't really care about speed, right? I'm kind of just relaxing. I'm kind of decompressing. It's the opposite in the pre-market. In fact, it's the complete opposite. And this may just be a personality trait. This may not be the same for everyone, but this is how it works for me. And in the morning, I wake up, I have my coffee. I don't even address the world until I have my coffee. But after I do that, then I start preparing for what's going on or what could potentially go on in the market. And when that happens, it's all about speed, right? I got to brush my teeth. I got to have breakfast. I got to shower. I got to do all this stuff before the market opens, including research and seeing what took place overnight that I wasn't prepared for. So one of the things that I like to do is I like to set up my workspaces so that it's as easy as possible to achieve that goal. Now, when it comes to learning about things that have happened, obviously we have no angle, right? This is almost like a puzzle. You're trying to put different pieces of the puzzle together, and then at the end of that, you're trying to have some type of plan that you can make money from. Sometimes it works, sometimes it doesn't. So this is one of the ways I like to lay my workspace out. This is the What's Moving scanner, which we've covered quite a bit. And when I'm actually doing some more in-depth charting, when I have more drawings to add, when I need to be a little bit more precise with my drawings, I will remove this news feed, and you'll see that the details, the chart, if you will, is just loaded up on the right side. However, if I'm just kind of doing like my provisional like look over, the chart here in the bottom is normally big enough. And remember, when I'm actually doing this, when I'm not presenting, I'm zoomed out a little bit, so it makes the chart appear a little bit different. You can organize the tools or rearrange the tools in terms of size to however it fits your screen. But what I have here on the right side is I have a news feed with one category filter applied, and it is the WIM category. And what this does is this allows me to combine what I'm seeing in the movers with what the news desk is seeing. And sometimes that can actually lead me to the next step, or maybe a stock or a sector or a theme that I was not prepared for or still need to kind of look into. So so the first thing is, this is just the same as what we've talked about before with the movers tool, right? I've got everything. I've got my gainers here. If I need to change this, I can expand the filter and change it to losers, but I'm always going to start with gainers. I get to go down here and figure out what some of these charts look like. And in some cases, I can actually see the why is it moving. But again, when you go down this list here, Clovis, this is actually a stock that I have been watching. I have no position, but this will be something that I do some more due diligence on later. And what that means when I say that is I actually want to look into the reasoning here on the whim, right? So Clovis Oncology shares are trading higher. The company announced its Rubraca significantly improves PFS versus chemotherapy in patients with later line ovarian cancer associated with the BRCA mutation. Now, I actually know somebody that has the BRCA mutation. So stuff like this generally catches my attention, and that's exactly what happened today. So one of the things that I want to do is I actually want to look into this a little bit more. I kind of want to read that report and get other professional opinions, because at the end of the day, I'm not a doctor. So I want to rely on the opinions of someone that's in the know. But the first thing that I can do is I go through the movers list here. If there's any charting that I need to do, or if there's any really obvious points, like for example, the biggest obvious point right here is going to be this high. I might mark that off, and then I might return to this chart a little bit later.
Can I just point something out really quick?
Yeah, absolutely.
Notice how on the top that movers tool is filtered for the pre-market. So it's up 21% in the pre-market, and look where it's at right now.
Yep, that's exactly right.
So we could be talking about themes. We could be talking about doing deeper research for maybe more of a swing trade or an investing situation. But then you also have the gap and go. So, I mean, This is a good example of both ways you could play that.
Yep, you're exactly right. And this is exactly what I'm talking about, right? Like my preliminary investigation is going to be a once over to see what some of the big news is, right? So I'm going to go down the list here in movers, but it's also possible that some of the stocks are not in movers here that actually have why is it moving tags on them. And I might look this over. I might look over some of these tickers, might actually click on some of these just to see if there's any other category tags that they've been assigned to. But like, I want to see if there's any patterns in here, right? I want to see if there's any sectors that are moving, maybe something else that I can actually deploy capital with. Once I'm done doing that once over, that's when I actually come back and dig into these charts. So it might be the case that if I have a lot of charting to do, it might be the case that I simply close this window, right? Because that's automatically going to bring us back to the what's moving preset that we're used to. And it's going to give me some more room and a better picture of this chart. This chart's a little bit more square. If I zoom out, it's going to be easier for me to see things. And then Jonathan, to your point about what we had here at Clovis, this is exactly why we do it in this order, right? We kind of get an idea of the stocks that are moving. We create a short list, if you will, and then we kind of dig in a little bit more. Clovis here, this would absolutely been one of the ones that you dig into, right? You can immediately see that after some of this information here, we had a pop and then we had a corrective move. This is completely normal behavior. This is what I would expect to see. Now everyone's becoming more familiar.
We may have lost audio.
Ryan, come back to us. You're on mute now.
Oh, did you mute me, Spencer?
No, I don't know what happened there.
Yeah, Spencer muted me. He's playing
glitch in the matrix.
Glitch in the matrix. Yeah, I mean, I was bad mouthing Marilyn the other day, so Spencer's just muting me midstream here. So sorry about that. In any case, when we're actually doing that deep dive in here, this is one of the ones that we would have taken a look at, and we expect this move, right? So I want to mark off the top of this move. You'll notice that this is actually one of the easier trades. This right here. And this is one of the reasons why I wanted to show this. This right here is one of those day trades where if you've followed us on our volume expansion ideas, if you're a participant in the chat, I'm sure you know about volume expansion. If you've seen some of our other webinars and such, you're probably familiar with this. This one worked out so well. All right. So we had this initial spike in the pre-market. We had the corrective move in the pre-market. Right out of the open, there's clearly still interest, right? The interest has not gone away. Stock starts to trade up, doing its little price discovery, literally tests the 6.99 level to the penny on this candle, right? Let me zoom in a little bit more so it's easier to see. This candle right here, this little wick right here. All right. Once this tested 6.99 or 7 even, and then came back in a little bit, but didn't further break down, that's your signal right there. That's your bullish signal. Hey, there's probably going to be another test here. And what do we see 3 minutes later? We see that test. We see that it can't actually break through, right? We don't have the corresponding volume. So we're testing it a few times. But then eventually we absolutely punch that level down. We do it on volume, and this thing proceeds to trade up another $1.40. So this is exactly why we do this. In some cases, we're going to do this preparation work before the market opens, and then you're not going to have a play, or you're not going to have a play that's as easy to identify as this one. But in some cases, we are going to have a play that's easy to identify, and this one is it. And it was great too, because the price behavior completely did what we thought it would. Once it actually peaked out here around 840, we're starting to give our gains back. So one of the things that I want to do now is I want to watch this for later in the day. If the volume picks up again, we might have trade number 2 on the same ticker. So again, the goal here is speed. In the pre-market, you want to prepare for the market as fast as possible. I'm sure everyone else has other things to do out there. If you have kids, you probably have it 10 times worse than I do. But you want to be able to get that work done as soon as possible, because when you have a setup that's this golden, you want to be able to take advantage of it.
Absolutely. So just to recap, you had a news feed with the whims. So you could scan through that lightning fast and see what our news desk is highlighting as key items throughout the day, looking for themes in different sectors, things like that, which will be included in the whims. They'll tell you if a whole sector is moving. And then you're just taking a quick glance at the movers tool, clicking through a few of those as appropriate. And then once you have that once over, you dive a little bit deeper into the charts and into your short list that you've started to build.
Yep, exactly. And one of the reasons why I chose this is because it's very, very easy to construct, right? If you're doing this from a blank workspace, you just click on the What's Moving Scanner preset that we've talked about several times before. And then all you're doing here is you're adding a newsfeed to it, right? So if I click on, if I get all of this stuff, right? All you're doing is you're adding the newsfeed to it. Once you add the newsfeed to it, all you have to do is apply the whims category. It's 2 clicks, right? Add the newsfeed, 2 clicks, got the chart down here. It's just one more way to go through all of that information where we've done some of the work for you.
Awesome. I'm just checking the chat here. Thanks, Nate and Dan.
You know what? Dan actually brings up a really good point. We've got a minute. I'm gonna slip this in. Our news desk is awesome. That's what Dan was saying here. I completely agree with him. It is awesome. If you don't understand something here, or if a stock's moving and you're not really sure why, and we don't have any note for it, reach out to our news desk. Ask them. Maybe there's some information that they can share with you. Maybe it's a particular data point explained a different way where the light bulb goes off. Our news desk is really good. Use them. If you click on the intercom button and you start a chat and you type in the word news, it'll take you right to our news desk. I would love to talk to you. Jonathan and his team would like to talk to you, but the news desk, they're news pros. And if you have a news question, they're your group.
And Aristox Market, WIM stand for Why Is It Moving? So it's an acronym, WIIM for WIM. That stands for Why Is It Moving? Just a 1 or 2 sentence summary of why those big movers are indeed moving. And today is the last day of our St. Paddy's Day sale. So if you haven't tested it out, you can go to pro.benzinga.com. And the code is LUCKY. That's all caps, LUCKY, LUCKY. And you can get 35% off of our essential annual plan. So it'll save you like over $500 over the course of the year. But thanks for walking us through your pre-market workspace, Ryan. And I'm glad. Enjoy the basketball today, but I'm glad you could stick around.
Yeah, I'm not going to leave you hanging ever.
All right, time for a news desk update. Today, I'm going to bring on Benzinga.com's managing editor, Jason Shubnell, and father of the year, Jason Shubnell. Shubs, what's up, man?
Morning, Spencer. Happy to be back.
Oh, man. Okay, they were just talking about March Madness, and it got me in the mood to talk about March Madness. So let's do that. Every year, we always do these like fun little articles, like stocks that have exposure to tournament, right? Well, not last year, perhaps, but do we have one of those this year?
We sure do, actually. Just went up today. We actually have an article looking at 8 stocks to watch for this year's tournament.
Yeah, buddy.
And at the top of the list, let's get things started with the big player of the tournament, CBS, which is owned by Viacom CBS, ticker VIAC. They lost the tournament, I believe. Was it maybe 3 days before the actual first tip-off last year? It was right around this time last year when just the entire country, I feel, was shut down.
It was like a week or two before that it was canceled.
Okay, and I knew it was around the time when everybody was getting excited. I know, especially around these parts, MSU was getting loaded for, a big run of the tourney, and then, poof, like that, it's all gone. So they finally get to recuperate, a lot of, the biggest thing, especially for a TV network, is lost advertisement. I believe they have over 100 advertisers signed between both CBS and Turner Sports, which also hosts, a ton of these games early on. And so, I know TV ratings have been low, but what do you think for this tournament this year, Spencer? I know you're a bigger college basketball guy than I am. What's the hype going into the tournament this year?
People are psyched, man. People are like, because it's been 2 years, right? So people are just ready to go. I don't have a clear window into what the ratings will be. We had the first 4 games last night, so we'll know in a couple days how strong those ratings were. But I have my hunch is that ratings are going to be very strong. You can see here that their ad inventory is virtually sold out. Just last year was like such a bummer, and this year is going to like try to make up for that. I think in spades. So. CBS and also AT&T, right? Because they own Turner, which is also broadcasting the first every year. Turner broadcasts the first 2 rounds, so in conjunction with CBS. So they're all
on TBS, and I think it's True TV. Oddly enough, has become kind of the big hub for those games during the workday, as it were. Even though most of us are at home nowadays,
and like an hour and a half
of a distraction. Yeah. And then who's supposed to be the big? Who's the big? Titan to fall this year? Duke isn't in the running. UCLA just had to barely squeak in last night. I know Michigan's been good all year long, and don't tell Joel, but I think they might be my favorite. But what other teams should we be looking out for? Spencer?
Overall number one seed is Gonzaga. They're the odds-on favorite to win, followed by Baylor. Those are probably the two most picked champions in brackets. If you're not picking one of those two, maybe you're going with Michigan. Michigan's tough, man. Michigan's tough. I don't know too many people that are going with Michigan to win the whole thing.
What about Maryland?
No, Maryland is not. Maryland is a 10 seed. If we win tomorrow, it'll be a miracle. But go with your heart, not with your brain. Wait, can we talk about this one specific team though? This is a very special tournament because as it relates to the market.
Mm-hmm.
There's a very, unlike every other tournament in history, there's actually, like, we talk about CBS and AT&T and the sports betting stocks, and yeah, there's a relationship there, but I mean, kind of, sort of. There is actually a publicly traded company in the tournament this year. This is wild stuff, guys.
There sure is. Grand Canyon
University
is the first.
Shubs is breaking up.
Shubs,
you're breaking up. Grand Canyon. LOPE. Shubs, you're breaking up, but I'm covering for you. LOPE. Grand Canyon.
Spencer.
They're in. Shubs, tell us about it.
So this is, I believe, the first for-profit university ever to make it to the big dance and to play in March Madness. I believe the school has only been around for less than 10 years. It's a mostly online school. And it only became a 4-year Division I school back in April of 2017. So it's only been even able to play in this tournament for the past 4 years. But how about that? Whoever thought that you could put money not just on all your different brackets that you print out and fill out, but on the actual school, you can actually invest in them.
Okay, so here's the potential trade here. Let's set up a potential trade. All right, I've gone through, and this is a chart. This is a daily chart. I went back and looked, and when do they clinch a bid? Okay, because remember, every team that wins their conference tournament clinches a bid. They clinched a bid on March 14th, right? That was a Sunday. So where's my Benzinga Pro? So this green candle. I'm sorry. This green candle was the Friday before the tournament where they clinched. So they clinched in between here, right? So the performance of the last week is what the stock has done since they clinched. Why is that important? Because it means they get a NCAA tournament unit, right? Every team that plays in the tournament gets to share in the revenue from the tournament. So this year, the NCAA is paying out. Where's my number here? I just had it. $613 million is what the NCAA is paying out to the teams in the tournament. Now, obviously, that depends on how far you advance, right? But that's a big number, right? And for a school like Grand Canyon, which is in a mid-major conference, that kind of revenue, it can be a game changer, right? So what I'm saying is there may actually be a trade here, right? If Grand Canyon and by some miracle actually advance in the tournament, then we're talking about some not insignificant money that the school and the conference by extension would get. So that's the trade. LOPE is the stock. I'm trying to find the time when Grand Canyon plays.
So they play Saturday, Spencer. I'm not sure on the exact time of day, but they're playing number 2 Iowa.
Yeah,
now, I know Iowa has been decent this whole year. What would you say the chances for Grand Canyon are?
The game is at 6:25 Eastern time, so and it's Saturday, so there won't be a way to live trade. But if they advance, that means they play on Monday. On Monday. If they can beat Iowa as a 15 seed, beating it 2, they would play Monday.
Not unheard of.
Potentially during the day, potentially a way to live trade this thing. If they come back or blow a big lead, I don't know. I'm just saying it could happen. As far as what are their chances, not great to put it lightly. Iowa is probably not a tournament favorite, but maybe a Sweet 16 or Elite Eight favorite. I don't know if people have them going all the way. I sure don't. But
well, if there's any for any high rollers out there, I was just reading yesterday that it's been, I think, 22 years since a Big Ten team has won it all in March Madness.
Yep.
Michigan State in I believe it was the year 2000.
Yep.
Last time, which to me is astounding, even when you think of all the good teams that have come since then. Michigan, Ohio State, Wisconsin. You hear about these teams every single year.
Yep.
And nobody's gotten it done. So that might be a little bit of luck on you whiskey ragers out there with LOPE.
Yeah. So
anyway, a big upset.
This could be if they win today or tomorrow, then they could play on Monday. We could be able to watch this game and live trade the stock. LOPE is your ticker for Grand Canyon Education. No real trade today. Looks like it. Well, I mean, it is up relative to the market, which I guess is something. But again, if they advance, this is actually a fundamental event, right? If they advance, they get real revenue, right? They actually revenue that will show up on their balance sheet, right? So
exactly. Let alone the free advertising they get by just playing, for 3 hours on a Saturday afternoon or on a Monday afternoon, of what that could do for not just the school, but for willing traders out there who might be seeing that and be curious to buy the stock.
So we're at this sort of technical resistance right now at around 110. Let's go to weekly and let's judge it. All right. Yeah, we're getting to. All right, that looks like a triple top to me right there at around 110. We'll see if we can break through that in the next couple of days. Shoves, any other stories on your radar besides tournament? Any other high traffic stories that you want to talk about from this week, or any other headlines on your radar for the weekend?
I would just talk of March Madness and CBS.
I think we lost him, folks. Shubs, ever since you moved to your new house, man, your internet has been unreliable, to say the least. I think we got to give Shubs a raise and upgrade. All right, we got you back.
Geez, I'm sorry about that. I don't know why we keep dropping. We actually just upped our bandwidth with Comcast earlier this week, and it hasn't been paying off. So sorry about that, guys.
Comcast is your problem. I think that's your problem. Is Comcast.
Always, they're always the ones to blame. But as I was trying to say,
I'm sorry,
I don't know if you guys heard this.
What were you saying?
Yeah. So we had an article out earlier this week from Empire Financial Research looking at the latest "quote unquote" YOLO stock, in their opinion, and they actually called Viacom CBS as their latest YOLO stock, both in the day trading Reddit community. And they're big. Exactly, right? I mean, I wouldn't have thought they're kind of a legacy media company. I never would have, portrayed them in that light. But when you read the thesis, it kind of makes sense. Essentially, they're what they're trying to say is that this Paramount Plus that came out right around the time of the Super Bowl. The Super Bowl was littered with ads for Paramount Plus since the game was airing on CBS. And their thesis is that Paramount Plus is basically just a rebranding of CBS All Access.
Yeah, it's the same thing.
Right. And so, you might, I don't know how much you watch CBS, Spencer, with I know they have some of the most watched programs around, but, it's not something that I'm dying to sign up for, given everything I already have with Netflix and Hulu and Disney Plus and ESPN and all these things. And so what they're saying is that with Paramount Plus, they're kind of trying to speak to that old nostalgia trade, because Paramount also owns Nickelodeon, SpongeBob SquarePants, all those old programs from the 90s and the year 2000s that, people our age may be curious to sign up for.
Yeah.
But in terms of run up this year, they think it's just well overdone. The stock is up, I think, somewhere around 160% in 2021 alone. So not a bad thesis, in my opinion. I don't know. I don't think anybody's telling anybody to short this stock. But if you've got a lot in VAIC right now, maybe time to take some chips off the table.
How can you short a stock that's gone parabolic here? I'm curious from Shubs and from chat, how many streaming services do you all pay for? I really want to know. Chat, answer it as well. Shubs, how many do you pay for?
That I pay for, I think we pay for a total of 3. So we signed up for Disney Plus as soon as it came out because they gave us a little bit of a discount.
Okay.
All right.
Well, we lost
Netflix nowadays.
Netflix,
and then
Netflix, Disney Plus.
And then we also have Hulu because I was able to I pay with Hulu through Spotify, which is a little combo that there was a deal about 2 years ago through Spotify to get $10 a month for both Hulu and Spotify. Hard to go wrong, especially for somebody like me who does use Spotify, not for podcasts really, but for the music itself, the millions of songs for the library.
I'm with you. I'm paying for two. I'm paying for Hulu and I'm paying for HBO. Everything else, I'm either mooching or sharing. Right.
I will say that I mooch a little bit off of our friends and family. I don't want to say which ones because God knows how they'll find out and start cracking down on password sharing. But I don't think we can justify paying for any more than what we already have because the more we justify it, then before you know it, our total monthly bill will be the same size as a cable bill that we're trying to avoid right now. I think when you bundle them together, I think we're paying about $50-$60 a month for all of our streaming or other apps on our Roku TV. So I'm pleased right now. Hopefully this fad will even out at some point and it doesn't just become, the cable bundle that it tried to disrupt 10 years ago.
Yeah. I mean, I think we're getting there, but hopefully, everybody should mooch. Is that you? Oh, that's me. I'm sorry. That was me. Sorry. Jason Chumnell, Magic Editor at Benzinga.com. Chubbs, thanks a lot.
Thank you, Spencer. Sorry for the technical difficulties today.
Yeah, we'll have to get that fixed. All right, guys, it is 11:01, which means it is almost time for SPAC's Attack. I was told that they're running like 2 minutes late, so I'm just going to chill with y'all until SPAC's Attack starts. Let's get that branding up there. And in the meantime, let's just run through the market quickly, okay? Let's see what's going on out there. So the indexes are all kind of doing the same thing, right? SPY is down about 0.5%. The Qs, look at the Qs. I lost track of that. That's interesting. How is the Russell doing? Okay, let's go into the sectors and see what's going on. Now that's interesting, right? So we know the Qs. A lot of times, even though it's not like fully a tech index, right? Because there's a lot of non-tech in there, like Pepsi's in there. It trades, it acts as an indicator for tech, right? So you see the actual technology sector, the XLK, is about unchanged today, right? And the Qs is up 1%. There's some divergence there between like the actual tech trade and the fund that serves as like a proxy for the tech trade. So maybe we can dive in and see where the weakness is. Let's look at start going through the big tech and just take a look, right? So Apple is up. I'm sorry, Microsoft is up. Apple is unchanged, right? Amazon is up, though not a lot. $23 for Amazon. That's nothing. Facebook's up 4% today. Nice day. Tesla's been a drag on the market these past few months. Tesla's not been playing. I'm just curious now, how's Twitter doing? Because there's been a divergence. If you look at Twitter versus Pinterest versus Facebook, there's been a divergence there, right? Facebook was not in favor for a while. Twitter and Pinterest were. And now it's gone back the other way, right? Where Twitter and Pinterest have cooled off and Facebook has picked up again. So very interesting divergence between the social media plays. Let's go back to big tech. Did I cover all of them? I think I did. What about the XLY, and look at the XLC? Okay, so slightly in the green there. What about the XLC? That's mostly Amazon. How's Google doing? So XLC is at 1%. Google is up 0.5%. Okay. So a bit of an interesting divergence here, again, that I'm watching between the XLK, the actual technology sector, and the Qs. How's healthcare doing today? Okay. What about energy? Okay. So okay. Oh wow. So that's interesting. So the banks are being punished. We knew that this morning, right? We saw that with the Fed announcement, but financials and energy have been pretty correlated these past few weeks, right? So we're seeing a clear divergence today between the energy, the value plays, right? The value areas of the market, value sectors. How's utilities? Utilities is down. Fair. What about material? What's materials again? Gosh, what is the materials, guys? I don't even remember. I'm not gonna go. I can't guess that ticker right now. XLP. No, that's Staples. You haven't seen my chart the whole time? God damn it. Sorry, guys. All right. I apologize. All right. Anyway, Qs, XLK, clear divergence there. It is 11:05. It is time for the SPACs attack. And I'll see you guys a little bit later for our options show. I'll hop on for Options Explained with Robert Roy at 2. And until then, we got SPACs. We got Power Hour. Let's do it, guys.
What up? What up? What up? What up? SPACs Attack. How we doing? How we doing? Wake up, wake up. Let's get this going. Let's hit the like button. Let's get started. My mic is taking over my screen, so let me fix this up a little bit here. So how's everybody doing out there? I hope you are having a great day in the market, even though we're getting this pullback. I mean, we've talked about the quad witch and what could happen on Friday today. I expected a down market, but hey, that's just how it is. And then that's why you got to know different parts of the market, not just what you're trading, also the overall market and how the overall market can affect your stocks. But let's bring in my man, the brains to the show, Chris Ketchy.
What's going on, Mitch? How we doing today? Yeah, markets, I don't know. They're going.
I mean, here from my boy Rick House. All right, man. Hey, the quad witch is going on. I kind of expected a pullback, and this is the reason why I didn't go too crazy yesterday. I expected some pullbacks. I'm looking to average down in certain plays, especially SPNV. You guys know how I feel about that one. I'm seeing it today. I have a couple orders out, really low, underneath kind of the low of the day today, just to give you some insight. And I'm going to keep an eye on these. You know, there's a couple on the move. But this is your opportunity, I think, you know, with the market pulling back, this is when you got to start looking at what's of value, what could you possibly attack here. So, Chris, I know that we got a lot of headlines. We got a good interview. We got the match of the March SPACness that we want to finish getting through the first round. So let's get right into our headlines so that we can get there and take us back.
Yeah, guys, holy cow. We have an exciting show, exciting interview, and we want to get through that last region of our March SPACness bracket. So without further ado, going to try to rush through some headlines today and those two new deals announced this morning. So going to talk earnings first. So we have lots of former SPACs that reported earnings last night. We have MP, that's MP Materials, reported fourth quarter earnings per share of 20 cents, which be a 5-cent estimate. And for the full year, $134 million in revenue. And I will note that the original estimate from the investor presentation on this SPAC deal was $102 million. So we talk a lot about, you know, those forward-looking estimates. MP Materials blowing it out of the water. No surprise, shares were up in the after hours last night and are up today. We have Luminar, that's ticker LAZR. So they see full fiscal year revenue of 14 million versus a prior estimate of 15.1 million. And then their full 2021 guidance now goes to 26 million, up to 30 million. And the estimate before was $26.9 million. They see book growth of 40%. So raising slightly and coming in ahead of the estimates there. So Luminar shares also up today, and notable that Craig Hallam initiated coverage with a hold rating and a price target of $24 on LAZR. We have Hims and Hers, that's ticker HIMS. So they reported fourth quarter sales $41.46 million, up from $41.3 in the last quarter. They see quarter one sales $48 million to $50 million, and full fiscal 2021 sales $195 to $205 million. Shares of Hims trading down today after that earnings report. And we have Utz, so ticker UTZ. This is Utz Brands, Snacks, Foods, reporting fourth quarter sales $268.6 million, beating an estimate of $243 million. Going forward, they see fiscal 2021 earnings per share in a range of 70 to 75 cents versus an estimate of 60 cents. Full fiscal year revenue of $1.16 billion versus an estimate of $1.15 billion. Shares of Utz trading higher, and I am seeing reports on Twitter that Utz will be on Mad Money with Jim Cramer tonight. So look for shares to continue that strength going into that interview. We have FAII, that's Forum Merger 3, initiated with a buy rating from Benchmark, a price target of $23. Movers from yesterday, those deals, we had SPNV announcing that deal with OfferPad, trading down 2% to end the day. We had ITAC reporting a deal after hours, up marginally yesterday. And then HCAC up 1%. They are in talks with Vivid Seats to go public, that rumor coming from Bloomberg. We have some stocks to watch. So heavy volume yesterday. BTAQ and GSAH. I do own both of those SPACs. Traders starting to circulate, that deals may be close. There was heavy buying of both of those going into, the close yesterday. So some reports out there that deals would be announced. So far, we have not seen anything out there from any news sources. And then turning to our deals, we have ITAC announcing a deal with ARB Robotics. This is a global leader in high-resolution 4D imaging radar technology, working with automotive companies. So they see fiscal 2021 revenue of $7.8 million, fiscal 2022, $13 million. This was done at a valuation of $573 million. And the thing I want to dive into later is ARB Robotics was working with Tesla last year on 4D imaging radar technology for those cars. We're still waiting to see if that connection is still there, and Tesla is a customer of theirs. Remember that Elon Musk has been very vocal about not using LiDAR technology. So ITAC, we could see that relationship with Tesla come into play here going forward. And then SCPE announced a deal with Rockley Photonics, a leading global supplier of integrated silicon photonic chips. Fiscal 2021 estimate of $40.5 million, fiscal 2022, $78.6 million, both of those up over 90% year over year, being done at a $1.2 billion valuation. Seeing lots of people compare SCPE to Butterfly Networks here, and possibly getting some love from Kathy Wood in that space. So keep an eye out on SCPE. This is one that we've been waiting on a deal for a while. They did extend the date. That deal announced this morning. And then some figures to throw out there. So SPACs have now raised $85.9 billion in the first 2.5 months. That's more than all of 2020 put together. That's according to data from SPAC Research. And then a tweet out today from the SPAC king, Julian Klimachko, friend of the show. He says, we've been on quite the buying spree and now own 229 SPACs in the Accelerate Arbitrage Fund ETF. That's ticker ARB in Canada. And he said, in my experience, these market corrections don't last long and generally represent great buying opportunities. We're nearly fully loaded. So SPAC still getting some love out there from the SPAC king. So that's what I've got, Mitch. What do you think I'm seeing? DraftKings trading higher today too. We talked about that all week, right? Heading into March Madness. Sports betting, DraftKings, $71 today.
Hey, yeah, we talked about that. Keep those on the radar. One of the things that we always look at is social trends and how they impact stocks. And this is a clear social trend, and you see how it impacts the stocks, guys. So we'll go ahead and take a look at that. Definitely. Hey, shout out to the king right here. 229 SPACs in that accelerated arbitrage ETF. So going to take a look at and see what was added recently. That's one thing that I like to do also is look at the recent ads. If they're taking a risk on this, why don't you do your DD and then see how you could approach these also? It's good way to find maybe some SPACs that some other people approve of, and then you can go ahead and do your own DD and then make your own decisions at that point. It's going to be interesting to see. We still got some earnings to look forward to at the end of the month with Romeo Powers. I'm going to be looking at those earnings, really paying attention towards that earning call. But let's get through that. Let's get into our interview today. I want to go ahead and not waste a second of today. We got so much information to run through, whether it be the interview and also at the end, guys, stick around. We'll be doing the end of our March SPACness. And then we got the last bracket to fill out so that we can move into round 2 on Monday. And as we keep going, we'll keep getting deeper into these companies. Now, before we bring on Daniel Cohen, one thing I want to talk about is how many SPACs are really underneath kind of this belt. Chris, before we do that, let's talk a little bit about how many and maybe some of the ones that are under here so that at least if you don't know the whole list, you can start pulling it up before Daniel comes on.
Yeah, that's a great question, and that's something I want to ask Daniel as well. There are a ton of former SPACs and SPACs affiliated with Daniel Cohen. FTOC getting Payoneer. We had PAYA, PAYA, which already went public. International Money Express, IMXI. We have FTCV, which just announced that deal with eToro. And then, of course, he is affiliated with some non-SPAC companies as well. So there are a ton of tickers out there. Got lots of questions to get to in this exciting interview.
All right, so let's get into our SPACs Unlock segment here. All right, Chris, let's go ahead and bring on our guest here.
All right, guys, super excited. We have one of the biggest names in fintech joining us on the show today. We have Daniel Cohen. He is the chairman of Cohen and Company, that's ticker COHN, and the Bancorp, ticker TBBK. Welcome to the show, Mr. Daniel Cohen.
Well, thanks a lot, guys. It's great to be here.
Welcome. So I'm going to go ahead and let Chris do some questions, and I'll be back with some of my own, but definitely happy to have you on.
I'm happy to be here. It seems like you guys have a good time from what I've seen so far.
Yeah, we're all about education here. We try to cover SPACs and the whole industry. So we wanted to bring you on. You're a big player in the SPAC market, obviously here. So to start with questions, can you give our viewers just a brief background of your experience in the industry, both financials and with SPACs?
Okay. Well, I think both, the companies of which I'm chairman and at some point had been CEO, Cohen and Company, and the Bancorp. The Bancorp is a financial technology bank. We power, a whole bunch of different non-bank financial institutions, Chime, others like it, Varo. We provide services all throughout technology for people who need to be involved in the U.S. Visa and MasterCard system. And we provide an ecosystem for really being part of that. It's run by a great CEO, Damien Kozlowski, and a great management team, and continues to do well. Cohen and Company is focused on more traditional financial services. We actually had been involved in through our broker-dealer subsidiary in underwriting SPACs already, as more than 10 years ago. That's how we got involved as an issuer. We started our first fintech SPAC in 2015, just launched fintech Athena and fintech Hera. which I think are our 12th and 13th SPACs, including the Insoo series that focuses on insurance, and that's taken Metromile public in Insoo too. And we're excited for what we see out there. I mean, frankly, we're just excited for two things, one of which is change in financial technology and insurance technology. And the second thing is really the changing consumer experience for that. And finally, the ability that we have to really bring good investment opportunities to institutions and individuals. It's, very exciting for us. So we're going to keep being busy.
Awesome. You guys heard it here, 12th and 13th SPACs from Daniel Cohen. So we talk about the SPAC Hall of Fame on the show. This is a member right here of the SPAC Hall of Fame with, numerous SPACs out there. With the Bank Corp, we know it was founded by your mom, who decided to kind of pass the reins on to you a couple of years ago. What did that mean to, keep the chair role in the family and keep this business that she founded going?
Well, actually, I was the original CEO of the Bank Corp, and then we co-founded it together, and I've served as chairman of the company since inception, really. But it's great. I mean, we built together a fantastic infrastructure. She had incredible foresight to really look forward and see a changing way that financial technology companies would do business. And that was really her transition, was really from her bank, Jefferson Bank, which she sold for a big profit to Hudson United, an old bank that was sold then on to other people. She took a branch banking network and said, I didn't need this anymore. I don't need this in terms of raising funds and funding a bank, and moved into technology products, working with companies ranging from PayPal to Google at various points on different products, and built an infrastructure that is well run in a great ecosystem today. And I'm glad to be a part of, as she really moved on to spearhead with me the FinTech acquisition series of SPACs.
Awesome. So again, we talk SPACs on the show all the time. We talk SPAC market. I'm wondering, overall SPAC market, what's the big reason that some of these private companies are choosing the SPAC route over traditional IPOs, in your opinion, and, doing these deals?
Well, I mean, I think for a lot of the good companies, it takes a certain amount of the timing uncertainty out of it. If they're looking at doing something, their question is, do I want to do something today and get something, actually done, and then do all of the filings that I need to do? Or do I want to start out by having a 9-month process really to get my company to the point where if the markets are right, then I can take it public? So the certainty that we really are able to give the companies, we just completed in FinTech 5, a $650 million private placement. In FinTech Olympus, a $400 million. And to give companies the certainty that they can really go public and have a successful transaction, before they really have to start off doing the IPO filing, that's a big motivation today for people.
Awesome. So, I have to ask the question. We talk on the show, we're seeing hundreds and hundreds of new SPACs out there, record amounts of money being raised by SPACs, new groups, forming these SPACs. Do you think we've reached an oversaturation point and we need to see less new SPACs issued out here to kind of bring the market and the timing of these SPAC deals, back in the positive for these deals?
I don't know. I mean, I think there's definitely a certain amount of saturation in the market, and I can't keep all of the various deals apart. But I do know that, I saw Athena Acquisition Corp trading slightly below $10 on the units, and I was like, well, maybe I should buy that. And there are some good SPACs where you basically have a lot of optionality built in. So Somebody asked me why we started to do SPACs and why don't we do IPOs? And I said, look, we're managing a decent amount of money, but we wouldn't get $30 or $40 million allocations in IPOs. And as an institutional investor, I can get that in SPACs. As an individual investor, I can start, day one. You just have to be careful. You have to be with serious people, I think, and you have to be focused on making sure you do appropriate due diligence. So as a sponsor, we do the same thing. I don't know whether the market is really oversaturated. I do know that there will probably be a number of SPACs that don't get combinations done. But there will be a lot of SPACs that do, and a lot of great companies that go public.
Awesome. So, you mentioned your 12th and 13th SPAC out there. We've heard Chamath Palihapitiya mention he wants to do IPO A to IPO Z, which would be 26 SPACs. Do you have continued plans to keep, launching new SPACs going forward?
As long as we have visibility on the fact that there will be good companies to take public, yeah. I think we like investing in the companies we like. We focus on fintech and insurtech. And we think that there are continue to be good companies that, should go public and that people should own. So we're going to continue doing it. We don't have the same program he does. We just don't have the vision that he does. We're more focused on being operators in relatively narrow segments where we know insurance, because I've been investing in insurance companies since 2004. We know financial technology. We know insurtech. We're part of that whole entire ecosystem. Chamath is a great thinker and a big thinker, much more exciting than we'll ever be. And I think people will make money with him in his way. And there certainly should be 26 companies for him to take public.
Awesome. So, we're in the middle still of the pandemic right now, which has changed the business landscape and the deal-making process. So how has the pandemic impacted getting some of these SPAC deals done in terms of doing due diligence and also having, Zoom meetings or in-person meetings with the potential targets?
Well, a lot of the targets are people that, we've known for a long time. In terms of due diligence, a lot of it was being done electronically in any case. I mean, a lot of it is documentary due diligence. I've been acquiring companies since the 1990s. And whether you send a lawyer to sit in somebody's office to go over documents, or whether you get electronic copies of those documents appropriately, that all seems to work. From an actual operational due diligence point of view, there's a lot more that you can do, and you can look globally in terms of looking at operations and meeting with people globally via Zoom, and doing background and all of that other work that we obviously get done. All of that can get done. It obviously makes it a lot faster. I happen to be a believer that things will slow down a little bit after, once we get into 2022 in terms of really going and meeting people. But we're starting to see that now, and it really isn't slowing us down all that much. I mean, we typically always go and meet with the people we're going to acquire. It's very hard to do it, 100% by Zoom.
Perfect. So, one of the most recent deals announced was eToro. So that's ticker FTCV. The deal valued eToro at $10 billion, which was, a significant increase from their last valuation from a funding round. So can you walk us through a little bit why the $10 billion valuation, for a company like eToro?
Yeah, I mean, look, eToro is cheap on every metric that you can look at it. It is a powerful generator of earnings. It's a powerful generator of revenue. It's a powerful generator of growth. It provides fantastic services and a combined social and investing experience for people that's unique. So if we look at it in terms of a multiple of revenue, it's cheap. to something that's as old school as Interactive Brokers. If we look at it in terms of pre-marketing EBITDA, it's also extremely cheap when you look at it as in terms of traditional financial services. The company is just continues to do well and continues to grow. It's grown faster than people have expected. We've known the company for a long time. We're very bullish about a number of the changes that have happened that have really increased the lifetime value of the customer and a lifetime customer, and the interaction that people have with the platform. And what I would say is that if you're, in a jurisdiction where you can use eToro's full functionality, you should go and try it out. And as more of that functionality comes online in the United States, I think U.S. consumers are going to find that it's a very compelling format. One of the things that it does particularly well is that it really opens up in its social, in its copy portfolio, in its social investing way. It opens up the ability for people to share ideas with each other in a more effective format, somewhat moderated, within a brokerage and investing context. So, if you take a positive viewpoint towards the collective intelligence of all the investing public, then it's probably, something that's going to have a major beneficial and salubrious influence on the investing public.
Awesome. So you hit a little bit on the U.S. part there. That's the part that stuck out to me in the presentation is, eToro looks like they're just beginning with the U.S. expansion, in terms of stock trading and some other options. Was that a big part of getting this deal done and that valuation, then the potential growth of the U.S.? And what's the timeline look like for that going forward?
I think, look, eToro shouldn't have more than 15% of its revenue in the United States for a number of years going forward. All the material is really, contained in the filings that we made. And if we look at it, the key element going forward is really the revenues globally, which we think are very strong. Their revenues are primarily European, Southeast Asian, so Asia ex China, and Middle Eastern, as well as elsewhere. And we're just excited about, the whole entire worldwide growth. It's a strong brand in its jurisdictions. It has strong participation across, the UK, across Germany, across France, and elsewhere. And we expect, substantial inroads in the United States. And that's really a plus for investors, is that upside of growing in the United States tremendously well. So
another recently announced deal was ticker FTIV, Perella Weinberg. Can you give us kind of the thesis behind, that deal and what investors can have to look forward to after that merger?
Yeah, Perella Deal is a very strong company that with a strong brand name, with operations across the U.S. And Europe, that focuses on independent mergers and acquisition advice for companies. We think that we're at the beginning of a new M&A cycle, as well as a new, as well as continuing a restructuring cycle. So it's a unique time for people to invest in an independent advisor. We think that the company is extremely well positioned because of its size to outperform. We think the management team is tremendous. That Peter Weinberg, who had a significant role at Goldman Sachs before forming Perella Weinberg, and the team that really started this out, and the team that they've grown, because they have 55 strong partners from all over Wall Street that have banded together to really form a very entrepreneurial and unique culture for an independent advisor. We think that they can drive growth and drive, the creation of a wealth both for themselves as shareholders and for outside shareholders. We're excited to participate.
All right, I'm going to jump in here and talk about one that's been on my radar here. So FTAC with Payoneer. And one of the things that's going to stand out to me, and let me go ahead and get this to my right screen here. All right, so I'll go ahead and I'll pull up here. It's the compelling relative valuation. One of the things that I'm focusing on is revenue multiples here compared to, let's say, a PayPal, Bill.com, Square. Can you explain how Payoneer really has the advantage here in their revenue multiple, and how the growth in the long run, and we're seeing here growth mentioned here 25% for 2022. How's that going to compare in the long term with these kind of giants that have been in the industry for a long time here?
Well, I mean, I think that, you're seeing the growth that's along the line of the more direct, payments groups. One of the things is that Payoneer has invested heavily in building infrastructure for doing global payments. And that's not really cheap. That's not, one of the nice things about payments, if it's focused on the sort of processing and customer acquisition, merchant acquiring that PayPal, well, really Adyen and Square really are doing, or if it's focused on the repeat business that, Bill.com and PayPal are really focused on, it really is something that has a high gross margin, which is a great business. I mean, if you're making 60 to 70 cents of every dollar, before overhead charges, and then you can manage that on a relatively, manageable overhead, you have a great business. Payoneer is at an earlier point in its cycle. It's continuing to grow revenue extremely well, while it's absorbing the infrastructure and the moats that it's built, in order to do that, because international payments and the type of B2B and B2B2C payments that Payoneer is really doing is a fantastic growth area that should outperform lots of other fantastic growth areas. They service very profitable clients, and they have a wide range of services that they really can expand to service those clients, as well as the ability right now to continue growing, absorbing the overhead, continuing with a high gross margin, but then really, producing real profits going forward. So that's why we're so excited about the company and the inflection point that they're at now. We think that as a public company, it should be able to acquire and grow very nicely, and that it should, be a long-term winner in a segment that continues to do well, where they will continue to innovate and continue to service their, international group of clients.
Yeah, it's one thing that I've noticed that how fast really the pandemic has changed our digital transformation. I'm sure that's something that you noticed definitely got pushed forward, and maybe the reason why so many SPACs are coming out is really that push into digital and that transformation. Is this kind of what you're seeing out there? Are you still seeing this massive transformation into digital?
Yeah, I think we see it accelerating in a lot of ways, and just continuing. User acceptance is, getting greater and greater and greater. And, Payoneer is one of the elements that, as people move towards a totally digital international payment systems, will really be in a fantastic position to move forward.
Awesome. So, I want to dive into a couple more of the deals that you got done. Metro Mile was one that stood out too. You mentioned the insurance side of things. So this was a deal that also, Chamath Palihapitiya was part of that pipe. Mark Cuban is an investor in Metro Mile. They've both talked about that company being a disruptor in the insurance market. Chamath said it's his version of Geico that Warren Buffett had. Can you walk us through, Metro Mile going forward? How big of a disruptor is it going to be in insurance?
Look, I think it's an enormous disruptor, but it's a company that's also owned by some very strong insurance people. We've invested billions of dollars in traditional insurance companies over a long time. Hudson Structured is also a fund that has a significant investment in the company. and has had a tremendously positive influence on the company moving forward. So it's not just a disruptor. Like, there are a number of disruptors in insurance, and some that are, fantastic. Like, we have incredible respect for, a Safwan at Hippo. But Metromile, we think, is a company that can continue to grow, and it's going to change the way people do auto insurance and benefit those people who drive less and drive better, because it's going to charge by the mile based on your own individual risk. And right now, it's started off, I think it's in 10 or so states. It should be nationwide by the end of 2022. From a financial point of view, it's a great situation. It's what financial technology is all about. It's about making more money for the institution while saving more money for the customer by doing it in a much more efficient way. It also has a fantastic suite of loss adjustment services that it's also going to be able to sell to insurance companies. So we think it's going to actually not just revolutionize its own experience, but also revolutionize loss adjustment in a number of other insurance companies with which it already has strong relationships.
Perfect. So, we saw the SPAC market really became, a trending topic in 2020 with, the large number going public this route. But you've been in this game, for years before that too. So I just wanted to back up, and some of those deals that you got done before, the big trend came in. So like International Money Express, that's IMXI, getting done in 2018. What's the thesis there, and what can investors look for, in this former SPAC?
Look, that is a company that is cheap, right? It's a company that's growing nicely. And the nice thing about growing companies is that they represent good value after a couple of years. It's a well-run company that's focused on a money transfer industry that's not going away, primarily to, Latin America as well as to Africa. It continues to grow and provide services to its clients by providing better services using electronic, but not necessarily electronic for customer acquisition, but innovating the actual process of what it's doing. And it's gaining market share from those people who are just not serving the customer particularly well. So just like, Southwest Airlines, by offering routes that people want to fly on and offering them cheaper based on a better organizational experience, is able to make a lot of money. So is International Money Express. The CEO is fantastic. Management is fantastic. Their results have been fantastic, and it's cheap at its current price.
Awesome. So, but before we let you go, we've got some questions from the chat. I just want to get to one here. Someone asking again, eToro, popular topic this week with that deal. So Thomas from the chat asked, how does eToro differ from SoFi? What's the big differentiating factor there?
Well, I have to admit, I don't, we know SoFi somewhat. SoFi is trying to serve, it's much more of a lender. So it's making money by lending money to people and securitizing those assets. And I think it also takes some deposits. I would say it's looking to be a bank in some ways for people. eToro is not a bank. It's making money by servicing people in two ways, one of which is, it does have a strong social orientation where people are able to share portfolios and copy top quality investors in terms of what they're doing. And it's much more focused on individual investors who want to take control of their own individual investing rather than, other things. SoFi started as a student lender and it's expanded to doing all sorts of lending businesses for high quality individuals. But that's what I know about differentiating the two of them. They're two very different businesses. So.
Awesome. That's going to do it from questions. I know we kept you for a little bit here for this interview. We appreciate the time. So again, joining us on SPAC Attack, exclusive interview, Daniel Cohen, chairman of Cohen and Company, ticker COHN, and the Bank Corp, ticker TBBK. And, as he said, 13 SPACs, a member of our SPAC Hall of Fame here. So thank you, Daniel, for taking time out of, I'm sure, your busy schedule to come on the show today.
No, I enjoy doing this. I hope to get a chance to do it again. And it's nice to be able to work with my mom so we both can do lots of different stuff. So
yeah, we'd love to have you back on. We've got so many more SPACs to talk to you about, I'm sure. So thank you again.
Thank you. And I'll look forward to being back on. Take care. Bye-bye.
Thank you. I think you're muted there still, Mitch.
Like he said there, Daniel stuck around. And one of the things that I caught that he mentioned the very beginning, guys, he said, hey, you guys look like you guys have some fun here on SPAC Attack. I think we have a fan in SPAC Attack. I think he's going to be watching us and who knows, maybe getting some information from us and making some investments. And that's what it's all about, guys. That's what we do this for you guys is at the end of the day is to get this information. Now we got a giant from our Hall of Fame right here, right to you guys. So definitely do me a favor, smash that like button. If you got the value, hit the like, hit the subscribe bell. What you thought of that, Chris?
That was insane. Like they launched their 13th SPAC and they're hitting the fintech space. They're hitting the insurance space, two industries that him and his mom, have been in for decades, tons of experience, tons of DD there. I would put myself on board with any of the SPACs, from this group with their experience. So that eToro deal, I'm loving the comments he had on that too. So everything sounded great to me.
Yeah, I'm seeing mention of what's his next SPAC. I heard him mention another one, but I did hear you guys could look up FTAC, Hera Acquisition. Still trading in units. HERAU is the ticker there for you guys. Let me see if I can put this up here. Just want to make sure that you guys get that ticker correct, because if you don't, I know how that is.
Yeah, HERAU looks like it's trading at about 10 right now.
Yeah, 800 million.
So
800 million.
Good.
I mean, they got some money in this one at least. One of the things that I did notice is that if you look at their prior one before that one, it went down to 200 million, and then this one goes up to 800 million. To me, that shows that they possibly already have someone in mind. If they needed more money in this one, it might have been for a reason. All right, guys, so let's go ahead and let's get into our fun time of the day. If you can do me a favor, smash that like button while we play the rocket. All right, guys, so let's get back to our March SPACness. So one of the things that we wanted to do, guys, is have some fun, guys. We've been having some fun with the March SPACness. So, hey, if you guys like the March SPACness, let me start seeing those one roll through in the chat, guys. Put those ones. Let's see them, and let's start getting through here. All right, so we got about 13 minutes left. I might push Power Hour back a little bit. They can wait. All right, so let's get into the March SPACness here, guys. So this is our Midwest side. I know. It started yesterday, guys. I know. But hey, let's have some fun. Let's talk about some SPACs. Let's talk about some matchups here, and then we'll get rolling through here. So first up, QuantumScape, guys. QuantumScape versus Landsea Homes. All right, so that's going to be ticker QS with LSEA here. What do you think, Chris?
Yeah, so guys, hit 1 for Quantum, 2 for Landsea. This is a 1 versus 16 matchup. QuantumScape, a powerhouse. This was a SPAC that was over $100 in 2020, the highest trading SPAC of the year. It has come down since then. Again, this is a battery company, pre-revenue, that you have to be a little patient with here. And then Landsea, you have a home builder trading below $10, which could offer some good value, before the end of the year. So 1 for QuantumScape, 2 for Lancy. Which one's going to have the best end of the year here? I'm seeing so many 1s, so no surprise. It looks like the 1s have it. I think you're muted again, Mitch.
Oh, good lord, good lord! I'm gonna get points taken
man.
off. I'm gonna get points taken off for that one. All right, so like we said, QuantumScape moves on. Let's keep going down towards the next battle where it gets actually a little bit closer here, guys. We got Clove, ticker CLOV, Clover Health versus Hims and Hers. What's going on here, Chris?
Yeah, what a matchup, that we made here. So Clover Health and Hims and Hers, both in the healthcare space, hit 1 for Clove, 2 for Hims. Hims was a former ARC holding that they, dumped to the side of the road. Clove, a Chamath SPAC that has fallen below $10. I know you talked about Clove yesterday. Hit 1 for Clove, 2 for Hims. If I had to pick which one by the end of the year, I'd have to go Clove just based on the valuation and the chart here. So I'm guessing that's your pick here too, Mitch. Oh, I saw a 3. Someone put a 3. That's also a popular pick on this matchup.
Well, hey, I'm not losing any hair, so I'm going to go with Clove. How's that one for you?
Oh, this one looks close.
Hey, man, I guess there's some people getting some little bald spots, right here in the scratcher. I actually had a friend that used Hims, and he got his hair back. I'll tell you that at least.
I'm seeing 2s, but this looks close.
Do you know anybody that uses Hims?
I don't. The thing about this company that's interesting to me too is it's ticker Hims and it's called Hims and Hers. I see commercials for the Hers part on TV with Jennifer Lopez and some skin cream.
Hey,
so
they expanded.
I don't know. So
man.
Maybe we need to change the ticker to Hers to get this stock some love with J-Lo.
Hey, it's just how it is, man. They realized Hims worked, so why wouldn't Hers work?
Well,
all right,
who do you
guys.
think won? I saw more 2s, I think.
Oh, we're seeing some 2s roll through there. Man, this one's a close battle, dude. All right, I won't go with 2 here. I'll go with 2. All right, we'll give it to the Hims. It's grown some hair here and took the win. Let's get into Butterfly here, the new image of health versus Pure Cycle Technologies here, guys. So I'm pretty sure it's ticker PCT, but I need to make sure on that one.
Yep, PCT. So Butterfly portable ultrasound. Pure Cycle is a sustainability plastics play here that just completed that deal not too long ago. So this is 2 SPACs that are, both former deals trading, at decent ranges. We have Butterfly in the 18s, and you have, the other one trading, higher than that still. So I'm a big fan of Butterfly and that technology going forward. And of course, Kathy Wood loves the company. So I would have to hit a 1 here, and looks like we're seeing the majority of 1s roll in.
Yeah, we'll have to take a look here. One thing I noticed is that Butterfly, I know a lot of people believe in this one, but for some reason, something's leaning me towards that Pure Cycle technology. I don't know why, but that's where I'm going to lean on this side, guys. I'm going to be on 2 on this one, but I'm pretty sure I'm going to see some 1s. There they are. There's those 1s. I expected it. There you go. Put some hair on your chest by Ruel. Hey, I can't blame you here. All right, so let's go ahead. Hey, Butterfly wins. Butterfly wins, guys. The new image of health, guys. The new image. All right, let's keep rolling through here. The next one up, we got Open Lending versus a brand new one here that just switched over, Advent. And the ticker for Advent, just to make sure, is it AVT?
ADN.
ADN. There you go. I had that one wrong. I had feeling there. All right, so there you go. Hey, so we got Open Lending here versus ADN here. What do you think?
Advent is a fuel cell hydrogen play here, And Open Lend is automated lending, trading at $38, has been a pretty well performing former SPAC. So I would have to go with the trend there and, go with Open Lending. Hydrogen fuel cell, I still think, might not be as popular going forward. And I think it's going to be a tough market to roll out that infrastructure. So I would lean a 1 here, but I think this is a kind of a toss up.
This is. I would say that, don't count Advent out, but I'm going to go with Open Lending. Why? Because I feel that right now we have a housing boom that's starting. And with the housing boom, I think you're going to see some great revenues come out of Open Lending and kind of, a bunch of different places. With that being said, I will say a 1, but let's see what we see here. All right. What's going on there? Oh, looks like someone's saying hydrogen could be huge. And
that's true. It could be.
We'll keep an eye on this one here. It looks like I'm seeing some ones roll through there. So 1 wins the game.
Ones, but we did have some 2s there. So
let's keep moving on to another big battle here. I think this one's going to be an interesting one from the chat here. What do you think here? We got a battle. Introduce this one, Chris.
Yeah, so we got Virgin Galactic, that's SPCE, against Vivint Smart Home, ticker VVNT. Interesting matchup, 2 very different sectors. I do own shares of SPCE. For me, if we're looking at 2021 performance, I think there's catalysts that can't be ignored with Virgin Galactic, with that new space ETF and that scheduled, space flight for their passenger business. So to me, I think Virgin Galactic, but smart homes too. What a growth area. So this one could go either way with the chat. What do you guys think? 1 for Virgin Galactic, 2 for Vivint.
All right, guys. So one thing that I would mention to this one is, one thing, I'm going to go with the booming housing right here. You guys would thought I wouldn't go for the smart home. I'm actually going to go for the smart home here. I think in the long run, Virgin's going to have a hard time really creating revenue here. But I'm going to stick with the smart homes here. And with an upset, I'm going to say 2. All right, so I'm seeing some 2s roll through there. I'm seeing some 1s and some 2s. What do we got at the end here? Do we see some other 2s roll through there? I think it's a close battle right now.
I had it tied, but now I'm seeing a couple 2s roll in last there.
Yeah, they're starting to get there.
I think we have to go with 2s here based on that end.
Oh, looks like the end there, the guys.
We had, there was 5 straight 2s at the end.
Yeah, man,
so
there you go. We'll see what happens. Hey, I agree. We have to keep an eye on how fast really SPCE really gets into those revenues. We'll stay with the smart home and the upset here. So, hey, we might have a Cinderella story here in Syracuse, but we'll keep an eye on this one. All right, let's keep going. Next one up, we got
Velodyne LiDAR. And
I can't speak today, guys.
So we got VLDR against ETWO. So this is a LiDAR company against a end-to-end supply chain management company. The thing here is E2, former SPAC, trading at 10.08, which I think may provide some value going to the end of the year. And as I've said with LiDAR, it is a crowded market. So hit 1 for Velodyne, 2 for E2 Open. Loving the comments, you guys. Holy cow. I also noticed one about a J-Lo double bottom on the chart. Thanks to whoever put that in there. But I would have to go with 2 here for E2 Open based on the share price.
Hey, we'll see what happens here. It's going to be interesting. We'll have to see. But in my eyes, I mean, here I'm gonna stick, at the top here, a 3 seed, man. And West Virginia, I think he's gonna move on here. Looking like I'm seeing the 1 starting to roll through here, and I can't blame that. Yeah, I believe it too. Mars 2025. Let's do it. I won't be mad if we go to Mars. They can sign me up. I'll be the first one. All right, let's keep going through here. We got about 2 to 3 minutes left here. So I want to get into the next close battle here. This one's going to be an interesting battle here. This is a 7 and 10 seed. You got Ava, and you also got here United Wholesale Mortgage. What's going on with this one, Chris?
Yeah, so ticker UWM against AEVA. Again, I think LiDAR is crowded, but UWM has been a dog since they went public. Even on the rocket earnings, that short squeeze, UWM couldn't really keep the momentum. So I worry about, them getting positives throughout the rest of the year. So I'm going to have to go the upset here. So I would put a 2 for Ava. But again, you guys pick which one you think is going to perform best end of the year. 1 for UWM, 2 for Ava. What do we got? What are your thoughts, guys?
Well. I don't know if I might try to have to do the Mitch effect. I heard Thomas calling it. So let's see what happens here. I'll tell you right now, guys. I'm not a big fan of United Wholesale Mortgage. Haven't been a big fan. I think I've been pretty public about it. I like Rocket and I like Finance of America better. You guys have seen Patty Cook on here. If you haven't seen her interview, check it out. See the kind of where they're getting their revenues from, and see if UWM is going to hang on here. But let's see what else we got. I'm seeing some 2s rolling through there. Some 1s and 2s. What do you think, Chris?
I think I saw more 2s. I feel like the 2s have it.
We'll have to take a look here. Looks like somebody's a Rocket fan. I can't blame you. They're probably upstairs in the office. So if you don't know that one, they're definitely right there. All right, so I'm gonna say that this was a battle, but I'm gonna say 2 wins the game here. 2 wins the game. Rutgers moving on. If you guys don't know, Rutgers hasn't been in March Madness. I think it was like 20 years or something like that, Chris.
Yeah, it's been a while. That Big Ten conference has been a beast this year, getting the most teams in there, and of course I have to say go blue. As we look to March Madness this weekend, we got 1 matchup left, Mitch. We almost made it. It's noon. Let's finish up. We got Skills SKLZ against Metro Mile MILE. You just heard Daniel Cohen on the show. He's a part of that deal. Chamath is a part of that deal. Mark Cuban's a part of that deal. Hit 1 for Skills, 2 for Metro Mile. If you would have asked me a couple weeks ago, I probably would have said Skills. But, with those big names on Metro Mile, I'm going to have to throw my hat in the ring for MILE.
All right, guys. We'll definitely have to see it. Looks like SPAC Broker saying that Mile deserved the better seed. I can't blame you. I was trying to do this all day long, but hey, it's just how it goes. But I'm going to say right off the top,
this is fun. Let's
off the top, guys. Skills, just because the name Skills. I see it in the chat. I see the love. There's some 2s there. Could they turn me around? Do they make me want to erase this? Some 2s. Oh, look. You know what, guys?
Lots of 2s now. I don't know
what? I'm gonna have to erase that one. I'm gonna X out Skills.
Shouldn't have used that Sharpie there, Seth Davis.
Oh, don't worry about it. Hey, guys, I'm gonna go ahead and I'll X out Skills. I'll exit out, and then we'll go with Metro Mile here. But like we always do, guys, definitely stick with the SPAC Attack. This is what we do, guys. We have fun. We talk some SPACs. And if you liked it, definitely smash the like button. Hit the subscribe bell below. Up next, you got my man, Hot Stocks Lukes. I see Dippity Dip in the back. You already know. If you're ready for Power Hour, let me see. I want to see the word Luke run through the chat. Just the word Luke, Luke, run it through there.
Luke into the chat if you want to hear from him. Quick programming note: we've had interviews all week long with CEOs of companies. Stick around though; you're going to hear from 2 people with SPAC deals on Power Hour today. So you got ticker NEBC taking Rover public. That's the dog sitting and walking company, and you got NSTB taking Apex Clearing public. So 2 SPAC deals coming up on Power Hour. We got an exciting day of programming. Don't forget to keep an eye on those sports betting SPACs today before market close, and ticker UTZ on Mad Money tonight. Have a great weekend, everyone. Go Blue. Let's hear it for Luke.
All right, guys. So starting up the number one show, the Power Hour. And then Luke doesn't start it.
Let's get ready to rumble!
Zinger Nation jam-packed show today. Peloton of 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Nia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna. The best trade idea resource out there. Yo, what's up, everybody? Happy Friday. We made it. We're here. End of the week. Let's go. We're having some little bit of choppiness. But hey, what is there to complain about when we got a Friday? We're having some fun. It's Power Hour time. What's up, guys? We're double fisting today. We got the double monsters are back. And we are ready to get flying. I'm going to start today off the way that I start every single day, which is the point of the show. We are doing this because we want this to be the best trade idea resource out there. That's what we're going for, guys. So if we're not bringing ideas, let us know. Call us out in the chat. Send us pissy emails. Because otherwise it's a waste of both of our times. And of course, ideas are not just coming from myself, not just coming from Jason, the guests we bring on, etc. But most importantly, out of Zinger Nation, that's all of you out there in the chat, hanging out with us today. So drop in, start throwing me tickers. What are you guys looking at today? We got a pretty jam-packed show, but we might have some time. Okay. All right. Preview of what we have coming up. So we did a couple of options trades this week in the live portfolio. We did a covered call example with Visa. We did some put selling against Palantir. So we're going to look at both of those. I also have a shit ton of options that are expiring March 19th. That is today, according to my watch. So we'll look at some of those. Dan, favorite of the chat. I see him. He's hanging out. He's ready to go. He's going to be joining us in a minute here. Then throughout the day, we've got 3 other guests who are coming on. We've got a new sports betting startup. So it's sort of cool. They're doing a little bit of a different take on sports betting. We're going to have Apex Clearing. Super relevant SPAC deal. So it's ticker NSTB. That's the SPAC ticker. CEO of Apex Clearing. If you remember, that was like a hot name getting thrown around with all the GameStop madness and Robinhood. Just people trying to understand how does clearing work. What's up with all these new brokerages, etc. And of course, we're gonna have a couple new stocks to talk about. All right, let's take some questions out of the chat. This is a very important one. What brand of yellow pads do you use? My pages fall off, which I hate. So I do 100% of my shopping, 100% at 7-Eleven, groceries, anything that I need to survive, including my legal pads. So I guess 7-Eleven sells Caliber brand legal pads. Okay, there we go. Wow, and everybody's talking about DraftKings. All right, so we'll have to look at that one. All right, let's just run right into it. Dan's hanging out. We don't want to make him wait. Let's see if he's ready. Are you ready? You want to rip it?
Moment. It's March Madness, baby.
Let's go. All right. Who's your team?
Here.
Who's your team?
Okay. My team is Auburn. We did a self-imposed ban this year for recruiting purposes. We were falsely, I don't think any of that really matters because, obviously none of that was true. But we did take the postseason ban this year. It's sad, but it's all right. Because they did us dirty. They saw what we did a couple years ago, taking it to the Final Four, and they saw how excited Charles Barkley was, and they didn't want it. But I think Gonzaga and Baylor, they've got good chances. And then I don't think Alabama has a good chance at all. I think, they don't even deserve to be there. So,
all right. What about my team?
You're a Michigan guy.
Michigan guy.
Okay.
Number one seed, baby.
Like
one seed.
And you know who else? I think Oklahoma State. What if Cade Cunningham pulls out his NBA moments right there? He's. I want him on OKC. I've got my Shai Gilgeous-Alexander jersey on. Kentucky's not in this year. It's all right. Not much SEC showing, but it'll be okay. You know, I know you were talking about the market being choppy, and I saw the fluff PR by the Fed, but you know that was because everyone was taking money out to bet on college basketball, right?
Yes. Well, then
Yeah.
did you see the bank news this morning?
Yeah. No, I think what
I
they
mean, that
meant
could be the
was,
same thing. It could be related
right.
to sports
yeah, it's
gambling.
college basketball. Yeah, I mean, it'll come back in the market in about a week.
Yeah, exactly. But all right, do you have online gambling in your state?
No, we in Alabama, we don't even have a lottery. We don't even have scratch off tickets.
Oh Jesus! All right, you're missing
Yeah.
out. No, it's a good thing, dude. So all right, so yeah, this thing is so dangerous. Okay, I have this Barstool app, right? We have it in Michigan now. You play blackjack by yourself. You play 4 hands at once, at $5 a hand. You're the only person at the table. It's like the most dangerous thing possible. I mean, it goes so quickly. I seriously think that this is going to be problematic for society.
Yeah, are you doing DD on that right now?
Well, it's not really. It should be.
No, I thought you meant on the Barstool pen. I saw you were just like I figured you were just gambling on like sports apps and just like investing in whichever one's the most addictive.
I mean, I should be if I'm wasting my time on it.
Hey, man,
that's how it started. You know, it's like, all right, let's check out this product, and then it's like, oh, okay, I can be laying in bed for an hour and playing blackjack. Okay,
either losing or making a bunch of money.
Yeah.
You know, Hugh isn't here today. I've got him right behind me, right here.
There he is.
And you know, he is swinging a lot of the guys are swinging a low float biotech just offered. I mean, if you want any research on it,
let's hit it. Let's hit it.
I have the Google Doc, and I do know how to read. I'm one of Alabama's best readers. So, it's BCTX. That's I'm not going to make it. So BCTX, yeah. Brain cells. Nah, brain cells sounds cooler. So it has a float of 4.6 million after the offering. It's ready for liftoff. 4 catalysts in 2021. Working with Merck, recent offering and raised cash for trials. Market cap around 10 million, float 4.6 million. You want me to hear some catalysts real quick? Q2 2021, Bria OTS FDA authorization, first patient dose. Q3 21, Bria OTS pre-registration study data. In the float on this thing, you could accidentally add an extra 0 to your shares and have 10% of that thing and have to send a 13G in.
Yeah, so, I was going to say I talked to a guy actually once, a dude, like an individual trader, right? Obviously, did decent size account, but he accidentally triggered a 13 filing, like on accident, because I think he had a ton of what was it? He was forced to buy, I think, a shit ton of shares with options. You know, like he might have sold puts or something like that. And he's like, shit, I own like 11% of the company right now.
Yeah, I hopefully will never have to follow 13G. You know, I feel like that's just an inconvenience that you'd have to go through. Yeah. But hey, you know, it happens. But I know a lot of these guys are on it, and I think it does have some potential. I know a few people on Twitter mentioned it too. So this is really one of the only like longer term swings I'm in right now, just because I mentioned at the beginning of the week. You know, a few weeks ago, it looked like it could be the start of something really bad, rebounded, and then the start of this week looked a little iffy too. Better safe than sorry. We like protecting our profits, Lukey.
Yeah. So I'm way more conservative than I was 2 months ago with what I have in the account right now. Are you in the same place?
Yeah, it started for me back in August and September of last year. You know how it got really choppy for the small caps. And I personally just wasn't going to let that happen again. I said to myself, I'm not going to get stuck in a downtrend where at the beginning of every week, I'm like, I should just sell this here. And I'm like, nah, how much lower could it go? Then on Friday, I'm like, oh, crap, I should have totally just sold everything there. You know? So better safe than sorry. And we have one of these jobs where we can take off whenever we want, man. Well, I mean, you can't. Benzinga's got you working your ass off.
I know, yeah. But hey, you know. I mean, this is like just like the fun part of my day. My actual job. I don't know if we ever talked about it. I don't even know if I ever talked about it on the show. I'm like the ops guy, right, at Benzinga. So like I've got to like do all the hiring and goal setting and all the forecasting and that sort of thing. and this is just like my hobby. This is like my lunch break I get to take, which is awesome. But all right, so going back to this BRIA again, guys. If you're just joining, tickers BCTX, Bravo, Charlie, Tango, X-Ray. So they're through it. They just did the offering. It sounds like correct. So they have cash. That risk is gone. And then basically what you're waiting on is you've got 4 FDA-ish or data type
catalyst coming up in 2021 through quarter 2 and quarter 3. And I think, hey man, if this wants to do something like I've added like just 2,000 to 3,000 shares at a time. I'm like, good Lord, I just shot this thing. So if this thing gets some good news, man, I can't imagine what planet it's going to, but I like to imagine Saturn or somewhere.
All right, and I want to test something. BCTX. All right, check the. Okay, it's not there yet. All right, check out what I'm going to be working on this weekend. This is like my main project. Is I'm making an FDA calendar for the site. And so there will be a couple things. One is there's going to be a historical tab where you can look back by ticker or by stage type and see what all these companies have put out and announced and like what drug changes they have. And then we're gonna have another tab that has all the upcoming dates, right? So like we've got like some data.
Q is gonna love this website.
Yeah, so like check this out. Like AbbVie, we know they're Rinvoq. They have a extension. I don't know, some shit that's happening in Q2, right?
That's a really good idea. I like this a lot. I mean, I'm not huge into like browsing FDA stuff, but I mean, there's so many people that just that's all they do, you know? Yeah, I think this is gonna kill it.
Okay, so here's why I'm bringing this up. Okay. I'm not a huge FDA person either. So I'm trying to go through this data. I spent like 2 hours last night trying to like parse through data to understand what means what, and I need help. So if anybody out there is like a major FDA biotech nut, powerhour@benzinga.com. I need you to email me because I need help this weekend.
I'll get in touch with my bio nerds and I'll have them reach out to you. Maybe even a scientist, Luke. I'll see anything for you, man.
If you have one, I mean, I would seriously appreciate it because we want this to be like a super useful tool. Like we can put it out as it is now because it has shit there. But like I know this is not like to the stage where it's going to be super helpful for people, and that's why I need help on it. So I'm going to be trying to just make a ton of phone calls and get some feedback this weekend. So yeah, if you have people, I'd appreciate it.
I definitely will, man. I really like the idea. I think that'll be super helpful, and it puts it all in a real concise thing. And yeah, you can filter it by tickers, and that's awesome. I like that a lot. I can definitely help you out. I know you said you had a big show today, huh?
Yeah, man.
What else you guys got coming?
So you know Apex Clearing.
Mm-hmm.
That one, the SPAC deal. So we're gonna have the CEO of Apex on. Interesting for several reasons, right? One is the business that they're in, right? Like helping to explain, you know, how clearing works, where they fit into the process, you know, and that sort of thing. And then two, you've got a SPAC a pre-merger SPAC that's trading at par value, right? Merger announced, you know, deal not done, still sitting at right around $10. Super recurring revenue business. But what were you gonna say?
What do you think about I've had this idea I've mentioned for a while. After a SPAC gets the pop after the merger, some puts for a couple weeks. I mean, after they merge, don't you notice a little drop? That I mean, we
were both on CCIV. We were both haters on it. My timing wasn't right. I don't know if yours was.
Don't say it, dude.
Oh, they're gonna murder us. I already did. Hey, I don't care.
CCIV lucid.
Yeah.
No, but it was crazy. I mean, I had some puts. I made money off them, and you know, it was one of those things. I just thought it was overvalued at the time. I think that's what we mentioned, and we stopped kind of showing that sentiment whenever people like bullied us out of it. So I was like, okay, well, if y'all want to stay in it. I won't talk about it anymore.
Yeah. No, I hear you. Can I hit you with some other tickers?
Yeah, hit me.
All right. Vissel. I don't know if you were ever on the Vissel train. I know Hugh was.
Hugh was big. Last time I was really big in Vissel, I used to play it a lot as a sympathy to UAVS. I mean, you saw it hit above 4 just yesterday again.
Yesterday it had a news pop.
Yeah, so I mean, I know Hugh likes it a lot, and he has these longer term ones so I think it's still in one of those places. I definitely would trim some above 4 yesterday, but Yeah, no, I'm not in any. Like I said, I'm only swinging like a very few amount of things because it doesn't look like my type of market.
Okay, I hear you. What? All right, next one, Hims. This is one you talked to the CEO. I haven't talked to them, or we haven't had him on here. I really like this brand as a sexy telemedicine play. Right? Go ahead. Yeah.
I like the idea of it. It's one of those that I'm like, okay, a lot of the SPACs you have to look up, and once they come out, obviously there are different ones. UWM, you already know about it, but it's like car lots before I became car lots and before I was investing, I had no idea, that was a thing. Unless you were in like North Carolina or something like that.
Yep.
But like Hims, and they have such a smart way of advertising, especially in this day and age, with going through like influencers and going through Barstool podcasts and just going through all like things like that and promoting through that way. So I think through long-term growth, like this is one. I mean, you see, like if I'm thinking about getting boner pills on the internet, it's either Hims and Hers or Roman. Those would be the two that I know.
like a Chinese site for 5 cents each.
Yeah, and I don't want anything falling off down there. So I mean, Hims and Hers would be, the one I trusted.
The thing that I think is interesting about it though is like the whole telemedicine play, right? Like I think COVID kicked it into high gear, and there's so many of these non-sexy brands. Like there's all these companies that are saying they're doing telemedicine and shit like that, but it's like, I don't know, the user experiences aren't sexy, the brand isn't sexy, and like Hims has a shot at being like a sexy, more encompassing telemedicine brand.
Telemedicine is super, like if they make it cool like that. I've been to some of their websites and they'll make it cool, very like one thing on the screen, hello, welcome to your heart experience, some shit like that. And they make it like very friendly for the age of people that, because no like 28-year-old or 30-year-old wants to go to the doctor and be like, hey man, I'm having some issues. So it's like, hey, on the phone, a doctor's not gonna, not believe you. And it's just like that. And just right there, you got it. And I think like for the future, especially like you said, COVID, like my mom works at a hospital. I still can't even go visit her at work right now because like if you don't, So I do think telemedicine has a long way to go. And like a lot of the SPACs, I think it's more of a longer swing.
I think it's definitely a longer one. And Jason's here. What's up?
Welcome.
What's up? Did we talk Vissel at all yet?
Yep, we did a little bit.
The Vissel King isn't here. He's in our hearts, right?
Are you guys mad I sold a little bit?
No, I'm welcome to hell where you're welcome to sell. Jay-Z said that, and I believe it. I personally don't care if anyone sells any stock. If you want to sell it, I'm not a big diamond hands guy. I'm a risk management guy.
All right, yeah. Because I went hardcore. I was buying on the show. I bought like hundreds of thousands of stock each day this week, and then the past couple of days I sold some stuff off because hey, wait, I'm up today. What's going on? Oh, we got some nasty. I did sell some stuff, maybe a little too. Let's see what's moving. Okay, so we got some Tesla coming back a little bit, but this is what happened today. So, oh yeah, HOFV. Do you guys know that one?
I know. Yeah, I have a very racy anagram for it. Or
Okay, let's say it.
Hall of Fame vagina. It's
okay.
Like
all right.
I told you it was racy, dude. You asked for it.
I did ask.
You asked for it, Luke. He delivered. Will you get focused, Luke? Okay, listen to this.
Jesus
so
Christ.
Look at this. We got Voyager up. We got Upwork up. What is going on now? Why are we getting that weird music? So let's see how Raznick, which is me, fucked up today. Okay, let's see what I sold.
Hall of Fame right now, guys. I have the chart up. This is here's a 2-day chart. Popping on NFT play.
Yeah,
wait, we go back to that interview. We asked them about that. Oh shit, this is an exclusive Benzinga thing.
I still own that, baby. Don't call me a hater on that one. What are you talking about?
Yeah, and
all right, wait. Check this out, Jason. Stocks up, right? You brought up 30%. Yeah. We had a comment from the company saying that they're exploring NFTs. Pretty sweet. Let's go.
And you're seeing a lot of those Twitter guys. A lot of those Twitter guys are all on it right now too. I think.
So why don't we write a story on that right now?
I'm sure that we have a story en route.
en route. I mean, get it out. Like we need to cover Hugh. We need to cover these guys. Like we need to cover the stuff. You know, like I mean, we're gonna like look at this. Like we just need to make stuff happen here, Luke.
All right, we just need to make stuff happen. But Dan, what you have any other swingers?
I know, but why won't Hugh show up? That's what I want to know.
He had a doctor's appointment this morning, so obviously I did keep him right here. He's safe. As you can see, he doesn't look happy. He's had the same facial expression.
Okay, so Dan, question.
Hit me.
I've been buying. Okay.
Which is kind of annoying, but I mean, honestly, you see the progression of people coming back in. I mean, I was heading to Florida for a concert, and I saw the amount of people heading down for
in the chat saying it's frozen.
for spring break. You know, there were tons of people.
I think I'm throwing a festival in Miami. I'm gonna get the biggest guys that you could imagine. I got 2 big celebrities already committed, like big
Dan
time.
and Hugh. Those are the
Dan
2.
and Hugh, right?
No, I didn't get them committed yet. So I'm being honest. It's gonna be.
Hugh might not show up again. I don't know.
It's in September or October. I got 2 big celebrities committed. It's gonna have a finance tinge to it, like personal finance, but I want you guys committed to it, is what I'm saying.
Oh, dude, I would love to.
And it's gonna be like a festival. There's gonna be some training, but it's not one of those like.
It's not Fire Festival.
It's not Fire Festival. You never know, right?
Much worse. It's like Fire Festival, but 80% shittier.
Yeah. No, I literally like this morning got commitments from some people that are crazy, and so I don't know. Like I haven't committed to the thing, but yeah, that's the story. So, where is your crew today?
My crew.
Yeah. All the freaking.
You mean last time I was here with like 7 people, right?
But all the where are all like your podcast fans? Where are all of them? I don't see them going. I love him. I love Dan. I love him.
Y'all just tweeted it right now. Usually y'all give me something to retweet, and I just got it right now. I was expecting a little more advertising from y'all, and I'm up here sitting like nothing.
So that's us. So that means Aaron Bride has lost his job, doesn't it?
No, that one's me.
I didn't say it.
Okay, so do you know what we have coming on today? I'll give you CEOs of some of the like.
All right, see if you can. Okay, you blew it.
Oh yeah,
I was gonna read his mind. Yeah.
Him CEO.
Nope.
Apex CEO. Sorry, I got my brain was.
We know what you're thinking about.
You're smart. How did you know that? You're a fucking genius.
It was because Luke was talking about Apex Legends or something earlier. It was like a video game, and I was trying to talk about stocks, and all I wanted to talk about was Apex Legends.
So there could be a lot of stock movements and volatility from our show, because when we bring on these CEOs, stuff usually happens. See, one of the reasons it does, everyone just has CNBC turned on in the background, right? Not everyone knows where to go find us yet. We have some deals in the works, but not everyone knows where to go find us. And so Alpha is created. If you give the example of what Luke just mentioned and alluded to, is that stock, what was the one with the NFT thing, Luke?
HOFV. Benzinga Pro, baby.
Oh, yeah, I should know.
Story.
I should know.
Company's looking at NFTs, 35%.
I should know it because what Dan just said. And so, so I own that. I own that stock like in size, and it's because of our show that I own it. And so people now are buying it today, but if they would have listened to our show 2 days ago, they're making 50%. So that's the part that drives me up a wall. Like we'll have stuff that will break from our interviews that are coming up today, and people will, they'll turn on their CNBC and
that's not where the good news is. Benzinga's where you're getting the real stuff. I mean, you guys aren't afraid to ask the real questions.
Yeah, and I follow up with the questions. Like I did Kevin O'Leary yesterday, and he didn't answer a couple questions people wanted me to follow up on. So I'm like, wait, there was a guy he was on. He has a public company called Car Parts, and not a lot of people have heard of it, and so they want to know how is he going to market it this year. And he didn't answer the first time. So then so Kevin O'Leary answered his question. Forget that was a mistake. The Car Parts guy, and then I asked again, and he answered it, and he was a great guest. And that's what and that's what the community is, Zinger Nation. Hugh and Dan, we bring you guys all in. We get the questions you want. And remember that interview you guys did with Luke? Well, you guys really did it. Who was that with, Luke?
Which one? The Vissel one?
Yes. Like that was so good. That was
with
so
Tommy?
good. That was so good, man. I know the stock didn't go the way we wanted it to go.
Most fun day was when everybody just came on the stream at once.
Yeah, I was on shrooms.
So you're a MindMed investor?
Yeah.
I actually am. I've been in MINE since 0.0001 for a whole year from the triple zeros. And I saw it hit 1.5 cents. I've been in it the whole time. Because it was just like I had 320,000 shares from whenever my account was like $1,000. And it was just like $32. I was like, well, I'd be spending $7 to sell it. Might as well just hold it. And it's gone up like 10,000%. So yeah, reasonable.
Got it. Yeah. So you don't. But did you say you sold it or you did not sell it now?
No, I sold it around like 1 cent. Bought some back at like 0.5 cent. It's just kind of like it's more of like a joke to me. Like why not? If mushrooms do end up curing something, I want to be in that from triple zeros.
Mm-hmm. I hear you. I mean, mental health.
At the very worst, it helps with like your live stream.
By the way, that's the wrong. Mine is a different stock. We're talking Mind Med. MN.
Oh,
yeah,
okay.
Yeah.
Oh, you're talking about RMed, RMED. I'm thinking of Minor Co.
No. I'm not. I'm talking about Mind Med. Come on.
Here, I got you. MMEDF.
Oh, what the heck is going on with my computer?
That one, yeah. Mind. Yeah. Oh, mind. I thought you said mine. Okay.
Yeah.
Common misconception here. I just take them. I don't invest in them.
Yeah.
I ingest. I don't invest.
Luke, am I able to buy a stock of a guest coming on?
When's the guest coming on?
Today.
I would wait.
You'd wait?
Wait till you're off stream.
If I publicly say I was buying the stock, okay, I won't buy it now.
Yeah, I do it and see what happens. Well, they'll call and tell us if it was a problem, right? There's no fucking better way to find out.
I mean, I'm literally saying I'm buying a stock, but I'm not. All right, maybe I won't buy it. You know what? I won't buy it. Okay, I'll tell you what I was gonna do, guys. I'll tell you what I was gonna do. I had an order right in, decent size order, because I'm like shocked that I don't own the stock right now, and I didn't realize I didn't. NSTB, which is the SPAC for Apex. Apex is the thing behind the thing, and that's what I love. So it's one of my kind of stocks. They power a lot of the trading for a lot of these brokerages and other stuff and a lot more. And I'm really angry I don't own it right now. And it's at 1014. I was about to buy, I don't know, 1,500, 2,000.
The recurring revenue on that business is insane, right? But think about it. If you establish a brokerage, right, and you have all the pipes going to do literally millions and millions and millions of orders, do you want to rip that out and go build your own infrastructure, or for something that's not even differentiative, right? There's no differentiation, right? It doesn't help you obtain more customers, or going to another provider, right? Total pain in the ass. That's why I think that business is so interesting. Is that revenue? It's like the stickiest revenue that anybody could have.
Mm-hmm. Absolutely. And there's more to it, man. There's more. I think that's not even on the. I think there's more to it too, but we'll do it for the interview because I don't want to say if I can't. All right. So Dan.
Okay.
What? Go ahead, Luke. I'll shut up. I'm sorry. I'll shut up. I apologize.
Jesus. I know. I just want to ask Dan a couple more questions.
Yeah, I'm done.
Fine. He's here.
I muted myself. I'm on mute. You can't hear me.
Thank you. All right. Morning routine. What do you do when you get up? I always see that you're up early. You go to bed early, you get up early. What does that look like?
Yeah, whenever I first get up, oh shit, Luke, you're killing me with these inappropriate questions. No, I'm a big proponent of waking and baking, man. I wake up.
That's not what I thought you were gonna say. That is not. Well, let the imagination go to what I was thinking, but okay.
Oh God, Luke. Save that for later.
Okay, all right. You wake up.
So the first thing, I click TD Ameritrade and I allow the facial recognition to fail twice because I'm like, and then it fails. I type in my password, NASCAR 69, and then I look at the stocks and I'm like, either it's like or it's like and depending on the is whenever I'm like decide if it's going to be a bowl or a GB kind of morning. And then you have to smoke, you have to get your mind right. And that doesn't have to be what you do. You could drink water, you could do yoga, you could.
I'm not energy drinks all day.
Energy drink. Monster. Is that Monster?
Yeah, because they're out of the freaking bangs in the store next door. So two of these is one bang.
And then I'm always up around 6 a.m., probably 3 hours after the market opens. You know what I mean? At 3 a.m., the pre-market. And yeah, man, I really just get at it. I walk a lot during the day around my house. I do a lot of mobile trading. I'm talking literally around 9 to 10 miles a day in a circle around my house.
Wow. So you're really fit. Okay.
No, I'm not really fit.
I'm saying like I was gonna say you're like a really
OCD.
fidgety. Like you're moving.
Yeah, moving around all day, just trading on my phone, and just if I need to look up like a scanner, I'll just hit the computer, and I'm on my second lap around. I'll just stop at the computer.
So then if you're doing or most things on mobile, like what is it that you're looking at? Like what tools are you using? What indicators? What scanners? I mean, what is?
I've always been the biggest gut feeling trader where I know support and resistance really well, and also I'm always talking to other people. I always have headphones in. I'm always it's kind of like a business where we're like, hey, what's this doing? What are we looking at here? Always ideas flowing of just like a core of like 7-8 people. And I think that's super important to have when you're trading, is to have like a community of people you can always be talking to, because one set of eyes isn't enough to cover all the shit that could possibly be going on.
Yeah. Okay. And then overnight, do you keep stuff overnight, or are you cleared out?
Like with the BCTX thing, I'll hold it like overnight, but a lot of things but at the end of the day, I used to hold just about everything overnight. And it just, like I said, after that August and September, I mean, there were just too many mornings where waking up was less like, and more like, no, why? What am I eating? And yeah, so I don't like, especially in sketchy looking markets. Big risk management. So
there you go. All right, Jason, you can go back to it. I wanted to ask some new questions, right? Every time that Dan comes on, we spend half the time having fun, and we spend half the time talking about swing trades. And I was like, you know what? Today I'm going to ask like some different questions, like some more educationally type questions. So I wanted to get them out. Edgy. Yes, educational. There it is, baby. All right. What else, Jason? I don't know. You can unmute yourself.
You made him mad. He don't want to talk now.
That's fine. We take him off the stream. See, look at.
Sorry, Jason.
That was good. That was good. I'll be honest. Yes, I got quiet, but then I opened Twitter because I'm going to tweet the people coming on and whatever, because I didn't tweet yet that I'm going to be on. And so as I go to Twitter, a guy posts his letter responding to my grandfather looking for his family after the Holocaust. My mother just found. Okay. And so you guys, like, Jason can't talk. I'm reading this letter. This is Ian Rosen's letter. Luke, look at this thing. Hold on. This is crazy. I've never seen anything like this in my whole life. Look at this, Luke.
Okay. Can you show the other letter after this 1 minute on the other letter that we got? But okay.
Yeah, I can do that too. I got you. I'm going to show the next letter in a second too. I got your letter. Okay. Basically it says the whole family was arrested by the Germans, transferred to the Marines, deported. They have never come back. The whereabouts of their death is unknown, probably in the vicinity of this one. I mean, how sad. Unfortunately, I have but little to tell you about your family. I got your letter. I don't, this person's asking like about their family. And
oh yeah, because it's 1950. Oh shit, yeah, it's a few years after. Huh?
Isn't this crazy?
Yeah, that is nuts.
Okay, like that's what I was reading when you guys. I was trying to do a Twitter post, but then that screwed me up because I saw that letter. Okay, and then Luke, you want me to read this other letter? I think
highlights.
Okay, hold on, you guys. So
wait,
you guys
show how big it is.
You guys want to see the kind of emails I get from people?
Luke just wants you to read it because what it says about him.
Okay, guys, this is an email I got from someone.
It's 2 pages.
Wow, that's some fan mail.
Really? You think so? The thanks for your prompt response. I know you're a busy man. However, I can't help but receive your email as slightly dismissive. LOL. That said, please note I do not get offended and disregarded. Okay, I want to whatever. Okay, so he goes, while several of your staff seem to be outstanding gentlemen, I cannot say the same for all of them. Notwithstanding those examples, I caution you about bringing on too many new people too soon. Younger people do not have the natural work ethic like your generation, and as a result, tend to think I can't read. Tend to think a job will be like high school or low-level college classes. They expect a syllabus of duties to perform and expectations to meet. It's kind of true. This often leads them to struggling to envision independent criteria of success, as well as whatever. Spencer, I'm not going to say the rest. Spencer has changed a lot. I wouldn't say his things have dropped, but they definitely are. I can't go. I have to skip. Luke is a young, but I see him a great man in him. He has a young, big, blank energy, but is still humble, which is rare, as that drive usually comes with a heavy layer of hubris or entitlement, so often afflicting younger men today. Which I sometimes agree. I think you have mentored him
Dan,
so well.
I
Jason.
bet you get crazy messages too.
I get a lot, but like shit like that, it's like, yeah, young people don't like, they think they need a syllabus. I'm like, oh yeah, there's actually a guy that sent me a syllabus on like how to make a podcast and all this stuff too. So that was actually super helpful. It just came on like no return address, just how to make #1 podcast on a letter. And I was like, oh wow, that was so convenient. Just
Yeah,
full
exactly.
syllabus.
How to go up against the people from the previous generation and win in about 3 months.
Well, the best part about this guy is he's applying for a job here, and he literally says, hold on, this is hold on. Okay, honestly, none of the rest of the team even hits my radar, and I generally mute or close it altogether until they leave. It's hard for me to take any advice. Okay, I can't say it. And then wait, I gotta read the end. This is classic, guys. So again, it goes on. There's some classic paragraphs, but I don't want to read stuff that I think could be racist. And so
There's
I'm
a
not
lot of
gonna
that
read
in there too. Yeah,
There's a lot of race.
Racism.
Oh, there's a lot of race stuff in here. Yeah.
When you got 2 pages to fill up, you know, I mean, it's a
Yeah,
crazy.
I mean, like, how do you not accidentally include some racism in there?
All right. Hold it. Yeah, it got my attention. Happy. Good point. I got to read this one paragraph, guys. This is the best. This guy wrote, I ended up with over 7 full front and back pages of notes. This is just a small taste. At some point, I have to get something for my effort. He has to get something for his effort. Like I asked him to do this work. You know what I mean? Okay. I'm gonna have to get something for my effort. But for now, here's a pile of ideas for free. Some of it is offensive. And I don't want to disenfranchise your employees. So I'm sending this only to you because I know you can handle it. Not so sure, Spencer.
Wait, but why can you handle it?
Just let me fit. I'm gonna read this whole paragraph. Not so sure Spencer takes criticism very well, LOL. He seems like a tender nugget. Okay, you're a no bullshit dude. So I know you can, and you have that Jew blood. So you're genetically used to pain. LOL. Do what you will with it all. Okay.
Wow, that is extremely anti-Semitic.
And he also said he's interested in the Benzinga ETF. Regardless, he has $50,000 to send over whenever we're ready.
Wide-ranging email.
And his phone number's on it. We should call him and do it.
Like what's crazy is like that way of thinking is like in science books from like the 1850s. It's just crazy that dude's missed like the past 170 years of like updates we've gotten.
And I haven't oh my God. Sorry, but I can't. Sorry. Oh my.
There's a lot of it you can't read.
I can't read. It's like something about a Middle Eastern comment. Like I can't read it. He says, think about making actual. Cut the crap. Less searching the site. You can produce new stuff, stick to requests. But in my opinion, ask viewers what they want less and give them what you think they should have or learn. Don't listen to your listeners. You know many professionals and experts. You are one yourself. Don't ask noobs or house cat gingers from the chat what they want to see, at least not predominantly. You're a leader of industry, so lead. People want to know what you know, not what they think they want to know. Again,
Jason.
Yeah.
We just got the best comment of the entire day, which is that we should call him live on the show before we log off today.
We could. Again, not that I have his number here. Take note of what people want to learn about, but you need to lead the charge. Folks, this is what you need to know. And he said for me not to respond to people that talk shit.
Just have it under the impression it's a one-on-one between Jason and him on, hey man, what can we do to improve before you get here? Because like when you get here, I want everything perfect for you so you can like be up and running with the right crew. I don't want.
So here's my response to him. Man, I wish I could spend the time reading this, but I can't right now. Sorry. I'll I'll take this. Wait, hey, no need to lecture and talk about being dismissive because I was trying. Okay, I get it. This is not the place. Wait, so I said something. Oh yeah, I'll print this out and take this reading when I go on a long vacation. I'll read it then. And then when I read some of it, then I wrote back, hey, I haven't really gotten too much of it, but I forwarded it to the team so everyone can review it.
Yeah. All right, and Dan, we'll let you go in a minute here. We did get a huge check-in. Bringing up he's a smart guy. Bringing up a good point. So he said we had the HOFV, right? Where we called and we got that NFT comment. It said Genius is another one for us to call in and check on. So Newsdesk, if you're listening, the interesting ticker.
So why don't we get the Genius?
They have a ton of Stan Lee stuff.
Let's get the Genius CEO on right now.
All right, producer AB, hit it. We have an hour. You have an hour.
All right, boys.
All right,
man.
Dan,
Take care.
You want to go on vacation together next week? Where are we going?
Next week?
Yeah.
I just have to plan my trip to your festival in Miami.
That's right. And you got to, and you know you're
guy. I got to do it all day.
And you know you're performing, right?
I mean, I would have it no other way.
Like no,
Luke,
but
I have no idea how you manage this guy. This guy's got to be a ruckus
Dan,
for a boss.
Dan, you're performing a rap. Like we're doing a whole rap thing. We're gonna do it. Okay, all right.
Yeah. I'm ready for whatever you need: singing, dancing, acting, flying, anything.
All right. Do you know what you're coming in on, by the way?
Well, I'm an amateur magician, so I'm sure I could just.
Nope. I already have like 2 of these things booked. You'll take one of them. I have 2 guys going on this with professional parachute. You're coming down on a parachute.
Oh, okay.
From a drone.
How much money's he got, Luke?
Not enough for that.
All right, guys.
Bye. Thanks, Dan. We love you. Guys, listen to their podcast, best podcast in the industry.
Penny's Golden Raw Sunday.
Sunday,
out, baby.
We love you.
Sunday and Wednesday. Get it, boys. See y'all.
Thanks, man. Okay, I kept them on too long. But you got a guest now, Luke.
Yep, we got. All right.
Do you know what to do?
Just joining us, guys. Jam-packed day. Giving you a little sneak peek. We've got 2 options trades in the live account, the live interactive brokers account. We show it off every single day. You get to see all the stocks that we own. We buy, sell them on the show. We got 2 options trades we're going to check in on. We've got 4 options that are expiring today, so we're going to go through those. New stock pick. We're going to have the Apex Clearing. That's a SPAC deal. CEO joining us. And we're going to talk sports betting and maybe Genius Brands all in the next 60 minutes. Stay tuned. It's go time. This is the Power Hour, baby. That's how we do it.
All right. Yes, absolutely. And guys, I share a lot, right? And so a letter, I'm going to share. I didn't read the stuff that I shouldn't like. None of it was nice, but there were some parts I just couldn't read. And I just think people should take more time when they're writing stuff, especially when you put stuff in writing and you say people's names. It's not good. It's just advice. So it is what it is. And that's it.
I don't know. Yeah.
And what?
I just say, I try to whenever I'm getting, I don't know, worked up, I try to think like every, like enjoy this moment. Like, even if I'm having a shitty moment, I had some shitty moments yesterday. Just like, all right, how do we do this? How do we stay positive in a world that has so much negativity?
Luke, I just read that letter from a Holocaust survivor, from 1950 about the family. And so I just was literally thinking that when you guys are trying to talk to me, I was literally thinking, how fucking lucky is every single person right here, right now, that we don't have to deal with that. Like, we aren't a part, like, how lucky is every single person that has the ability to listen to us in freedom. And like, could you imagine my kids, Riley, Josh, Ari. Riley gets in one train, Josh gets in the other train, and like that, they're taken away. Like, people take for granted so much of the stuff we get, including myself. I get angry because I made this mistake, did this thing, and whatever. We are such a lucky society that when I get letters like this, I just think of privilege, and I think of you're not appreciating what is there for you, and about giving back and empowering others. And it's just like, we are so lucky. And if you waste those days and hours ripping on other people, it's so easy to rip on people. It's hard to help other people sometimes. You have to think of ways to be beneficial to others, to empower others, to change, and all that stuff. And how lucky are we? So yeah, you're right, Luke. Like, I get frustrated a lot, especially when, the sound doesn't work and I want to go over there and put a sledgehammer on producer Rohan. But think about it. Like, we're alive and we're, and we're
Yeah.
not dealing with that stuff. So
It's like when I
that's
went
it.
to Dachau a couple years ago, there were 2 Jacobys on like the board that had died there, and it's like, yeah, gave me chills for like a week to think about the differences in time.
Yeah, your audio just changed a lot and it was way better. But just so you know,
Okay.
but it's just so we're so fucking lucky, and people just hate and bring down people all day, all the time. I mean, one comment that got to me yesterday, and it really got to me. I don't know if the guy was messing with me. I asked Kevin O'Leary, what does he do when he wakes up? Okay. And 12 different people asked me different variations of that. The guy wrote in the comments that I asked that because we want to write an article about, what he does when he wakes up. And it's like viral type thing. What does a billionaire do when he wakes up? Right. And literally, that's actually a great idea. You know what? Hey, if someone's listening to this, Aaron Bree, write an article about that. But like, it never was in my thinking. I actually want to know. I want to be motivated like Kevin O'Leary. Like he's thankful for life and he's motivated and he does things. I want some of that. And so I'm asking for my own curiosity. And that guy just pissed me off when he wrote that. Maybe he's trying to get to me, but he got to me. So that's it. No, okay. So now we have guests. Should I do the muse?
We have guests. So we, again, guys, if you're just tuning in, we got 2 options trades we're checking in on, 4 options expiring, 1 new stock pick, 3 interviews, 60 minutes. Let's hit it. And we're going to roll our special video. What's up, Joey? I thought we were dancing, but I guess it's just me. Okay.
Yeah,
it's a nice song.
You guys, Luke and Aaron Bree do this dance behind the scenes when the music goes on, and I wish you guys can see that, and I'm working on that. There's going to be an office cam. You're going to be able to choose the live feed or the office cam, so you can see us. Not that you'd want to see me all day, but I'm going to have a camera to my left side, so if you want to talk to me, you can see, and it's going to be live all day. If you like that idea, press 1. If you don't like it, press 2. All right, now we're going to move on to Joey Levy, SimpleBet.io. How are you, my man?
Good. Thanks for having me on, guys.
Thank you. I'm sorry for the diatribe and stuff before you came on. I know we were a little
You weren't
behind.
trying to bring it down on a Friday, but it was important.
Yeah, no, all good. All good, guys.
Okay. So tell us about SimpleBet. I know a lot about it, but some people don't know about it. So tell me about it.
Yeah, sure. I think most people probably don't know about it at this point. We we launched our first product with FanDuel for the NFL season. So we're relatively new. We've been building this in stealth for the last 3 years. And at a high level, what SimpleBet is I think it's safe to say at this point, the leading technology supplier for micro betting products on US sports. So what micro betting means is we enable users to bet on the moments within sporting events with continuity and a good user experience for the first time. So pretty much the sports betting industry today, you have pre-match betting, you have in-play betting, and most of these betting markets are resulted at the end of the game. So you're betting on like, will the Bucks beat the Chiefs in the Super Bowl? You take that money line bet before the game. You could place that bet in the second quarter. But you still have to wait until the end of the game for that betting market to be resulted. So micro betting enables users to bet on, for example, will the next play be a pass or a run? Will it be a first down or not? For baseball, will the next pitch be a ball striker in play? Will the next at bat be a home run or not? So really the key innovation here is driving instant gratification to the sports betting user experience.
So it's like really quick, and like you've got to be quick then. Like if you're going on pitch by pitch, right? Like you're getting resolutions right away.
Yeah, no, exactly. I mean, this was really difficult technology to develop. We use machine learning to come up with true probabilities that inform what the odds need to be on each of the market selections. But the even more difficult problem was automating all the market mechanics. So all the betting markets are automatically created, suspended, repriced, and resulted entirely automatically based on the low latency data feed. We do this within about a second of the real life event occurring. So yeah, it's really quick. And part of the thesis here is that consumers have increasingly low attention spans, right? Like, a 2-minute YouTube video is too long for, Gen Z, for example. They're looking for like a 10-second TikTok. So that's sort of the consumer behavior that we think this product really caters to.
Yeah, I mean, it sounds amazing. And so I guess from the user standpoint, like what are some of the things that you think are going to be most popular for them to bet on? Like is it like the ball or strike, or are there other events that are, it's like, okay, this is going to be the thing?
Yeah, I mean, I think so. We have the way we try to define it is we have like core micros, which, you know, they're a little bit longer time frames. So think of like, you know, at bats for baseball, drives for football. You know, you still deal with a little bit of broadcast latency. For example, when, you know, if you're watching like traditional cable, it's 7 to 10 seconds behind the real life event. YouTube TV and things like that, they're oftentimes, you know, even there's even more latency there. And 5G technology and other things that companies like Verizon are working on will ultimately solve broadcast latency. But in the meantime, betting on like, will the next plate appearance be a home run or not, I think is going to be pretty popular. Once latency gets solved, then it'll be easier to bet on things like, will the next pitch be a ball or a strike, or will the next play be a pass or a run?
So, Luke, let me play a little clip from their site.
But the number of yards on the next play.
All right, now the Giants' turn to try and answer it. Here's Saquon Barkley, and he's off to the races. The 30, the 20, Saquon for 6.
How many yards will the quarterback's next pass go for? Back the deep threat and go 26 plus.
Rodgers to throw it, has all day, and wide open. He's got it. It's Devontae.
Or back the defense. Bet less than 1 yard on the running back's next carry.
It's Cook again. And Cook turns the corner to midfield.
Which player gets the next reception?
All right, you guys get the picture.
I hate Aaron Rodgers.
What? I'm trying to stop it. Hold on. All right, stop.
I know we just did a positivity thing, but I gotta
What'd you
get that
say?
out there. I said I hate Aaron Rodgers. I know we just did like a whole positivity thing, but I you know, okay, just had to get it out of the system. Now we're moving on.
Right.
And so Joey is and you guys are sort of like the thing behind the thing play, correct? Like the technology behind, because it's not that users are going to have or will they have a simple branded platform, or is it that your technology is being integrated into other people's products?
Yeah, it's the latter. So we're not currently planning on launching a simple bet direct to consumer app. We deliberately set this up as a B2B company, wanted to focus 100% of our capital and our time and focus on just product development and product innovation, which, you know, we think is something that's really missing in this industry right now. Like FanDuel, DraftKings, you know, they're definitely doing a better job with this. DraftKings bought SPAC Attack. FanDuel is part of Paddy Power and has the benefit of leveraging a lot of the products that are part of that network. But they're still predominantly focused on like state expansion, customer acquisition, large scale M&A. There are not a lot of companies out there that are investing tens of millions of dollars into product and technology like Simplebet is.
Yeah, absolutely. And I mean, that's sort of similar to our business too. You know, I'm sure you don't know, and I bet a lot of our audience doesn't know either. But Benzinga was started, and until very recently, like within the past 3 years, is when we really got going on like our direct to consumer side of the business. But the core of our business is being a news and data provider for brokerages, primarily trading platforms as well, but primarily for brokerages, right? So our feeds are in TD Ameritrade, E-Trade, Fidelity, Interactive Brokers, Robinhood. I mean, we could go down the list and name them, right? But yeah, the we love that thing behind the thing type business. The revenue is super sticky and recurring. I mean, you get access to so many users at once. So yeah, it's definitely interesting.
Yeah, no, it's a good approach. I mean, it enables us to stay focused on just building these products. We don't have to spend a ton of money on customer acquisition. Yeah, I mean, we think we're making a big bet, obviously, that micro betting is going to be a big part of the sports betting TAM, right? And we think, and our objective here is just to make micro betting ubiquitous across the U.S. sports betting landscape. So we're off to a pretty solid start. And I personally think micro betting is going to be the predominant way people bet on sports in America, just because I think users have low attention spans and they want to be able to place bets and know right away whether or not they won or lost.
It makes it fun. The only reason that I play fantasy football is so that we'll actually care about the NFL. You know what I mean? Like I need something to get me into it. So I'm all about it. And let me ask you one more question. What's the one thing you're most excited about? If you had to name one thing that's most exciting for you, either for the industry or Simple Bet, or even your weekend, but what, like, if you had what one thing you're most excited about, what is it?
Yeah, so at SimpleBet, we're going to start putting out like a beta product of this thing we call scripts. So a micro bet, for example, is betting on whether the current at bat or an upcoming at bat is like a home run or not. But imagine a world where you could bet on, the next at bat will be a home run, but it'll be off the fourth pitch, off a curveball, going 80 to 84 miles per hour, traveling 400 to 405 feet into right field, and having the opportunity to consistently turn like $10 into $50,000 off of an experience like that. So that's kind of how we're thinking about the industry. Sort of combining the excitement of a sports bet, the instant gratification of a slot machine, and the long odds of a lottery product. So really excited about the scripts product that we're working on, and we think it's going to be the main way people bet on sports in America 5 years from now.
Awesome, man. Well, Joey, thanks for coming on with us. If people want to stay in touch, they want to follow your progress, what's the best way for them to do it?
Follow us on Twitter, SimpleBet, at SimpleBetHQ. I'm at Joey S. Levy. Pretty much my Twitter feed is just SimpleBet related stuff. So yeah, follow us on there, and yeah.
Boom. There we go. We have it. Air horns right there. Joey, thanks for coming on and hanging out with us, man.
All right. Thanks for having me.
All right. Take care. All right. I don't like to crack. Okay. There. It's gone. Okay. We're lagging with our banners a little bit today. Okay. There we go. All right, guys. There we have it. We're keeping this jam-packed day going. We've got our news team reaching out to the Genius brands. We got Jason Raznick looking electric today. Lightning bolt over his shoulder. Oh, and he's muted. Can't blame this one on producer Rohan. It's on his interface. Ready? Oh. All right, guys. All right. Also, I have to wait. I have something important. Okay.
Come on.
All right, I have something important. Okay, last week we had our young investor on. He didn't know who Martha Stewart is. We have a younger member of our Newsdesk team. He's 21 years old. I asked him if he knew who Bob Barker was this morning because we keep playing this song that we're not supposed to play. He had never heard the name Bob Barker before.
Okay.
What the hell? That was my important thing.
All right, Luke. All right. I'm very excited. We have an important guest. This guy is responsible. His company is responsible for driving a lot of the adoption and brokerage access for everyone, and not just for a select few. What Apex has done over the years has changed the investing industry. I mean, a while ago, it was rumored that
Jason, you have a producer Rohan with you in the room?
Yes.
Your video is black on YouTube. You're a black square.
Come on, producer Rohan.
I'll describe it for everybody in the audience. I'll describe it. He's got glasses on. He's wearing a gray shirt, lightning bolt over his shoulder. That's Jason Raznick. And while they're doing that, guys, I'm going to throw out two things for you. First things first, FDA calendar, guys. This is my big project over the weekend. This is not a live page on Benzinga.com, but I've been working really hard on getting an FDA resource up for everybody. If you are an FDA trader, investor, etc., let me know. I need help. So shoot me an email, powerhour@benzinga.com. I'd love to.
Luke, am I good?
Let me see. I think we're good.
All right. So I'm not going to do any more pitching. He's been waiting long enough, but we'll talk about it during the interview. Long time coming interview. Let's get going. What is up? We're here. We're gonna. Luke, you went away. Bill, there you are. How are you? How are you? Good to see you too. I don't even know if I still met you in person yet, but this is a camera away, I guess. Right?
Well, it's good to see you. We talk a lot.
We do. You do. How have you been?
I've been great. Great. Thanks for having me on.
That's great. And what I was describing was, which people don't know, you've helped bring access to investing to millions of people. And what I was bringing the analogy was, there's a company called Plaid, which allows for account integration that you can do for logins. You guys have enabled the hard part of trading into a lot of platforms to open up investing for millions of people. And it's the greatest thing because people just used to, leave their money in their checking account. And now there's different ways for yield. It doesn't mean you have to always go buy a Tesla. You can go buy dividend yielding companies. You can go buy, all that kind of stuff. And a lot of this, you guys, yes, there were other companies like you, but you guys were the forerunner in being innovative. And could we start with a little brief history of Apex from how you see it, Bill?
Yeah, sure.
Thank you.
So I think one of the things, first, the proof point on this is 30 million accounts, since our inception that we've opened over the course of almost 9 years. And I think the thing I'm most proud of, to your point, is we're democratizing investing. We're providing the ability for people that, frankly, never had the ability to invest to start investing in their future. And that's really important, obviously, right? These are people that, frankly, were cast aside or not given the ability to invest because, quote unquote, they didn't have enough money. And so a little bit of the history of Apex, we founded back in 2012. And at the core, in the beginning, it was, hey, how do you do custody and clearing different? How do you provide a platform for those that are trying to disrupt, those that are trying to innovate our industry? So I'll go back to the godfathers, godmothers of our industry, the likes of the Wealthfronts, the Motifs, the Betterments, right? The Robinhoods you mentioned, folks like that really kind of started this movement that lowered the barriers to entry. And for us, right, as Apex Clearing, think of us as sort of the fintech of fintechs, right? Our job is to allow for others. Right, today it's the SoFis and the Stashes and the Goldman Sachs Marcuses, the Weebles, to sit on top of us, right? For them to focus on the end customer, the end investor experience, and for us to do all the things behind the scenes, right? And it because you and I have swapped lots of stories over the years. You know what we do from account opening, obviously through the trading. All that stuff happens, and what we try and do to the extent possible is make it all as real-time, as seamless as possible.
Yep. And was that always the vision of when this, was this a result of mergers back in the day in 2008? How did Apex come to being, I guess?
Yeah. So we're owned by a company called Peak Six. Peak Six is a investment company out of Chicago, amazing founders, Jenny Just, Matt Holsizer, and a little bit of the history. They founded a company called Options House, and Options House cleared through Penson Financial. If you remember that name, public company back in the day. Penson Financial, frankly, didn't do a good job, right? Part of the challenge of being a custodian and doing what we do, you got to know how to manage collateral. You need to know how to manage treasury functions. You need to make sure that you follow all the incredibly complicated rules in our industry. Penson ran into major issues, and Peak Six stepped in, bought the assets of Penson. That's what formed Apex back in 2012. And at the time, you had this options house, and it was trying to disrupt mainly the options trading direct to consumer. And the premise was, hey, if anyone looks like Options House, if anyone's trying to do something really disruptive, and do something that's going to help the end customer, the end investor, access the markets in a seamless, smarter way, let's give them the ability to do so. Right. So that was back to the Wealthfronts and the Betterments and the Robinhoods, folks like that. And we've just stayed true to our mission, right, which is to help end investors access the markets, provide that through our customers, which are these B2B players, do things that frankly others won't.
Yep, absolutely. And so your company has grown and empowered a lot of investing. One of the things that's latest and greatest, you guys decided to go public via a SPAC, NTSB. Producer Aaron, it should be up on the screen, but it's not. So put that up there. Thank you.
There you go.
NSTB. It's
NSTB. I have it tattooed on my arm.
NSTB. Okay, so two questions. Okay, I have to get tattooed on our screen. So the two questions are: how did you choose this one? Because there's a lot of different SPACs you can marry to. And why'd you decide now the SPAC route?
Yeah, the first one's really simple. So the two sponsors within NSTB, John Ledecky, Joanna Coles. John's done a number of SPACs, understands exactly the process. He's also, by the way, one of the co-owners of the Islanders, and the connection to Peak Six is that Matt Holsizer, Jenny Just used to be co-owners of a hockey team in the NHL, so they knew each other from the NHL.
So it wasn't just that you wanted good hockey tickets. Okay.
The Islanders are playing well, so I hope to get to some games at some point. But look, it really was about, we're in the financial industry. We understand kind of how things work, and what we wanted was, the management team of the SPAC that was going to kind of provide an efficient way for us to get to IPO. Right? That's sort of who we are as a company. We wanted some professionals who understood the SPAC landscape and could get us as quickly and efficiently and smartly and obviously compliant-wise from start to finish as fast as possible. And John and Joanna have been amazing partners. Joanna is actually going to be joining the board of Apex once we IPO.
Okay, got it. And so a lot of that makes sense. So the next question is like on the you guys going public, like your company enables so many firms, and there's so many more firms you can enable. The growth has been crazy. One of the questions in the chat would be like, okay, Bill, do you worry about companies self-clearing like Robinhood? And I know you've probably been asked that, but I think when people hear from your it'll be helpful for the investor to hear. Yeah, look, so the short answer is I'm not, right? If we do our job well, there's no reason for folks to go self-clearing. And I said before, there's a perfect marriage, right? So our clients can focus on the end customer experience, right? Eyeballs and creating this amazing experience for people to manage their money, not just invest, right? So you think about somebody like Stash, right? Brandon Craig and what he's doing there, or the folks at Public. But they're trying to create a sort of a platform for an end customer to manage their money. And that's amazing. It's amazing the barriers that they've lowered in terms of giving people access to markets, giving people banking products. And so their focus is on continuing to sort of provide a great experience for the end customer. Our job is to do all the stuff behind the scenes, make sure all the rules and regulations are done correctly, and do it in a hyper efficient way, right? And so our interests are 100% aligned in terms of what our job is and what their job is. That's part one. Part two is, I think we saw it play out over the last, whatever it is now, it's 13 months, with the likes of Robinhood and some others. What we do is incredibly hard, right? And I think it, Jason, you understand the industry. If Vlad was sitting here and, he's a good friend and a partner of mine for many years, what he would tell you is, first of all, Robinhood wouldn't be in existence if it weren't for Apex from the beginning. And then the second thing he would say is, right, if he was honest, is what we do is friggin' hard. It's really hard to do this. It's easy to do the technology, but the combination of the technology and sort of understanding how the rules and regulations work. And, I said before, you talk about collateral management and treasury and all the sort of things that happen behind the scenes. Marry that with the ability to open an account in 5 seconds or less with no paperwork. That is the superpower of Apex. Yep. Right. And for folks to try and replicate that just doesn't make any sense. Yeah, and I know, Vlad, I know Robinhood wouldn't be where even close is without you guys, and you guys have been an amazing partner to them. And I see we have this hard stop, but there's one question I have to ask. I wish we would have started earlier, but okay. Walmart is exploring becoming a bank fintech, right? Yeah. What type of services do you offer a company like Walmart? Yeah, look, I think this is going to be a lot of fun for us, right? Go back to our mission around democratizing investing, around providing the ability for people to invest. Walmart has hundreds of millions of customers. What Apex provides to Walmart is a turnkey solution,
So they don't have to worry about the brokerage. They don't have to worry about the regulations. What they need to do is focus on the end customer, right? Provide the ability if someone walks into their store and wants to buy a 40-inch screen TV, give them the ability to also invest in their future. And our job is to effectively make that come to life. So Walmart will control the client experience and all that stuff. Think the Oz, right? The sort of man or woman behind the curtain. All that stuff that happens behind the scenes to make that come to life. That's what Apex does.
Got it. I mean, exactly. And they should be contacting you. Do we have time for one more question or no? Because I said
sure.
one.
Yeah, sure.
Okay. A question they keep asking me in this chat is fractional shares. Will they do both limit and market orders?
We do that today. Yeah. So we were one of the pioneers that started fractional shares. We've been doing it now for 2.5 years. So it's kind of, it's funny. I read about that and I think, I saw Schwab said that they're going to offer fractional shares. Like, that's old news. That's 2018.
And would Apex be prepared to offer instant settlement or change to T+1 for settlement?
Yeah. So the short answer is yes. And what I would tell you is I look at this, I'm pushing, right, for the folks out there, continue to push on this because I think the industry needs that change.
Is it blockchain?
It's obviously a great opportunity for Apex because we're ready for it. But think about today. You buy a stock today, Jason, that thing settles on Tuesday. It's like crazy. Like when you think about everything else in your life, T+2, right? Because the weekend doesn't count in terms of settlement days. So you don't have to settle that trade until Tuesday, which everything else in our lives is real time. Why isn't this industry? Which again is going to play right to kind of our strength as a company.
Yeah, and you're the thing behind the thing, and I just put it on the thing. Like this is a whole thing that you are, because I do a whole thing like Twilio. I do a whole series. They all follow my thing behind the thing trades. HubSpot. I always buy the thing behind the thing. That's how I've invested my whole life. And people say, why don't you buy the front? Because I believe in the thing behind the thing. Because there's so many things you can do. Insurance, right? You're not. I mean, I don't know if you're. There's a lot of things that Apex is able to do, and I don't think everyone understands the Apex story because sometimes when you're the thing behind the thing, it takes longer. Twilio was founded by my friend from grew up with him. The stock didn't move for years, and then it's crazy because your company makes a lot of this stuff. Will you ever be using crypto to do this T+1 settlement, or you don't need to use blockchain?
Well, look, we offer crypto today, and the way we think about it, Jason, is cryptocurrency is just another asset class. And the superpower for us and what we've been able to do is, like, you think about Coinbase, it's like, great, you can go on Coinbase and buy different currencies, but that's all you can do there, right? For Apex, it's like, it's a platform, for our customers to be able to offer equities, options, futures, fixed income, ETFs, or mutual funds, and cryptocurrency. Like, why should that be any different in terms of the platform for folks?
It's actually unbelievable what you do, and like people, like I wish we had more time because I think I can explain it because I followed you guys for years and what you've done, and I know you're the Peak Six founders. I was at their party 8 years ago when it was like some 80s thing, and I don't even know if you were there, but
you got to come back again. Hopefully we'll have it this year. Come back, Jason.
Hopefully. So, and with the cash, when you raise, with this raise, what do you guys plan to do with it? Other than trying to buy Benzinga, which we're like a 9-digit, Okay.
All right, we'll talk offline about that. Look, two things, simply. One is organic growth. We're going to continue, right? We want to double all, the number of developers within the company over the next 2 years. And then from an inorganic standpoint, again, stick to this platform that I said before, the man or woman behind the curtain is to continue to add pieces to the puzzle behind the scenes in terms of supporting our customers, right? And there's a number of things that today we outsource. Those things we think we're going to insource. We have NDAs with a whole bunch of companies that I think are good targets for us and are going to be sort of supporting exactly where we've been and continue to kind of drive the future.
Okay. Bill, we appreciate you coming on and love to have you on more
anytime,
because guys, all these questions that you're going to get mad that I didn't ask him, I'll put them together. We'll have our producer put them together. We'll send it to the company because they're good questions. And I think when you understand the Apex story a little more, you'll really get this company, because there's in the chat, there's some good questions. And I think when they understand the answers, people will, it's like, no one got Amazon AWS when it started. Jim Cramer called me the biggest idiot ever when I said you should buy it when they started AWS. And then I believed him. I was 23 years old. I didn't know. Anyways, and this is like the thing behind the thing. Sometimes people don't understand it. So, but guys, Apex is powering, you mentioned like 15, like Stash, Wealthfront, all these companies, Marcus, all these companies are doing trades because of you, right?
That's it.
That's it, guys. And it's going public, and it's a SPAC, NSTB. Bill Capuzzi. Yep. Thank you for coming on. Let's see each other soon, buddy. And have a great weekend. Okay.
All right, pal. Thanks for having me on. Good to see you.
Yep. Thank you very much. Talk to you later.
All right. Be good.
Yep. You too. Bye. All right. So, guys, that's Bill Capuzzi, CEO of Apex. Guys, you know me. I say it like it is. This is a real deal company. Real deal thing behind the thing. Thing behind the thing. You know how I feel about these. You know my list of stocks, and you know my returns on my stock. So I'm not telling you have to go out and buy the stock, okay? I'm not saying you have to go buy it. But what I am telling you is go research this one. Go look at it. And the questions you're asking, like I asked that one guy's question, they already do what you said. The fractional shares, market, and limit. I guess I kind of wasted that question on that, but they already do that. So, and I know you guys asked other questions. Are they on the block, or they do this, the T+1, and just all those other questions that I didn't get to. Aaron Bree, please put those questions in a document and send them over to Apex, and then we'll get the answers, and on Monday we'll update you, or Tuesday or Wednesday. But what Apex does is powers a lot of platforms to conduct trading and many more. And I mean, for example, guys, if Benzinga wanted to start trading, so we have Benzinga Pro, where there's thousands of people using Benzinga Pro out throughout the day. If we wanted to start a brokerage and start trading, there's a high likelihood that we would, once we get our approvals, we'd go through Apex. Apex would enable us. They enabled Robinhood, and they had a win-win relationship at Robinhood. It wasn't like, hey, Robinhood just left Apex. There was a win-win relationship. So I'm a believer in Apex, guys. I am, and I'll be there to answer more questions. I'll do more research for you and tell you what my feeling is long-term on the company and stock. And it's one I like. So I need my soundboard, but I don't have it on me. So actually I do have my soundboard. Hold on. Let me get a soundboard before we bring on the next guest. One soundboard. There it is. Okay, I got my soundboard. Here we go. So this is my opinion on Apex. Hold on. Like a thing. All right. So that was that. And then we have another guest coming on right now. 1 second. And so here we go. This is another good, exciting company. Rover, NEBC. We're going to talk about it. You're going to learn about another exciting SPAC. And let's get me to shut up and get him on in 1 second. All right, so we're going to bring on Aaron Easterly. He's on. Someone clicked the button for me. That confused me. CEO of Rover. How are you?
Good. How are you?
Do you like your little music?
I love it.
Yeah, we have like all these little thingamajigs. I just have sometimes fun playing with them and clicking the different buttons. There's like a whole, Jim Cramer type soundboard, videos. It's a whole thing. So where are you? Where are you calling? Where are you today? Where are you guys located?
I'm in Seattle, and our headquarters are in Seattle, but we also have offices in Barcelona and Spokane.
Got it. All right. So what is the elevator pitch on Rover?
So Rover is the answer to the question, what do I do with my pet when I leave town on holiday or going to work?
Got it. Okay. So what do I do with my pet when I leave town or on holiday? So, but I think people use Rover to book dog walkers, right? I mean, that's the main activity.
Actually, dog walking is a minority of our business. We're the largest dog walking network in the U.S., but majority of our business is in overnight care. So when people go on vacation.
So you have overnight care like at places or people's houses? How does it work?
Yeah, I think of it as Airbnb for dogs and cats. So instead of taking your dog to a commercial boarding facility, you can find an animal lover in your neighborhood that will care for your dog like you want them to while you're gone. Typically, it's affordable and it's more human attention and in-home environment. The pets feel less stress. It's the preferred method of caring for our animals for most pet owners.
Got it. Okay. And so, is there ever like a fear that when you take your pet to one of these places, then the next time they won't go through Rover?
Yeah, we have very strong repeat usage, but that was something we thought about from day one. The first thing we did was build a value proposition that goes beyond just finding someone. The Rover guarantee acts as a financial backstop if anything were to happen to the dog. It covers sitter for liability. We also have 24/7 emergency support. The tools that we use help with payments and calendaring. Care instructions are kept track of. So the vast majority of our providers use Rover to manage their entire business. It's not just about finding people. Additionally, we use data science to make sure that we're sending business to people that are loyal and very high quality.
Got it. Okay. And how long has Rover been around for?
About 9.5 years. We launched in 2012.
2012. And did you guys buy anyone?
So we've done some small acquisitions over time. There was a company called Dog Vacay out of LA that we acquired, and a European company called Dog Buddy that we acquired as well.
Okay. And so, like, what is next? Like, is it just let more people know about the story that you're trusted? Like, what is it? Because we got a dog. We got a dog 6 months ago, and my wife, I don't know if she knows about it or not, but what are like some of the things to get excited about?
Sure. So we've been a fast growing company from day one. From 2014 to 2019, we grew at a compounded annual growth rate of 94%. With the pandemic, people traveled less, but one of the other dynamics about the pandemic is the growth rate in animal adoption from households actually quadrupled. And so you gained a dog in the last 6 months is not an uncommon story. The pandemic puppy is a real thing. So for us, all those new pet owners figuring out what to do when they leave their house again and the travel industry rebounds is a huge opportunity for us. We were very conservative during the pandemic, and normalizing our business and growing again is what there is to do.
Got it. Okay. And so you're with the SPAC now, NEBC. How did you choose that team? Were you looking at the process for a while, and just like how'd that come about?
Sure. So we looked at all the options. We thought that with our business, we had this interesting combination of some short-term friction caused by COVID, but COVID actually accelerated our long-term opportunity. So it's a story that needs a little bit more detail to tell, and the SPAC allowed us to share more information with potential investors, which we viewed as nothing but a good thing. The team at NEBC is the True Win Capital Group. They've done a SPAC before. It was successful. They know what they're doing. They have a private equity fund so they can backstop a portion of the transaction. So it's just the right partner, solid investors that have a lot of experience.
Got it. And Rover is one of those picks. So I have a whole pet list. Rover is one of those companies that you're right. The pandemic pet is a real thing. I mean, if you had to figure out the number, I mean, there had to be another 1 million pets purchased. And so in the next 3 years, to me, your growth is going to be insane because literally everyone I know got a pet, or almost everyone I know got a pet. And so when they start traveling again, you're just going to be the beneficiary. It's like the money is coming to you. You're just in the spot. You're like the gold rush. You're the shovels when people start traveling again, right?
Totally. There's a couple dynamics. We've always had this tailwind of increasing pet ownership, and the pet economy grows faster than the real economy. Pet share of wallet is increasing. But COVID has two specific dynamics with it. The first is the wave of new pet owners. And the second is the rebound in travel and potential pent-up travel demand as well. So we expect to double each of the next 2 years. So that's a very rapid pace of growth.
So double in the next, each of the next 2 years?
Each of the next 2 years.
Wow. So if you're doing, I know the numbers are out there, but like, what's your revenue right now?
Last year in COVID, we were about just shy of 50 million net, about between 200 and 300 million gross sales. The prior year, we were at over 400 million in gross sales and about 95 million in net revenue. So we expect to double each of the next 2 years, get back to close to 100 million this year and a little bit over 200 million the following year in net revenue.
And you guys listening, just so we're clear, the net is everything left over after the gross. So 100 million means that they probably did like 400 million in sales. I mean, you guys are 500. You guys keep 20% or something.
Yep, shade over 20%.
Yep, exactly. So, and that's the net to you guys. It's significant money over the next years, and you're not profitable yet. When do you expect to be profitable? What's that look like?
Yeah, we expect full year profitability in 2022, but we expect to be profitable in the latter part of 2021. We were almost profitable in the second half of this year, even in the midst of a pandemic. So we made some hard choices in our cost structure, and it was really beneficial to us. And we scale very well. Our gross margin as a function of net revenue is really high. This is a tech business. So you pay for product investment, and then as you scale, the economics are really strong.
Now, and are you the biggest player in the space?
By far. In terms of digital pet care providers, we're about 10 times bigger than the next biggest player.
Wow. Are you looking at anything on the acquisition front? Not that
We're always looking to supplement. When we started, we were just overnight. Then we rolled out our daytime services and quickly became the largest dog walking network in the country as well. Our view is that we can make the logistics of pet care easy, more people will become pet owners. Not being home enough is one of the primary impediments to pet ownership, which is why so many people adopted a puppy during the pandemic. So our view is if we can make it high quality, affordable, convenient, more people will experience the joy of pet ownership. And so we look at all the things that can be done to make pet ownership easy, and we're interested in all of them at some point.
So what, like, this is an off the wall thing. Would grooming ever be a thing that has high enough margins where someone could come to the house to groom, or no?
Well, yeah, thank you for bringing that up. We're actually live right now in 4 markets with our in-home grooming beta. We expect to roll that out later this year nationwide. For a lot of dogs, going to the groomer is stressful. Many groomers operate hours like 9:30 to 4:30 on weekdays. So you like leave work to go pick up your dog, and your dog starts shaking as they approach the groomer. An in-home environment just works great, particularly for small, medium, and large sized dogs. Less stressful, it's convenient. You don't have to leave your house. Your pet can stay in an environment that they're familiar with.
Got it. And so there's other, I mean, I don't see veterinary. The veterinary would be a hard one, right? Because people have their clinics, but I'm just trying to think, what are other tertiary services, you know?
Yeah, so obviously the nationwide rollout of grooming is priority 1. We're looking at dog training, adoption. Some of the ancillaries around vet could be interesting to us as well. So there are lots of opportunities. The pet services side of the market is expected to grow much faster than physical product over the next decade. And it's also less penetrated. So only 10% of pet owning households pay for commercial services when they leave town, versus like 98% buy pet food. So the pet food market grows to the degree pet ownership grows, or people spend more per bag of dog food or cat food. We grow because there's increasing and accelerated adoption of services.
Got it. And I can expect, I mean, it will continue to grow. One thing that, I mean, this is probably just a tertiary, like a subscription product type thing where pet owners could have monthly, whatever, new bones that come. Do you guys do anything like that or anything like that? So is that just?
Yeah, BarkBox, is an interesting company, and there are similar companies in the space as well. I think when you look at the share of wallet dynamics for pet owners, people's emotional relationship to their animals is starting to become more akin to parent-child. They don't view their animals as property. 95% view it as family members, but 76%, when you ask, are you a parent of your dog or are you an owner? 76% say parent. And so with all that kind of parental concern, it's not just enough to be, is the animal fed, but are they happy? Are they healthy? Do they get excited? And so with that desire to provide that love, like there's a lot of opportunities in the pet space.
Absolutely. And I'm just thinking about it from a pet owner. I mean, the pet is, like everything. And with your company, there's so much you can do, and being so big, and people don't necessarily get marketplace dynamics. It's really hard to make a supply and demand marketplace. And you did that. And I know it because we have a financial newsletter business where we have sellers and buyers, but it's super hard to get accepted thing and to be the dominant player in it. You're just going to grow. It's like I have this thing called the thing behind the thing. And it's like, you're going to grow by definition by more and more pets that are had, and people are traveling again. They're going to. And, I'm talking too much, but one of the comments in the chat right now is someone just saying, and this is a sign of a company that's on the right track, because this means something. So this person wrote, I have to scroll up. Hold on. So someone said, I want to be the CEO of Rover with all the brainstorming, LOL. I got enough of my hands here. Okay. And he doesn't want me. There's no amount of, there's no amount of money people spend on their pet. No, but I want to read this one. Hold on. Oh yeah. Ari wrote, we use Rover's awesome app, and having an awesome app just makes people's life so easy. Like, that changes things, right? I mean, is the app something you spend a lot of time on?
Oh, it definitely is. The pet industry was kind of the poster child for the .com excess, if you rewind the clock enough. And so the industry lagged from a technology investment point of view. Online sales of pet products were late. So we're benefiting now from the transition of pet services to a technology area in the mobile phone. It's virtually impossible or hard to book pet care directly via apps. Websites maybe have a number to call. Maybe there's a form you can fill out. But we think that being able to directly purchase from your phone and book those services is important with the modern pet parent.
I freaking love it. I mean, I'm about to download the app myself. I love it. I for the office, I use DoorDash, but on DoorDash, there's not a good thing for group orders. I can only find Wingstop. If someone had group ordering apps, I literally order Wingstop for the office 3 or 4 days a week, because it's the only one that my orders, in there, and it makes my life easier, and I don't have to think about it. So it's one less thing to think about. With your company, I'm sure that with some of the pet hotels or where the pets stay, you probably can have video offered or photos sent to you, right? Is that something in the app that you can do, or you don't have that yet?
Yeah, no. One of the things that we do during the stay is people send photos, and they send videos, and they send updates. One of the things that's hard about pet services is the person paying for the pet services isn't the one experiencing it. If you go to a hotel, you know whether or not you like the beds. If you eat at a restaurant, you know whether or not you like the food. But the person receiving the care, in this case, the pet, can't speak. And so providing transparency and visibility to the experience so that people have confidence on what's taking place is really important. We provide GPS tracking of dog walks, so you know when someone entered and exited the home, you know if your dog went to the bathroom, you know whether your dog had water. So giving transparency into the experience is critical, and is part of that ongoing value proposition beyond just finding a provider.
Okay, I have a couple more questions, and then we'll be done. So someone made a comment that people put their pet with someone they know, and that's probably the biggest competition to you. That's
exactly right. Yeah. Only 10% of the market uses commercial right now. Most people use friends, family, neighbors. But the interesting thing about our business is 2/3 of our customers come from that segment. So our business is mostly taking people that were using friends, family, neighbors, and find, oh my God, I can find an animal lover that actually wants to care for my dog, isn't just doing me a favor, and I can insist on care standards. It's hard to insist on care standards and the treatment your dog needs when someone's doing you a favor. So most of our business is actually taking that in-home dynamic that people like about friends, family, neighbors, but then transitioning to something where there are care standards and the people actually want to do it.
Got it. And now this is maybe another one of the brainstorm questions. I don't think you do this right now, and it's not in your core, but you'll get why I'm asking this second. You don't offer pet insurance, correct?
We have a umbrella insurance that covers the states, but we don't sell pet insurance to individual pet owners yet.
Yeah. I'm not saying, okay. So Tesla, they don't really do it right now. They don't offer insurance, but over time, because they can track the car better than an insurance company, they may offer insurance, and it may become a big part of their business. And I know insurance isn't, but I just wonder if there's an angle there with insurance, because pet insurance is a big thing, and this app is going to be one of these things, like in China, where in China you can get a bunch of things on one app. I feel like around the pet, you're going to focus on your core, but there's other tertiary things that may come in play, I feel like.
Oh, totally. And I would love to see more pet owners have pet insurance. There is nothing more heartbreaking than a life or death decision related to an animal due to inability to pay. So we would like to see broader adoption of pet insurance. And it has been happening slowly, but we would like to see it accelerate.
Yep. And my sister is a veterinarian, actually. So
nice.
Yeah, in New York, she's a veterinarian and loves it. Like, could have been a human doctor or animal doctor. It was 100%, humans are gross. Animals are, I'm serious. Like, humans like, and so she's a veterinarian. And let's see if any last questions. Okay, hold on. So you're in the SPAC, and your company, your valuation is around 300 and 50 million.
Well, that's the SPAC's valuation.
Okay.
The deal pre-money was about 1.35, I think.
And then, and when do you have to report earnings?
It's a good question. It depends on when the transaction closes. We expect it to close in Q2. We've submitted our S4 and have received comments back from the SEC. And so that's the process we're going through right now. And we update our filings with regards to NEBC and the SPAC recently.
And I'm sure, I don't know what you can say, but like, it's trading below 10, that your company is great. You're going to grow for sure. I mean, you told me 200% each of the next 2 years. I mean, our company grew 80% last year, and we'll do it again, which I think is huge. You're going 200% on huge numbers already. So, like, from the numbers perspective, I mean, you're doing amazing, right? And so, is it maybe people don't know the story yet, and they just don't? Is it because there's a lot of noise in the industry right now?
There's a lot of noise in markets right now, but my take on this is great companies with great unit economics, with strong markets, strong positions, defensible moats, competitive advantages. They always tend to rise during these periods. We gained material market share even in the pandemic. And we're excited about what comes next.
Okay, my last question is, what's your background? Like, what were you doing before this, or how long have you been there? Just a little bit about you.
Yeah, I've been managing marketplaces for almost 20 years, online marketplaces. It's hard to believe that industry is that old. I've managed advertising marketplaces at like Microsoft, for example. There's the search advertising marketplace. I originally planned to be an academic economist, but I happen to also be a dog nut. So you combine economist, tech, and dogs, and hence Rover.
Got it. And so you were managing marketplaces for Microsoft before.
Yeah.
And then you, okay, I love the company. I love it. I mean, this is one that I don't think is getting the attention that it deserves. See, what happens is everyone, people oh, I don't need DoorDash. I just call the restaurant and do this. A lot of people don't want to talk on the phone anymore. I want to hit my app. And I'm sure you have ratings, right? Like reviews. I mean, yeah. Like I'm going to be a test case. Maybe you'll come on next quarter after earnings. I'm going to download the app, and we're going out of town very soon. Maybe I'll use it for this. We're in Michigan. Are you in Michigan?
Yeah, we're everywhere. We even have sitters in the U.S. territories in Canada and Europe, like Guam, Puerto Rico, the U.S. Virgin Islands. This business became so much broader geographically than we ever thought possible. We do a pretty good job in rural areas and suburban areas, not just urban cores.
Okay. Last one. Someone just wrote, you need to get Chewy's mailing list. Right?
No doubt that Chewy has a great customer base.
All right. Well, guys in the audience, if you're listening, they're saying this is the best interview. They get all these questions answered. Guys, look at this company, NEBC. I mean, a lot of these SPACs may not have real fundamentals. Look at the numbers he just gave you. Look at the numbers. 200% growth is gigantic. All right. And often CEOs, just like I at Benzinga, I try to UPOD, under promise, over deliver. So I don't own the company now because I'm interviewing him, as you guys know. But on Monday, I'm probably a buyer. So you can get ahead of me. I love it because we have a dog now, and the dog is like, I was just thinking about it today. My kids, they're 9, 11, 9, and 4, and they've never had like a thing that they just love so much like that. And I was like, it's part of them. When the dog passes away, and I'm thinking that because 15 years on the road, I was like, this is gonna be something that's really gonna affect them. But my daughter, she would pay a subscription if she had this, could look on the iPhone and see where the dog is staying once a day and get a photo. It's like amazing when we get a text. That right there is so much value. And then I could see kids saying to their parents, you must use Rover. You must use, no, I'm being serious. You must use Rover, because then we could see Zoe every day. Because right now we get a random text message. But if Riley knew she could say must use Rover, and if you can make that happen, like commercials, like showing kids with Rover, you get a photo every day. I mean, that's golden. Advertise on TikTok. Get my kid. I don't know if you have any TikTok ambassadors, but that's what you need, because you get the kids and the parents can't say no, right? That's it. So I'm just telling you, because I'm not an investor yet, but I want to be. So, all right. Well, it was Aaron. Thank you for coming on. Great company, great story. Keep doing what you're doing. I know the pandemic, was people weren't traveling, so it hurt it, but we're getting out of this thing, and hopefully we can get you on after your earnings or etc. Keep doing what you're doing, and thanks for coming on Benzinga's Power Hour today.
Awesome. Thank you so much.
No problem. Talk to you soon. Bye. Okay. All right. So guys, that was Aaron Esterly, and you guys, I'm not just being nice and complimenting a company if I don't believe in it, but there's such low-hanging fruit. It was like the Express Spa one time when I bought it because it's such low-hanging fruit. There are so many growth patterns here. That idea I just threw about the kids, and they're probably thinking this stuff. Sometimes people think when they give an idea, they should be compensated, or it's an idea the company didn't think of themselves. I'm sure the company thought of everything I've already said, literally everything. Maybe the insurance one was a little off the wall because that one doesn't totally make sense. For cars and Tesla, it makes more sense, because I think Tesla is going to get a lot of money from insurance, by the way. We can talk about that next week. I have a whole new theory on Tesla. But some of these ideas, like the kids saying, I want my Rover, I want to see the dog every day. I'm sure they're talking about that stuff. I'm just saying it as, whatever. So I don't own it, as you guys know, but I will tell you, let me go back to my trusty Benzinga Pro. We got to change the stuff. I will tell you guys next week. I will. Aaron, who's next? You got to update the stuff in the thing. Okay. I will tell you next week. I'll be a buyer. I just didn't want to buy during the show. They have so much low hanging fruit. Aaron, are you there? I can't hear you. You're on mute, man.
Oh, I'm here. Yeah, we got Robert Roy coming up next to do some options with us. Wealth Builders HQ.
Yep. But so I just want to summarize NEBC real quick.
Those were awesome back-to-back interviews, by the way.
Amazing. And Bill Capuzzi, I wish he's on a little longer. You said a hard stop, but I don't know if it was really a hard stop.
I don't know. It didn't seem like it, but I like to relay what they, what I get told.
I know, but I wish I would have started a little earlier because I had 3 more important questions. But NEBC, I think people are fools if they're and both of those, but NEB, those stocks, both of those are going to be higher. They are. They just are. I mean, you guys hear the revenue numbers and the gross margin. They're marketplace businesses. Marketplace businesses don't have a ton of physical costs. They are going to make so much money. NEBC, it's crazy. I'm actually surprised that stock's not at 10.10 right now, because they're going to make so. I mean, Apex, you already know I'm a believer. Thing behind the thing, but this NEBC, I'm in. I'll be buying on Monday in a decent way, and I won't look at it, Aaron, for 6 months. I won't look at it. It's going to go in my other account. I have an Ameritrade account that I don't look at ever. I bought Google in its IPO, and I never sold a share. And this will be one of those, guaranteed, and probably Apex too. But I don't know. You guys, that's my take. If you guys disagree, you can disagree.
I was going to say it's not. I mean, with the pandemic pet thing, it's not just families like yours that bought a dog. I know so many kids that are my age, fresh out of college, that they were sitting home with nothing to do for a few months. I want to go get a puppy. I know so many people that went out and got dogs during pandemic.
I know, and I'm like shocked. I didn't even think about. There's so many individuals that got dogs, and they're gonna have to use it. Wait, what's up? Am I typing the wrong symbol in?
No, I put up an NEBC because we're still talking about it.
I know. Why did someone write 1010? You mean 1210? Jay Rice. What's he talking about?
Oh, I don't know.
Okay. So yeah. I mean, I'm buying the stock. Like I won't buy today. I'll buy it on Monday. That's the thing. And I'm buying. I mean, because you're whole right. The younger people don't have families or friends, but they're going to use Rover. They're just going to. Like,
yeah, no, I saw a comment in the chat when we were doing it where someone basically said they were sick and tired of asking their friends to watch their dogs, and it's like, yeah, you have a very limited amount of favors you can ask like the same person over and over, and it's like eventually you just don't want to bother your friends. It's easier to get on the app and get someone to do it, you know.
Now there's other apps too. There's someone mentioned in the chat WAG. I get there's other apps, but I like to go with the large and the leader.
Well, yeah, you asked him if he was the leader, and he said by far and away, and that was
yeah.
You know, that's for me. That's a good sign. You know, you find the leader, you find the powerhouse, and you go with that one.
Yeah. So you said you were surprised it wasn't at 1010. Okay, what is the stock price? What is it? Am I looking at the wrong thing right now?
I'm looking at it at 998 right now.
So what am I? Hold on.
Wait, but I don't know if that's right.
Hold on, I gotta see. Chewy could buy. Okay, so Rover to host Analyst Day. Are you on Pro right now? 998. I see 998 by 999.
I just searched on Google real quick. But wait, I'm seeing they got a buy rating. They got an analyst rating. I don't know do we have an article on that? You know, the buy rating today.
I don't know, but 998. I will buy. I mean, I'm telling you right now, I'm buying 1,000 shares or 2,000 shares on Monday. Hopefully, I get it under 10 because I like that. But if not, then so be it. Okay, I don't know what Leah's looking for, but it's okay. All right, so you have another guy, 17. What is your? I don't know what these guys are talking about. All right, what is you want to take on Robert Roy? Then you got that?
Yeah, I got it. Sorry, someone in my house is like blending something right now. I don't know if you guys can hear that, so that's why I put myself on mute.
Tell them to go walk a dog.
We don't have a dog right now. We actually were talking about getting our own pandemic pet, but we didn't end up pulling the trigger on that.
And by the way, did you see how I changed the lines underneath? Because you're just putting, if you look at some videos I see online, we're just putting the name, but not what show they're on. And we have no branding for Benzinga on this thing. So you got to have some branding for Benzinga.
Yeah, I saw that. I liked how you did that.
Yeah, or
Bill Kuzzi on Power Hour.
Yeah, or change it. Benzinga Power Hour, it has this person on, but like you need to put the Benzinga Power, because most people don't know what Benzinga is.
But people watching it know, well, watching it live at least, know they're on Power Hour.
But that's not what happens though. Like I just saw a guy shared on Twitter. Someone sees it, you know. Okay.
I hear you. Yep, that was good.
So please do that going forward because we want the world to be here.
I got a text, but I was on the call with a company I'm writing an article for our small cap conference, and I got a call that I was getting called out earlier on the show. I was like, shoot, I'm gonna have to go back and watch that, see what all that was about.
By me?
I don't know. By someone.
Yeah. About you getting fired?
Oh yeah, maybe. I didn't know that was part of it. I just got
not really. But there was a moment when it was a joke
because Dan was on, and because we didn't have a tweet out that Dan was coming on.
Yeah, I know why. Because we didn't market, we didn't tell anyone that he was coming on.
Yeah,
we had no tweet or anything, and he's like, "Dude, you guys usually give me something," and we didn't give him anything to put out, and so all the Dan fans weren't there, and so I blamed it on you, but Luke said it was his fault.
Oh, okay. Well, that's nice of Luke, but yeah, I'll take some blame on that one too.
Yeah, I mean the whole the whole user base wasn't there. I was like sad. I missed them.
Let's do some. Let's look at some tickers real quick. You want to take a few tickers?
Don't you have Robert Roy?
Yeah, but he's on in 7 minutes. I can bring him on early. Looks like he's ready.
Is this a different show? Like, what are we doing? Look, I don't know what's going on.
Yeah. At 2 p.m. Eastern, we have an options advantage or an options show with Robert Roy. Options.
So no one's.
It's not. Yeah, it's not. Sorry, it's not a Power Hour guest. It's a.
I know. I don't know what's going on. You know.
We have the schedule in the description of the video, I believe. Spencer. Oh, yep. Options explained. 2 to 2:30.
I think I can just read everything. What's DraftKings symbol right now?
DKNG.
Yeah, DKNG. Okay, hold on. So DKNG. All right, hold on. DKNG, DraftKings, high of the day, up 7.19% to 72.47. We are seeing a 72 by 46, 742.9 bid. Volume is approaching 15.2 million shares. Average volume is 19.2. Great day in the markets. Great day in the markets. So that is the story. All right. Tony's going to get us on Sirius Satellite. So, Tony, did you reach out, or do you have us on yet? No, Tony's reaching out because Aaron won't reach out. So Aaron's too tired to reach out. So, all right, that's DraftKings. What else do we got? Let's pull up HOFV. HOFV.
Oh, I got a statement from them when I called. I'm waiting to hear back if we can get their CEO.
We got a statement from HOFV. Aaron Bree here to report. What's the statement you got regarding Hall of Fame?
This is straight from the company. I got to pull up the statement real quick.
Hurry up. We're in a rush. I got to go.
I know. Here we go.
I'm hosting Clubhouse with Josh Brown again at 3:00 today.
Oh, beautiful. Boiler room. Join it.
If you guys have Clubhouse and you come in our boiler room, you can pitch a stock. You got 30 seconds, no micro caps, but you can pitch a stock. But if you come in, will you give me a shout out and say, I love Jason Raznick? Everyone comes on. They're like, I love Josh. I need I'm feeling sad. I need more likes. Wait, who needs a vacation? So it sounds like he needs a vacation.
Speaking of vacation, you know what I'm doing this weekend?
What is he talking about? So I segment Internet Enforcers. I totally disagree. This is the way, because I said something. I talked behind the scenes. Internet Enforcers. I totally disagree with that statement, and that is not even.
Be careful. That's our boss. We have to be careful.
Internet Enforcers. Yeah, you're right. Okay, I almost just put him in timeout because it really.
No, we can't do that.
I almost put him in timeout just now because it really just pissed me off. His statement that was so wrong what he just said, and I was putting him in timeout. But then I actually want to hear his retort back to me right now.
Wait, I still have to read. I have to read the statement. I finally found
Hurry up! You're taking so long. Let's go.
Thank you. This is straight from HOFV. Thank you for reaching out, Aaron. We are aware of the NFTs and working to understand them better. We know that we have incredible content here and are always looking at different ways to monetize our assets.
Okay.
That's it.
I don't want to be rude, but I don't want to call him out, Brett Dorfman. But you never I didn't say his name, Brett Dorfman. Never ask a question, are you hiring? Every company in this world is, sometimes have layoffs, but every company in this world is hiring. Every company in this world. If there's someone that can get things done and execute and not if you micromanage, they're hiring. Every single company. Okay, so if you think you can make an impact at Benzinga and help democratize the world of investing, then we're hiring. And the way we hire now, I don't even care about resumes anymore. I think they're all.
I DM'd you on Twitter, Jason.
What? You DM'd on Twitter. Yeah, but you didn't follow up. The way that I hire right now, guys, you email me and say, okay, do this for a week or send me a couple samples. Send me samples. I'm going to say our last 10, 15 hires have all been people watching the show who are here. Some of these guys are making $150,000 a year. Some are making $40,000 a year, $30,000 a year. I don't know, but all of them have come in this way. And I said, okay, this day and age, resume, schmesume, what can you do? We have a guy come in at 3:00. He's the first guy that did not come in off the show. He came off our LinkedIn job ad. Go to jobs.benzinga.com, but there may not be a job ad that makes sense. Go to our site. We have so many opportunities for growth. Go look at Bloomberg and Reuters. They do $20 billion in revenue. We do $25 million in revenue, and we did, $10 million last year or the year before. So that was last year 25. Then 3 or 4 is 10 million. Then we'll do 40. There's so many holes that we can grow, but the only way that it's a fit here, do not join Benzinga if you're just looking for a job, because we're the worst place for that. This is a place that you have to be proactive and make things happen and follow through. If you say you're going to do something, you do what you say what you do. And that's it. That's it. And then it's an unbelievable opportunity. The sky is the limit. You can make relationships with the most powerful people in the world. You can talk to Kevin O'Leary one day, and the next day talk to, I don't know, you name it.
Bill
Capuzzi. Jeff Bezos. Who?
Bill Capuzzi.
Yeah, Bill Capuzzi. Or Robert Roy, for that matter. So that's it. Cool jobs at benzinga.com, and that's it. So I'm sorry. People ask me my hiring and this. And if you want to send an email to me, send an email, but just do some bullet points, jason@benzinga.com. But if you can get shit done and be an executor, then I'm good for it. But 90% of people that I've talked to are guys who like want to come up with strategy and don't want to execute. I get emails daily. Jason, if you guys did this, or you guys, you posted a clip on Twitter of your interview ahead of time, or you went on Twitch and did this, or you created a Discord and this. Yeah, all these things are good. Some of the stuff we do, some of the stuff we don't. The idea is 1% at this point. It's execution and doing it. And I just learned that most people don't like to execute and do the hard work. That's what I'm not saying everyone. I'm not saying everyone. There's people that work way harder than me, but most people don't want to do the hard work. If you're willing to do the hard work, you'll do amazing things. Aaron Bree is new here, and he went through some struggles the first few weeks, maybe first month. But then he started following through and doing and not leaving a stone unturned. But he knows if he doesn't, then he won't be here, because the sense is we're relying on him to make this stuff happen. We're relying on him. I'm going to more and more over the next 2 weeks, 3 weeks and month, take myself out of the day-to-day at Benzinga. All these little things like, why don't we put the link in the thing like I just showed Aaron? Aaron has to think about it. Aaron has to say, wait, people don't know if it's on Twitter that it's Benzinga because it doesn't say Benzinga. I'm taking myself more out of the day-to-day because I'm going to go do more overall stuff. Aaron has to go do that. And so that's what we look for. That's it. That's it. I know we have another show starting now, so we are going to end it. Thank you for tuning in. We love you. You're the best. Does Benzinga have a yes? We don't
read those comments.
No, I'm going to. Clubhouse Rewind. I know I will. I don't care. I started the Detroit FinTech Association Academy. So I go into Detroit high schools and teach financial literacy because I thought it was a social injustice that in Detroit, there's all these job training programs for physical labor, but not for the knowledge economy. So in Detroit, they don't know necessarily what an investment banker is. They don't know you can do this, a credit analyst. So I created a program to teach students, because when we put job ads up, the diversity of people applying is so 90% not diverse. And so I'm like, what can I do? People complain, oh, there's not enough job applicants that are diverse. So I'm like, I'm tired of complainers. That's like this hire this. I'm tired of it. So I built a program to go train students in Detroit high schools on financial literacy so they can get jobs in finance. What are you doing out there to change the divide? What are you doing out there, Clubhouse guy? Where is he? What is he doing out there to change it?
Someone said they would go buy an iPhone today if you give them a Clubhouse invite.
I'll give him a Clubhouse invite. But again, when I put up job ads and I put them right in Detroit high schools and they don't want to come to Benzinga, so I'm going to change. I've been working to change it. I got whatever. I got celebrities involved with it, the whole thing. And there's a Wall Street fund in New York that's doing this. So again, wherever you are today, wherever you're commenting, say, does Benzinga hire this? Dude, impact the outcome. When I started Benzinga, last thing I'm going to say, Robert, and I'll stop. When I started Benzinga, guys, listen to this. In my basement, 2009, 2010, when I was more anxiety and, couldn't live, like I was a mess, I hired people. I didn't know if they're white, black, Asian, whatever. I didn't know if they're a guy or a girl. One person worked for me for 6 months. I thought they were a girl the whole time. It turned out to be a guy. The person's name was Jamie. I don't look race, creed, color. But then I was looking at our resumes. I'm like, why are we not getting a more diverse set? So I looked around. I went to Cranes. I asked them what they do. They didn't really have anything to present. So I created a nonprofit, a 501c3, to go in Detroit high schools on financial literacy and try to impact the outcome that way. I don't know what you're doing, Clubhouse, man, but it's time to impact the outcome and not sit on the sidelines and have time to come chat in a room when you could be out there changing the future of America and changing families for the rest, for generations to come. I live one life. I'm going to use that time to impact as many people as I can in the most positive way that I can. And that's how I'll live my life and be happy. Thank you. Have a great day. On to Robert Roy.
All right, thanks for that, Raz. I'm going to bring on Robert Roy for Options Explained. Let's get AB out of there. Let's get Raz out of there. Let's get the screen share out of there. Thank you very much. Let's do this. Where's my... 1 second, Robert. Here we go. Jeez Louise. How are you doing today, man?
Hey, how's it going, man? How's everything?
It's going well. It's going well. It is a Friday. It is a quad witching day. It is an S&P rebalancing day. But all things considered, I guess I don't know what my expectations were, but seems to be rather quiet out there. What are you seeing out there?
Yeah, interesting market with some of the flip flop that we've seen in the S&P. I've got a position I need to manage when we get done. I've actually been teaching all day today for our high level coaching groups. Literally just got off with them now. We did a couple of trades inside of there, but overall, it's just interesting. Comes to Friday, right? If we're closing where we're at right now on the S&P, I'm not sharing my screen there. Is it okay if I share it?
Yeah, go for it. Let's bring it on.
I know it's always a process of which screen when you got 6 monitors to go through. There we go.
I know it. Don't I know it? There we go.
All right. So if we're looking at S&P 500, if we close where we're at, I don't want to say concerning, but we're underneath the 8 moving average. The pink line is an 8 exponential moving average. We have got to get that close back above there. Whether it's today or Monday, if we stay down here now for the weekend, we've got the potential of going back to that 3,900 as we did today. And you can see where we tagged. We went to the 3,900 confluence of the 21 moving average. We went to the 3,890 level, which is where our fib level is, the 236. For those of you that are not familiar with Fibonacci, write these words down. 0.236 equals hesitation. It is a hesitation level. I just want to see us get back above the 8. So give me up somewhere about that 39.30 level as a close or higher today, and it would make me very happy. But I'm not disappointed. We had a good run the last week and a half. That pullback is necessary. But after yesterday's thrashing, I would like to see a little bit of a move up and not deadheading at the resistance level of the moving average. But overall, looking good. So hope everybody out there is doing well.
For the most part, yeah, I think so. I mean, we're green, are we not? That's a good sign. We're green, though we are still in the red for the week.
Yeah, the Dow is down on the day, but S&P is up, NASDAQ is up. So overall, that's good. I've got a long-term Apple position, a little underwater on it still. Came back a bit after the retracement it had, but so definitely I'm happy to see the NASDAQ up considering where it was. So overall, that's great. But I really want to talk today about there's a strategy called renting out your stock, and it's known as something called covered calls, right? Covered calls is the name of the strategy. So let me go ahead and do this. Let me go grab comments so I could see what's going on there. And there we go. Perfect. So basically what we're doing is this. If we go ahead and find a stock, and I know a couple weeks ago when I was on the Power Hour with Luke, we were talking about, or he had just got done talking about Ford. Ford, right? I'm a big fan of Ford. I've had it for a little bit now, but I'm not just holding it. I didn't buy it at, let's say, $12 and now it's sitting at $12.80. I'm like, yes, I'm up 80 cents a share. No, I want to go ahead and rent that stock out. I want to collect rental income. So here's the first question I have for you guys. Don't put it in yet because they'll get lost in the comments. But if you have stock that you own, but you have to own at least 100 shares of the stock and or 100 share increments, then I'm going to want those ticker symbols. But just if they're the very small, $2, $3 stocks, we may not find anything on them. But if they are, a stock that has some meat to it, that's got some shares traded on it every day, there may be a way that you can collect rental income on that stock day after day, week after week. I rent them out every single week. Ford was rented out for next week. I closed the position out today and rented it out again now for the following week, right? So every single week I'm renting it out. Think of having a house, right? If you have a house that you own and it's a rental property, not where you live, right? You're not going to buy that house and say, well, I'm going to just wait for 10 years for it to appreciate in value, and then I can make some money on it. No, you're going to rent it while it appreciates or goes down a little bit. It doesn't matter. I'm going to rent it out. I'm going to collect some income, and I want to do it weekly. My goal is 3 to 5% a month. If you're only able to get 3, now I'm 56 years old. As I get up to closer to 60, 61, I'll probably drop down to 2 to 4% because my risk tolerance is different, right? At that point. But if my goal is 3% a month, can anybody tell me how long it takes you to double your account? If you're able to generate 3% a month, how long does it take you to double your account? Yeah, guys, I'll look at the candidates in a little bit. Taylor, I don't know if that's a good thing. Wow, he's only 56. Good, Hertz. Grammy, you sold some covered calls. Guys, there you go. Harry, you got it. You were the first one in. If you are able to make 3% a month, you will double your account every 2 years. It's called the rule of 72. Look it up if you're not familiar with it. Rule of 72. It's about compound interest, right? I want to see 3% a month because I know, and I don't win every month, of course, but if I'm able to generate 2% a month, 3% a month rather, I can double my account in as little as 2 years. Right? And if you think about it, that's 36% a year without compounding. That's a straight 36%, which you are blowing away the S&P 500, renting out these little stocks like Ford, right? So basically, you've got to find a stock that you don't mind owning, right? Because you're going to have to purchase the stock. And take some notes on it, folks. You need to buy the stock in 100 share increments. That's the key, 100 shares, right? So that's the first thing. Next thing is we need to take you into an option chain. We'll put in Ford. F is the ticker symbol. Right? I don't need to have that many open. Some of you are looking at this for the very first time going, oh my goodness, this is freaking crazy. There's so much stuff up here. Don't worry about it. I'm going to break this down to you in just very few columns that you have to deal with. Some of this you already know about. You just don't know it. Right? Here's bid and ask. If you're trading stocks, you know what that is. Midpoint is nothing more than the center of the bid and the ask. That's it. We have options expire. I'll close all these up so we can see them. Options expire. There are weeklies on Ford. So you can see this one, the 19th expires today, right? The 26th is in 7 days. The 1st of April is 13 days and so forth, right? You can see all of the expirations in there. I love that Ford has weekly options on it. That's a tremendous thing to me. If it did not, you would only see these monthlies. Nothing would say weekly. And this is TradeStation. Your broker may look different. But I'm going to look at next week's options, right? And if I am okay with Ford, let's say I'm willing to buy it at $12.82, right? And that's what the cost per share is right now. What I'd be looking for next week is I would be looking at selling the $13 call option. What does that mean? Well, what that represents is this. If I were to go ahead here, you know what? Let's do it this way. Let's grab a notepad. It'll open up somewhere for me. There we go. If I BTO, buy to open the stock, Ford, at $12.80. Good. Nice round number. Right? And then I sell to open, STO. B, what date is it? 3/26/13, C for call. It is the call option. Notice on the left side, you see calls here, right? That's the call option, right? So what are we doing? We are going to get paid 27, well, we'll use the mid price, 27 cents. Let's just do, let's do it this way. 27 cents, 0.27 per share. Right? So what did I, in essence, allow to just happen right now? I went ahead and said, I'm going to buy the stock at $12.80 a share. And I'm going to turn around and rent it out to somebody. Well, Rob, who's renting it? Don't worry. It doesn't matter. Who cares who it is? Right? You've got an online store. You sell stuff on Amazon, and somebody buys your widget, whatever it is, your pen. Okay? You're not standing there saying, who bought it? Who cares? It's done through the market. You have nothing to do with it. The market maker takes care of it through the broker, piece of cake. You then took on the obligation to sell your stock at $13 a share. You see the strike price right here, 13? That's what these are called, the strikes. That is the price you agreed to either buy or sell the stock for, right? And if you're not familiar with options, guys, I'll send you somewhere later that you can go learn more, but you can also go back to last week's show that we did where I actually went over how options work as the basics of calls and puts. So definitely worth checking that out. But you are taking on an obligation to have somebody take your stock away at $13 a share, and they're paying you 27 cents a share to do it for. So wait a second. If I went ahead on this trade and I just look right now, let's grab a calculator. Let's see, it's up here. So let's say that I buy my stock at $12.80 a share and I rent it out for 27 cents. So the formula that we're looking for is this. It's cash in over cash out. Cash in is the cash that's in my pocket. How much did I get paid? Right? So if I am going to get paid 27 cents a share, and I'm going to divide, oh, I don't want to do that there. I thought it was here. 27 cents a share divided by 12.8, right? That gives me 2%. Are you okay with 2%? For a week. For a week. That's what you're making on this trade. So good question, Matt. Where did the 27 cents come from? We're looking at the point was the mid price was 27 cents. It's now changed to 27 by 28. But so we're going to get the 27 cents off of the bid and ask. And let me make it easy, Matt. How about this? I want you to look at the bid and the ask, and I want you to tell me, all of you, think about this. I'm going to give you a choice. If you were selling this option, would you rather somebody pay you 27 cents or 28 cents? I know your answer. It's going to be whatever the most money is, right? No, pay me the 28 cents. All right. So you'd rather get paid the higher amount. Got it. If you wanted to buy this option, would you want to buy it for 27 cents or a share of stock? It doesn't matter. Or would you want to buy it for 28 cents? Well, Rob, I want to buy it for the lower price. Got it. So you want to buy it for the lowest price and sell it for the highest price. Okay. Here's the way it really works. I want you to look at bid and ask. Whether you're buying and selling a stock, it makes no difference. Look at the bid and ask and say, which one do I want? And once you know what one you want, then here's the answer. You can't have it. You always get the one you don't want when it comes to bid and ask. I want the 28 cents. Sorry, you can't have it. You get the 27 cents. That's how it comes through. All right? So what we would do in this scenario is this. Now, by the way, you guys good with a 2% weekly, 8% for a month on this trade? I don't know about you, but I'm in for it now. I'm renting it out every single week, right? Hint, 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 right? You do the way you choose to do, right? So, and I am renting it as short of time as possible next week. I'm not renting it out for weeks and months after that. I'm renting it out right now. What's happening right now in the market? I'm renting it out now. So if we look at this right now, what happens here? What's the worst case scenario? If I sell the stock, I'm going to sell it at $13 a share. That means my stock profit is how much? 20 cents. That's an easy one, right? And that's per share. Remember that. We have 100 share increments that we're looking at here. So you would make $20 on that 100 shares or $1,300 of stock, right? So now what? Now what happens? My option, I make the 27 cents no matter what. That's my money to keep. So realistically, per share, I'm going to make 47 cents on this transaction. So now what happens? To do this trade, if I made 47 cents and I divide it by 12.82 or 12.8, which was the cost of the stock, we're now looking at 3.6% is what I made for a week. For a week. But Rob, they took away my stock. So what? I'll do it on another stock. I don't care. Now, if you think Ford's going to skyrocket and go to $20, maybe you don't want to do this on that stock. But to me, Ford's had a great run at this point. It's going to go higher, but I don't think it's going to skyrocket to $20. I'm okay renting the stocks out. This, ladies and gentlemen, this is retirement portfolio. These types of strategies, which are selling strategies, are what we use in our portfolio, what I use in my portfolio. This is mine and my wife and my kids. This is what our retirement accounts look like, is these strategies right here. I'm a tremendous fan of it. I taught this morning. I had a 4-hour training I did with one of my groups of students, and I had to get, and we started at 10 o'clock. I had to get my trades done first thing in the morning today. Normally I manage all my trades throughout the course of the day. So I went in and took all my covered calls. I managed all those positions out. I spend about an hour a week managing my trades. I've got alerts set up. I'll get a text message to trigger me of something that just happened. But overall, when it comes to the strategy, there's not a lot of work involved once you learn how. Once you learn how to do it. All right, that's really going to be the bottom line for you, is getting good there. All right, so let's see. I find 30 to website, Webcoin, I find 30 to 60 days out pays 5%, 6% a month, and you can get a much lower strike price. I guess it's a balance of risk and time. It is, because we've got so long in there, Webcoin, on how long for the stock to move. When you are selling, here's the rule. All right, and I've been teaching this from 1997 is when I learned it, and I've been teaching since 1999 and trading it since 1997. When you are a buyer, you buy as much time as you can afford. When you are a seller, you sell as little time as possible. That is how selling should be done when it comes to options. Is it normally better to sell on Friday before expiration week, but lately the Mondays have gapped up? So Fridays, it's better. The benefit of a Friday is this. And if you understand what's called theta, and here, if you don't, let me give you a quick history of it. Theta starts with T. T stands for time. Theta is time value deterioration. You're going to have a deterioration of time in your options price. Well, that's good if I sell it, if I'm a covered call seller. If I'm a buyer, it's not so good. So yes, it is better off to do that on a Friday, so that from Friday afternoon to Saturday afternoon, I get 1 day of theta burn or theta loss. From Saturday to Sunday, I get another day. And from Sunday to Monday, I get the majority of a day. So I pick up 2 3/4 days of theta burn, which means the value of the option dropped over the weekend just because time passed by. Theta starts with T. T stands for time. Theta is the time value component of an option. Very important to do that. Now, with that being said, that doesn't mean I don't trade them on a Monday. I do them all the time. Yes, Elliot, I would give up the stock if that happened, without a doubt. So Jared said, Rob, what do you do with a smaller account for stock? Might be high for some accounts starting out. Well, then we do a different trade called a diagonal, where I use a proxy as the stock and I buy an option instead of buying the stock. So I did that with Telray as an example. I bought a long-term option on Telray and sold a short-term option against it. Not a strategy we're going to teach today, but that's the way to handle it. Correct. And Billy said you only go up the stock if it gets to the 13 strike and someone buys it. So if expiration Friday, today, if the stock closed at 13.01, you're guaranteed to have the stock taken away from you today. If today was the expiration, you sold. If it was next Friday and it closed Monday at 13.01, doesn't mean the stock's getting taken away. On expiration day, you're guaranteed to be exercised if you're 1 penny in the money, meaning 13.01. You've got what's called intrinsic value. It's the cash value in an option. You're guaranteed they're going to take it away from you. But there are management techniques. If the stock went to 13.01, I'm going to trade the option. I'm going to get out of the option I'm in. If I sold it originally, sell to open, how do I get out? The opposite. I buy to close. I would buy it back. Maybe I sold it for 27 cents and I got to buy it back for 30 cents. But I don't give away my stock. And now I go ahead and I sell a higher strike price for the next week. There are management techniques to covered calls. There's a lot involved with them. It is not a strategy of, oh yeah, let me just do this. You can, but if you really become good at them, I mean, really, really good at them, you can crush it on these. The diagonals that we're talking about for the smaller accounts, I use them on the bigger accounts, guys. I do it in something that I have called Covered Call Explorer. And inside of that system, my goal is not 3 to 5% a month. My goal is more like 5 to 8% a week on a diagonal. Although I don't normally do them on low price stocks. I do them on stocks upwards of $200, as high as 200. All right. Poor man's covered call. There you go, Big. You got it. Yep. Danny, you too. Poor man's covered call. It's exactly what it is. So Cameron said, can you explain the hesitation level a little bit? Sure, Cameron. So basically, on a Fibonacci chart, this level, the 236, is known as a hesitation. So if I go ahead and switch this over to a template with no moving averages, just to make it as clear as possible for you, right? Here's my bottom of my Fibonacci. Here's my top, right? We pulled back off of there, and I couldn't draw the Fibonacci until we got the pullback. Well, look where we closed. We closed right at that 236. We hung around it the very next day, right? That is why it is called a hesitation level. We tend to pull back and hesitate there. Doesn't mean we're staying there. Doesn't mean we're going down. Doesn't mean we're going up. We just are slowing down at that level. And you will see, look, we hesitated here, 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 bop, 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 over and over and over and over again. All right. That's what a hesitation level is. Good question. No FOMO. What delta do I use? I normally am at a 40 delta is what I'm looking for, not over. I really want it to be 40. With Ford, we didn't have a choice. There was either 7 or 43, I think it was, or something. Thanks, Ash. I appreciate that. Just sold a GM call. All right, so watch. Give me some symbols, guys. Give me ones to look at. Come on, talk to me. Yeah, I'm not going to do that and sing to you, that's for sure. What symbols do you want to look at? I am not analyzing the stock. I'm analyzing it as a potential covered call trade. Covered calls and secured puts are the two best option strategies known to mankind. You might be right there. Let's see. WRTH. Let's see. WRTH. They are not optionable.
WTRH.
WTRH. Thank you for that. WTRH. All right. So you see they are not weekly. You can sell them. I won't. But you can sell covered calls on them. We look for a delta of about 40. It's a very low price stock, so it's a $3.50 or $2.81 is the stock price. I can let someone take it away from me at $3.50, and they'll pay me 18 cents if we go with the mid price. All right, so I get 18 cents a share on this. Not bad considering the cost of the stock. I mean, I'm spending $2.81. That's really not bad at all. Let's see, NIO, NIO. I saw that one in there. Slip away. All right, notice it has weekly options. I like it much better automatically. It's also a higher price stock. Just to give an FYI, for me personally, I normally don't write covered calls on stocks above 40. And we'll call it 40-ish. If they get above 40 is when we go to that poor man's covered call, that diagonal, whatever we want to call it. But using this as an example, and the reason is, so you know, it's all rate of return. That's what it comes down to, is how much can I make. When you get in those higher price stocks, it's harder to make the bigger percentages on a weekly basis or even monthly. So if I'm looking here, I could buy this stock at $43, we'll call it, and I can rent it out for 95 cents, right? 94 cents, 95 cents, right? Let's call it $1 to make it real easy math. What is that, about 4%? If I'm able to take in $1 and I'm going to spend 43, 2.3%. 2.3% for the week on NIO. I don't know about you, but I'm okay with that. SAIC is the next one I see. Monthly options, not a fan of it. Automatically. Here's another one. You see these, how big the strike prices are? What's called the difference between the strike prices there? 75, 88. It's a little bit big for me. So this week works out okay. You can get a decent premium on it. And listen, if you're sitting with 100 shares of stock and you can sell this for $230 for the $100 strike, by all means, go for it. Right? Well, Rob, I don't want it to get taken away. Can I go higher? Sure. Go to the 105s and let someone take it from you at 105, $9 higher than it's trading at now, and they'll pay you 95 cents. Again, call it a buck. Right? Give me a buck. Give me a buck. Buck. That's 5%. 4%. Right? It's great premium. It's just a little far away for me to have to wait 28 days to get there. For me. American Express, AXP. A little high priced, $141. Definitely better off on a diagonal. I've got to, and now if you own it, whole different story, right? If I own this, I'm selling the 143. at $1.43 a share. If you have here, watch this. You ready? If you have $1.43 and you can times 100 shares, right? Because it's worth, one contract controls 100 shares. That's $143. If you had 1,000 shares of stock, that's 10 contracts. That's $1,430 a month. If you multiply that by 12 months, that is well, wait a second, Rob, that's not right. Hold on a second. Oh, we're wrong. Darn. You're not doing it for a month. You guys didn't catch me. All right, watch. If you're able to make $1, right? Or what do we say? $1.43, right? Let's just say $1.43 times 100 shares. So basically, you're getting $143 per 100 shares. If you had 1,000 shares or 10 contracts, that's $1,430. That's a week. That's a week. Let's go ahead. Let's not do 52 weeks. Let's do 50. You deserve 2 weeks off vacation, don't you? Let's just say you do 50 weeks. That's $71,000 a year if, not that you will be able to, if you're able to generate $143 per week on American Express. By the way, if you've owned American Express now for the last 5 years and you haven't written it, that's 7 times 5. That's $350,000 that you didn't collect, but your broker did. Because the broker, not your individual broker, the back office will rent your stock out. You give them the right to encumber your stock anytime they choose. Right? Folks, this strategy is killer. Now, if I owned American Express, I would be looking to rent it. If I don't own American Express and I'm considering it, I wouldn't buy that. The stock is way too expensive for a covered call. I would look to do a diagonal trade instead. Right? Would I do covered calls on expiration day? Absolutely. If I could get any money out of it today, in a heartbeat, there's just not enough premium. Remember that 40 Delta? I can't even get it today on American Express. Can I get it on Telray? I'm not saying Telray is a good trade for this at all today. Can I get it on Telray today? Well, yeah, if I'm willing to go ahead with the $26, let someone take it away at about 60 cents higher than it is now, they're going to pay me 8 cents. It's 2:30 in the afternoon on a Friday. It expires in an hour and a half. It's tough. But yes, I will. In the mornings, I do it all the time on expiration day. If the premium is there, I'm all over it. I am all over it. Danny said, can you put your stock for sale at an extremely high price to prevent the broker, where'd that go, from lending it out? No, doesn't matter. It's their stock. You let them have it, and there's nothing you can do. Let's see. Yeah, easier said than done. What if it skyrockets? You tend to lose on your original position too. Well, options look easier on paper, but can't just walk away with it every week, especially while writing. Well, Garrett, I'm not sure what your experience is. I can tell you this. From my personal experience that I've been writing covered calls every single week from 1997 till now, yeah, you can set this up. I spend about an hour a week. And that doesn't mean I don't check my positions. That doesn't mean I don't have trades go against me. It happens all the time. It's called trading, not winning, period. But a blanket statement of easier said than done might be for some, and that's where the experience and the practice comes in. And just because someone's been trading these for a while doesn't mean they really understand them either. A lot of people are self-taught and really, they're following some 14-year-old on YouTube that doesn't have a clue about this. That's why Benzinga asked me to come and teach on options, because I came in for a couple of shows in the morning and they're like, yeah, we need someone that knows what they're doing about options. You're it, right? Actually, Jason had a cut out for his meeting today, right? But on one of the shows, he wanted me to help him walk through an actual covered call trade where we placed it on his portfolio. He was going to place the trade while I was walking him through what to be looking for and what to do, right? So the money is to be made there with options, guys. You can make serious money. I mean, students that are in my inner circle, right? There are some that are doing phenomenal in there, right? Why? Because they learned a system and it's rinse and repeat. You do it over and over again. Did they get burned? Sure. Some of the free trainings that we do on our website, we do a training on Monday at noon. It's called Power Hour. Ironically, I've been doing it for about 8 years now. And in that training, we had someone come in there a couple weeks ago that's, oh yeah, this week I got crushed. But the previous month, with what he made the previous month, he was well ahead of the game. So are you going to have weeks go against you? Yep. Are there trades go against you? I got them right now. I have trades that I own that I'm underwater on them, right? But covered calls, not for everybody, but a phenomenal strategy in my opinion. If you think the S&P does it for you and you're going to just put your money in that and let it go, or you're going to put your money in mutual funds and just walk away and think that is the way to go with what they charge in fees, right? That's where the problem comes in. Right? That's where it gets expensive, is when you use mutual funds as a way of building wealth. That's why the average person, when they hit 55 years old in this country, has $55,000 in their retirement account. That's why. Because they're relying on mutual funds. You need to learn how to do this on your own instead. All right, guys, it looks like I'm running up to the top of my time here. Listen, go check out Ford. All right, go check out American Airlines, AAL. Go check out CCL, which is Carnival Cruise Lines. These are all great covered call candidates. Make sure the stock fits your risk profile, and you make the final decision on the yay or nay. Is this one good for me?
Robert, guys, smash the like for Robert. Come on. Let's go. Let's get those likes up. Smash the like for Robert. The link is there on the bottom of the screen, wealthbuildershq.com. Robert, you know your stuff, all right? You definitely can't say you don't know what you're talking about, because you know what you're talking about, all right? So we appreciate it. Happy Friday. Hopefully the last hour and a half treats you well. It's good that we had you on a quad witching day. We'll have to talk more about that the next time
Sure.
we do this. And thanks a lot, guys. Smash the like for Robert Roy. We appreciate it. Thanks a lot, man.
Cool. All right, guys. Take care. See you next week.
All right. We've got a few minutes now until our next show. So I'm just gonna kind of hang out with you. I want to run through a couple of ETF things, and then we'll just run through the market. So I don't have time today for a full ETF show, because we've got. I wasn't quite sure how long Robert was going to go, if it was going to be 2:30, 2:45. And then we've got something else happening at 3. But between now and then, let's just run through what I like to do every Friday, or Monday, which is look at the gainers and losers in ETF land for the week, both in terms of returns and in terms of flows. So again, this is etfdb.com, website that I use. Let's get the pretty background up. There we go. All right. Check this out. So if you've been paying attention this year to ETFs, you've seen this before, right? The Breakwave Dry Bulk Shipping ETF, BDRY, right? You've all seen this. Let me go to a chart. BDRY, right? You've all seen this thing. It's been a beast, right? It's up 164% this year. Look at that thing. So I was like, what is this? I realized I don't know what it is. What does it own, right? That's the thing with ETFs. What the name, just because it says something in the name doesn't really mean jack, right? You got to actually look at what it owns. So let's go. Let's take a look about BDRY. So the one thing I did know was that it was a commodity ETF, right? It doesn't invest in equities. It invests in something else. In this case, the dry bulk shipping market via near-dated futures contract on dry bulk shipping indices. Okay, so what does that really mean? It means it just holds futures, and they go into some more detail here. They explain how far out do they go in time. It says the average duration for their futures contracts is 3 months, and they hold futures out 1 to 6 months. Here's what it says: using a mix of weighted average of approximately 3 months to expiration, using a mix of 1 to 6 month freight futures based on the calendar. Okay, so it's a commodity. So it's an ETF that holds futures. So this is great. This is a great way to get exposure to the futures market if you without having to go through the hassle of creating a futures account at your broker. But you got to be extra careful with ETFs that don't just straight up own stocks, right? Because we saw this last year. Remember what happened with oil and USO. Let me zoom out. All right. Oil went negative and everybody freaked out, right? Everybody freaked out and everybody was like, oh, buy the dip in USO, right? But you got to buy the dip in USO. It can't go lower, right? It can't go lower. Well, they didn't know how USO is constructed. They didn't know that USO, by its nature, right, basically has to sell the way the fund works. It owns oil futures contracts that it has to continuously roll over. And that's why if you go and zoom way out on this thing, it's not a good investment because of the way the nature of the fund. USO is primarily used as a trading and hedging tool. But people thought, oh, I'll just buy USO and I'm gonna catch this rip and I'm gonna buy the dip and catch the rally. Well, they didn't know the way USO actually works, right? The like what futures contracts does it own? And in USO's case, they actually rewrote the rules on the fly, right? Because the markets were so screwed that they actually changed how the fund was constructed and how far out they go in time with their contracts. But at the time, I think they only held contracts like a month or two out in advance. And so, yeah, so basically the summary of this is just understand what you own. If you don't understand futures, you should not be buying BDRY if you don't understand futures, right? I don't care that it's up 164% this year. I don't care that it's up 25% last week. Right? If you don't understand futures and rollover and how that works, you should not be buying BDRY. Moving on here. I just want to go through sorry, Big Reddington. Sorry. Old wounds. Sorry. Okay. Let's go through and see what else is up big this week. You see a lot of commodities, right? Look at this. So the dry bulk shipping, palladium, uranium, another uranium. Okay. We see a lot of defensive stuff, right? Infrastructure. Oh, that's not very defensive. Hedged small cap equity. Is this the first page? Yeah. Geez. It's really not a lot that's up this week. Not a lot that's up big this week, right? No real high flyers, which is notable. What was down this week? So many new funds. Yeah. Look at that. I mean, look, you don't need this to tell you that energy had a bad week, right? You can just look at the USO, look at any ETF, look at ExxonMobil, look at any stock. But I like doing this because it to me it like helps me understand themes, right?
What's up, Spencer?
Oh, whoa! I didn't realize you were here. What's up, man?
I just popped in. I saw you talking about some ETFs. I had some thoughts I wanted to share.
You have thoughts you want to share? Okay, let me finish this thing, and then we'll ask you for your thoughts. So energy was weak. Okay, we saw that. What about flows? Let's see where the most flows were this week. Oh, by the way, this is filtered. There's no leverage ETFs included in this screen because leverage is steroids. Fund flows. What funds had the most inflows this week? A lot, mostly defensive, right? Russell 1000 value, Dow Jones is value, ARKK, man. This thing is a beast unto itself. Okay. Total bond market ETF, total VT, total world stock ETF, right? Super defensive, diversified stuff. JP Morgan value factor ETF. Okay. So some defensive names with the inflows. What about the outflows? Gold and a lot of bonds, right? There's one bond ETF. There's two bond ETFs. There's three bond ETFs. There's four bond ETFs. There's five bond ETFs. Six bond ETFs. Seven. A lot of bond ETFs with outflows this week. We can always go a little longer out. Let's look at some 4-week trends. Look at that 4-week trend. ARKK still has the most inflows. So for all the talk about Cathie Wood and the liquidity risk of those funds, they're getting too big in these stocks, and if they ever get a waterfall of outflows, they're totally screwed. Well, ARKK For all the crap that tech has taken in the past few weeks, ARKK is leading the way for inflows. Money is still piling in to the flagship ARK fund for all the crap they've taken the past few weeks. All right, Bree, what do you want to add?
Well, earlier on Get Technical, we looked at a home builders ETF, and that was pretty interesting.
Which one?
That's a good question. I thought it was HBX, like home builders.
Right. So it's XHB. Okay.
Okay. Okay. There we go. Thank you.
Yeah. Well, that's the main. That's the State Street Spider home. So this is to my knowledge the largest home builders ETF.
Which I'm kind of upset because I've been like talking about this since like last May that the data out there was like the average listed home on the market was like on the market for 90 days before it was sold.
90 days. That seems like a lot in this market.
No. That was pre-COVID, and then when COVID hit, it was like 15 days. Like literally, a house would be on the market for like 15 days, and they were talking about this big supply issue that like basically, if you built a home right now, you're guaranteed to sell it in 2 weeks. So I was like, shoot. I mean, this seems like an easy, buy the home builder ETF, whatever.
Well, it's not that simple, right? Because the housing market in the U.S. is entirely dependent on supply and demand, right? So right now, there's a lot of demand and not enough supply. They can really only build homes so fast, though, right? That's the thing.
Right. And there's a shortage of the actual, like, not only the building supplies, but the labor involved in that. So
Right. So you have to factor in the cost of materials like lumber, which has gone up like crazy. And it may seem like an obvious trade because the housing market's on fire, but let's just go to a chart. Let's get this.
Yeah, wait, I got my Benzinga Pro.
Me too.
All right.
XHB, Home Builders ETF. Yeah, I mean, look, it's had a great year. I've seen some questions from chat. We'll get to it in a second. Look, it's had a great year, right? Let me maybe zoom out. Is that a little easier to see? And let's compare this to SPY to give us a frame of reference.
I wonder if anyone who like moved out of New York City and bought a house is like seeing kind of the beginning of the recovery, and they're like, maybe I want to sell this house to move back to New York City or something like that.
I don't know. But look, XHB has outperformed this year, and it's just a question that you're really like you're if you're buying like home builders, right? You're betting on the fact that the housing market will stay hot. So you're assuming a lot of people that pull their homes off the market won't put them back on, and you're assuming B, these home builders will be able to like keep up with production in light of rising costs, right? Because lumber is more expensive. There's a lot of raw material inflation out there. And C, you're betting on the fact that the flight from cities to suburbs is gonna stay there once we actually get past COVID, whenever we actually get past this thing, right? Once everyone's vaccinated and all that stuff. So that's what you're betting on, right? But let's look at the holdings here. You've got a lot of the familiar names, right? Lennar, right? JCI. Oh, that's weird. Williams-Sonoma. I guess.
Oh my God, their stock has gone crazy the past couple of days.
DR Horton, Pulte Group, right? NVR, Toll Brothers.
Sherwin-Williams is in there. I'm pretty sure they're like
probably.
Yeah.
Wait, what is the description? So it offers exposure to home builders, companies related generally to the home building industry. Interesting. Okay, so it's not just like Lennar and Toll and that sort of thing. All right, there was a couple questions from chat that I want to get to. And Cal, what do you use to determine which to buy before it breaks out? All right, I wouldn't look at flows. And Cal, I think that's what you're implying there. I wouldn't look at flows as like a breakout signal, right? I would look at flows as more of like a confirmation signal. First of all, I don't really trade ETFs, right? I like buy and hold ETFs, right? So I'm not gonna like swing trade or day trade like the XHB. That me personally. Some people do that. A lot of them who may do it technically. I don't really see much value in like flows as a trade signal, right? Because really all we're talking about here is assets that are just a derivative in a sense of stocks because they're going to move off what the stocks do. So I wouldn't look at flows as a signal to buy or sell. I would look at flows as more of like, oh, like there's a lot of desire for these types of stocks, for energy stocks, for housing stocks, whatever. If you're talking about a breakout, again, the fund will trade how the stocks in its basket behave. So I would look at a chart to get a sense of the performance. And you got to look at what's in it, right? These funds don't move by themselves. I would look at the top holdings, the top 10 specifically. Most funds have between 10 and 35% of the fund concentrated in the top 10 holdings. So I would look at the top 10, look how they're doing. And that's kind of how I would do it. But again, I'm not really looking at funds. I'm not looking to buy ETFs necessarily before breakout. I don't know if that's a great answer.
Right. Well, I see NCAL as a follow-up asking about if they're cyclical. And that's basically, when we pulled up the chart of XHB compared to SPY, we could see how in the past year or so, XHB had outperformed SPY. So because of the trends that we saw where people were building more houses, moving out of cities, that was the cyclical nature was the inflow into this ETF. And actually, I mean, looking at this, honestly, unless I was like 100% sure that this trend that we saw of people building more houses, moving out of the cities into the suburbs was going to continue, I wouldn't bet on XHB to continue to outpace SPY at this pace. In fact, I mean, you could argue it could be a smart bet to essentially short XHB to say that it will, reverse back to meet kind of back at that 25% that we see SPY at, unless that trend that we saw continues of people building more houses.
Yep. Who just put it in chat if there's a reverse tool? There is a reverse tool. I went over it last week. Oh, it was NCAL. Yes, I went over this last week, NCAL. I went through all the tools that I use to research ETFs. There is a tool or website that is called, what's it called? It's called etfchannel.com. You go there, you search for the stock, whatever stock you want, and it'll tell you which ETFs hold that stock and the weighting of those stocks in that fund. You want my comments about the ARKX, which is not even out yet, right? That's the ARK Space Fund. That's not even out yet. Unless it is and I totally missed it. No, it's not out yet. Look, I own the only space ETF. I have a very small position in UFO. Okay. When the moment that Kathy Wood or that ARK announced their space fund, UFO went up because all the stocks in it went up because people assumed or hypothesized that Kathy was going to buy the same stocks that UFO owns, quite frankly. So that was a good announcement for me. You can see exactly when they announced it. Let me zoom in. They announced the space ARK ETF, right? It was like right here. Like that move. That was it. So my thoughts on it is it will probably be very similar to UFO, to be frank. I mean, we know it'll have the ARK machine behind it, so it'll be actively managed, which the UFO is not. They will be frequently buying and selling, scaling in and scaling out of positions and managing their weightings. And it remains to be seen. I mean, we just looked at the ARKK flows, and the flows are still there. Kathy Wood is still hot. I don't know if she's as hot as she was a few months ago, but the flows are still there. The performance is kind of still there a little bit. But we know she's still bullish, and she's not going to change her mind. So I'm not going to buy the ARKX fund when it comes out. One, because I already own UFO, and also because I don't feel the need to own more than one ARK fund, right? I'm talking about a fund that already, I don't know, it already probably makes up 6% of my portfolio, and that's enough Kathy Wood for me. But if you're bullish Kathy, then I guess why wouldn't you be bullish? If you're bullish Kathy and you're bullish space, then why wouldn't you own it? But it really comes down to we don't really know what they're going to own yet. They haven't even, it's not live. So let's wait and see what they own first before we come out and say anything too much about it.
Do you know how they said, is this going to be one? Because I know they have a couple of their ETFs that aren't actively managed, but most of them are.
Yeah, I believe it'll be actively managed. Like print is not the 3D printing one from Arc.
Yeah, I believe the only two that aren't actively managed is the 3D printing one and the Israeli one. IZRL is also not actively managed.
No, they're gonna. My understanding of it is it'll be actively managed, but I guess I can't say for sure. Yeah,
got it. Spence, I don't know if you see we got our guests here already.
Yeah,
lined up.
Producer AB, help us out. Who we got?
So we got the guys from the Next Trade podcast. I actually just updated the description, so if you refresh your YouTube page, you should be able to see those links in the podcast. Let me play our little intro video, and we'll bring them on.
Let's do it.
Oh wait, I'm not in the right.
Producer AB, come on, man. I know it's Friday. Come on.
I know. Michael, how you doing?
Good, man. How are you?
I'm good.
Thanks for having us on. I appreciate it.
Get you on. Yeah, I don't know. Oh, there we go. We bring on Moses too. How we doing, Moses?
Hey, what's going on? Good afternoon. Thanks for having us on.
Yeah, thanks for joining Benzinga's stream. How are y'all doing today?
Doing well. Thank you.
Better than yesterday.
Yeah. I was getting beat up in the market a
little better than yesterday. Yeah, recovered probably half of my losses from yesterday, but still in the red for the week, so not too happy.
Nice. Can you do me a favor real quick and just give our audience kind of a quick rundown of what the Next Trade is, and then kind of from there, I guess, what Ruby Capital is?
Sure. So I'll start then. So my name is Moses. I come from the alternatives management industry, specifically private equity, and then some real estate and managed futures actually mixed in there, and some private debt as well. So my background is not really U.S. equities focused, but I've spent a lot of time trading. I actually used to work for a market maker and a proprietary trader before I went into private equity. And I learned a lot over the course of my career there, and basically decided, looking at how individual investors behave and trade and do their own research, I figured, there needs to be some kind of a platform where I can give people the insights that I learned through years of working with portfolio managers and actually studying the math behind this stuff, and give them that level of insight, but in a way that doesn't require them to read a textbook to understand what's going on. And so that was really the basis for starting my research letter, Ruby Capital, which I run out of a Patreon page, but also do a couple other things. And so the Next Trade is a podcast that I do along with Mike, and we record it Sundays and Wednesdays, and we talk about all kinds of macro things, portfolio management concepts, ETFs especially. That's something I focus a lot on in my personal research. I know you just had a guest on who was talking about ARC, which I have mixed feelings about. We can certainly talk about that later. But really, the goal is to provide institutional level insight to individual investors in a way that's easily digestible. And so I'm glad that you could have us on to talk a little more about what we do.
Which was perfect for me too, because I started with a meme page on Wall Street Bets. I helped build Wall Street Bets, really, if you think about it. We started off with like maybe 30,000 subscribers on Wall Street Bets when I first started making content there. And up until the GME fiasco, it was 2 million, I think. Now it's at 9.5 million, if not 10 million subscribers on the subreddit. So the whole premise behind our podcast is that the two are not necessarily mutually exclusive. You can be involved in meme stocks, you can enjoy the content, but at the same time want something more. And that's kind of what we provide on the podcast, is kind of blending those two worlds a little bit. And it's been good. The reaction's been really good lately.
Yeah, I think I was going to say we kind of try to keep a similar blend here at Benzinga, because we bring on a lot of guests that are trading the same stocks, talk about a lot of the hot stocks, the hype stocks, and we try to blend that in with some real market education and stuff like that.
Yep. That's huge. It's really important too, because right now you look at the average financial education of the guy on like Wall Street Bets, and it's not looking good. It's just, they're kind of just spamming diamond hands and the monkey emoji, and it's fun, but there's a whole other world to the market than just GME, BlackBerry, AMC.
Absolutely.
Yeah, go ahead.
There's so much about individual investor behavior that's been documented empirically, right? There's a professor out of Cornell named Thomas Odine, who is a behavioral economist, and he's basically spent the vast majority of his career, the last 20 years, studying institutional investor behavior in particular, how they react in groups, how they tend to buy high and sell low, the types of decisions and hype that go around the allocations that individual investors make. And so when you aggregate all those findings and then you look at the moment that we're in right now, this sort of Wall Street Bets is the front page of everything moment, you can see all of it really coming true. And it's such an excellent case study of what really happens when you have a lot of independent actors coming together on a forum in very similar ways they did in the .com bubble, but much more actively than before, and really pushing the movement of capital flows in the market.
100%. Yeah, and I well, it's interesting hearing Mike talk about Wall Street Bets kind of being there from the beginning, because I remember kind of a year ago, like right before the market crashed from COVID, and we saw this like big influx of retail traders. Just looking back at kind of how different the content that I saw on Wall Street Bets was like a year ago before all that happened versus today. And I know there are some other, like subreddits from that are about investing that aren't Wall Street Bets. I think there's like r/investing, r/stocks, r/options, whatever.
There's even an r/finance, I think. And
there's a bunch.
Shootout subreddits for different option strategies too.
Yeah. And it's fun to go through those different ones. And I remember, like I said, like a year ago, like I did see more like deep DD on Wall Street Bets on, r/investing and stuff. So it's still a great place to go if you know how to kind of sort through that information and find what, you can really take away from and what you can kind of leave.
Well, luckily, CNBC and all the financial news kind of refer to Reddit as the Reddit crowd. They don't really subdivide into. I mean, you've heard of Wall Street Bets usually if you're a watcher of CNBC, but it's just kind of like vaguely attached to this social media phenomenon. But there's never been a better time to be doing this, because the eyes on at this point are just the influx of users. I mean, the record number of accounts that are being opened up on a retail level. This is like where you want to be. This in the public space, and having these conversations is where we want to be, at least. And so we don't talk about the meme stocks too much. Like I think, Moses, you're in PLL.
That's right. Yeah, I tend to, I'm very much a value-oriented investor. I come from that school of thought. And to the people who say, value's dead, there's 20,000 stocks in the market. A majority of those have got to be good companies, right? Excluding the penny stocks and the OTC stuff that's really traded on the New York Stock Exchange. There's so many quality companies with good fundamentals in there that are trading at discounts to their true value that can be excellent buying opportunities. And those make excellent opportunities in extremely volatile markets. What we've seen in the last 2 weeks is just this exacerbation of sensitivity risk and rate sensitivity come out in and all these flyers and major stocks out from, mega cap tech into some of the flyers that we see as big portfolio constituents in ARK. So your Zillows, your DocuSigns, your Teladocs, all these stocks that have lost 30, 40% of their value since their peak about 2 weeks ago. And this really, to me, just summarizes what's happening so effectively. It's that there are people who are, for lack of a better term, afraid of doing their own research or don't know where to start. And so what they're doing is they're turning to the stuff that people like Cathie Wood are buying. And they're turning to maybe complicated ETFs that they don't understand the structures of. And what they're doing is they're putting significant amounts of capital in them and then selling because they have a very short-term time horizon. Investing is a long-term game. And I think a lot of the influx of retail investment tends to look at investing as a short-term reward cycle as opposed to a long-term risk cycle. And really the number one goal for any institutional portfolio manager is capital preservation. You don't want to lose money. You want to do everything you can to keep the money you already have. And even if that means you underperform the market, you've still kept your money.
But the market can be both things to two different types of people. And this is something that's a big theme of our podcast. And sometimes me and Moses disagree on it. But I think that companies are now picking their investors more than ever before. We used to live in an age where investors pick stocks. Now it's pretty clear which direction in the marketplace certain companies are going to fall. And they're really choosing their investors because, you're building a company pretty much for the market facing side of it at this point. And a lot of these retail investors are looking for Roblox, or Roblox is looking to get access to those retail investors. And, my whole premise behind my show is that those two things are not mutually exclusive. You can get the benefit of the thrill through maybe derivatives, options, what have you, of owning boring stocks that move in a positive direction consistently, in much more predictable patterns than say like GME or AMC or BB, so those are the types of conversations I'm interested in having, and we do have on our podcast.
Yeah, absolutely. And to add to that, I think the concept of intraday volatility is sort of lost on new traders, and that's fine. The market is extremely complicated, right? It takes years for people to understand sort of what's going on a day-to-day basis, especially if they're actively trading. But it's very difficult to bridge that gap between I'm a retail trader and I manage an equity and options portfolio versus I'm an institutional portfolio manager and I have access to all of these derivatives and exotics on top of my base equities. And then I have all these models that I've dedicated hours or weeks of my life constructing to make sure that, everything I do generates positive return. And I think there is a degree of misinformation that goes around about certain companies and hype stocks. And unfortunately, there's been a lot of bad corporate action as a result of this. The first thing that comes to mind for me is Hertz's initial bankruptcy offering, right? The first ever in its history. Absolutely ridiculous. The company is about to get delisted because their stock is so cheap. They're declaring bankruptcy. They're about to go out of business. They're closing stores. They're selling all of their inventory. And then all of a sudden they say, hey, we've had retail action. Let's go to Deutsche Bank and have them list 200,000 shares or whatever in order to raise money for us to get out of bankruptcy. That was shut down.
Deutsche Bank takes on some risk, some problems there too. Deutsche Bank takes on the liability of doing that. They,
of course,
what a scumbag company.
And this does change the model of mergers and acquisitions and IPO as well, because quality, when you used to IPO, you'd go and you'd approach your pool of, off-market investors or the big wealth managers that work under the arm of Morgan Stanley Asset Management, for example, right? And then they'll say, look, I'm IPOing the stock. I want to get you in at $45 and it's going to go to $60 in its first day. Why don't we sell you 100,000 shares? Great. Now, we don't go to that route because those people are the ones sticking with quality stocks and they're avoiding the Hertzes of the world and the Roblox of the world. And they're going out and saying, look, I don't want any part of this. I'm going to stick to my growth stocks with dividends and the boring shit. Right. And, the retail people are the ones who are being marketed all of these new IPOs. You can see it with SPACs, right? I would say the vast majority of SPACs, at least my research has shown, are owned not by institutions, but by individual investors. The vast majority of SPACs that get hype, rather. So these weird EV plays like Lucid Motors and Nikola is an excellent example of basically taking a side door around the normal process of listing a company, going around, eschewing the regulation that happens in order to raise money. Chamath is an excellent example of somebody who manipulates the system. He touts, he's democratizing investing, whatever, but the guy made $4 billion listing 6 SPACs last year that have yet to acquire a company, right? And he's going to continue to do it this year, and it keeps going and going and going. And now they're even entering the Asian markets, which could introduce another level of volatility globally across equities. So it's really, it's concerning.
Clarify this. We're not like a nonprofit though. Like we want to make money off this happening, the attention that's coming in. And I kind of liken it to back in the early 2000s when the poker boom was happening online. And then there was a lot of dumb money that flooded the market. We shouldn't be upset that there's a lot of dumb money flooding the market. We should be looking for ways to access that dumb money and to make it our own. And so part of it, part of the beauty of Wall Street Bets is it's all right there. The beautiful part about Wall Street Bets and Reddit in general is it's almost primed for running a pump and up. I don't want to call it a scheme because it's not organized, but the nature of Reddit is that you don't care really who's posting, if you're on Facebook or YouTube or any of these other platforms, Twitter, Instagram, you're only seeing the content because somebody that you followed posted it. With all these other, with Reddit as a content aggregator, you're only seeing it not because of who posted it, but because of how valuable the people within that community found the information and how excited it made them. And so it's almost primed for that kind of run up. There was an owner of Wall Street Bets named Jartek. He's he's made the rounds on CNN, on MSNBC. He got kicked out of the subreddit by the other mods. But before he did, while he was making those rounds, he made the choice to say that he was having, I guess, like an existential crisis about what was happening with Wall Street Bets, because he never thought in a million years this would happen. But it was clear to me it was going to happen. Reddit is perfect for the stock market. And, I'm not upset about it. I want to capture some of the money that's coming in because of it.
Yeah, absolutely. And so you've got someone in your comments, Ash Invests, who brings up some good points. The first thing he says, the VC world seems pretty greedy too. Why not let retail join in early growth of companies? I absolutely agree. There should be more private equity opportunities for individual investors to get involved. I think there's a lot of, I think there's a lot of people who think that VC is inherently dangerous, but the reality is that the vast majority of flows in the beginning of economic cycles go to private investment, and private investment returns a lot more than public investment during times of equity volatility. The second thing that he says is, if you want to keep letting institutions win, go ahead, right? Well, here's the kicker, right? Institutions win because individual investor behavior is extremely predictable. Everything that's happened with GameStop was predictable. AMC, BlackBerry, all the stuff really just aligns with empirical research that they've had access to for decades. And this goes back to what I said earlier. If you want to outperform as an individual investor, you have to think outside the box and outside of that behavior, right? You can't look at what everybody else is doing and copy it and pile in with FOMO. You have to think on your own volition and really make sure that you're doing the research that you need to do to pick the companies that do well. And it's not particularly hard. You can set up a screener where you're looking at price to sales ratios of, let's say, under 1. And then you can also add, let's say, a PE multiple of under 10, which is half the market PE multiple. And then an under 1 price to sales ratio would indicate that the company is actually not reflecting in its stock price its total value of sales every year. So that right there is a huge indicator of value. In fact, the American Institution of Individual Investors has a screener for this. It's called their, what is it called? It's called their Tiny Titan screener. And so on that company, there's about 15 tickers, right? So there's, for example, and so I'll go through a couple of them. So Kirkland's Inc., ticker is KIRK. It's been on a tear since January of this year. And today, when the market is flat, it was up 15% this morning as the S&P was down pretty significantly. So relatively uncorrelated, right? That tells me it's a good, stable investment. Another thing, what else do we have here? MWK, Mohawk Group Holdings. I believe they're involved in infrastructure. They've held their price and just been up today 6%. So there's a lot of different companies that you can find that are good, liquid stocks with also stable fundamentals. And those are really the kinds of things you need to be looking for in this market.
Yeah, I'm glad you. Oh, sorry. I was going to say, I'm glad you got into a couple of those because I was curious when you said, earlier you mentioned that there are a lot of these companies that have good fundamentals, good financials that are trading below what you think they should be valued at. So I didn't know if you had any kind of specific stocks in mind. So
yeah, absolutely.
Those Kirk, Mohawk, and I also wanted to ask Mike. It seems like Moses is pretty heavy on the more fundamental value side. And are you like that too, Mike, or do you kind of like dabble back and forth between the growth and value side?
I would probably consider myself a value investor inherently. I do agree with Moses that that's probably the ideology that premises my trades. That being said, like for sure, there's speculation involved in my portfolio more than the average one for personal reasons, not for any other reason. Norwegian is a huge holding in my portfolio. I think it actually takes up like 40% of my portfolio. So I'm not opposed to spec. Yeah,
that's a big position.
Yeah, it's huge.
I'm gonna pull up this. Oh, wow.
That's kind of a big value investor move, though. I mean, there's a lot of guys in the space who manage portfolios that really go in on 2 or 3 stocks, and their theses are firm. They believe in the company, and to some degree, maybe they will it to happen almost, right, by divine premonition. But in a lot of cases, if you really do feel strongly about a company and you've done your research, chances are it's going to pay off, right? The numbers generally don't lie. And if the numbers do lie, the company's fraudulent and is going to get shut down anyways. But
I relish in this retail environment. And I hate to go back to this again, but it premises so much of my decision making right now that like there's been more money flooded into this market than ever before, and that there's some dislocation in the market inherently because of that money that's very fickle. And it's almost like an avalanche, where if you've ever seen an avalanche take place, it only takes one. Sometimes it's just a sound, like an acoustic sound, that causes the snow to get dislodged a little bit. And
somebody could sneeze
down
on the mountain.
Exactly.
Mike, I got someone in the comments saying that that's way too much to hold on one position, 40%.
I totally agree. I actually was even thinking if I should even mention it, but
I have to say I like, making like high conviction plays like that. I know Charlie Munger, who is Warren Buffett's like number 2 for many, many years. He calls diversification. He basically says it's easier to pick 5 good stocks than 100 good stocks.
Yep.
This is something
true. When I was a financial advisor at Morgan Stanley, I found that to be true. Most of my wealthy clients that were happy with their performance and weren't upset about it were ones that picked their own stocks, bought them, and held them for their entire lives and added to their position over time.
And this is something I write about quite extensively on the research note too. The idea that, diversification is something that is so kind of hidden, right? That's not really the right way to approach it. A lot of empirical research, I'm very research oriented, right? So I dig through this kind of stuff like crazy all day. And a lot of research really shows that once you have between 30 and 40 stocks in a portfolio, you're going to match the market return, right? That's just how it is. And the more stocks you add, the lesser that increment from 100% market return to 99.9% market return decreases. So at like 30, 35 positions, you're pretty much there. And what institutional investors do is they rely on really simple principles of information ratios and coefficients, which basically just relate the breadth of your portfolio, so the number of positions that you have actively managed right now, to the amount of time that you need to invest to research all those positions. So if you have a lower information coefficient, you need to devote less time to each individual position in your portfolio, meaning you have more positions, meaning you're more likely to just perform the market, match the performance of the market. But if you're an active manager and you have, say, 5, 7 positions, like a private equity company, right, that might invest in 5 or 7 different companies on the private market, they have a very deep diligence process. They're strong in their convictions and their positions, and they're very, very picky about how they balance their portfolio. And usually that's what results in consistent outperformance of the market. And that's why I really return to, in a lot of my writing, about my background in alternative investments, that alternative investments principles really apply to equity management pretty heavily. And when you really look at those core principles, they'll make sure that you're able to generate consistent outperforming returns as long as you're really careful about the kind of selections that you make. A lot of people say tech is dead, right? I don't think big tech, maybe the level of future returns and cash flows are kind of priced in to some extent into big tech. But you still have mid-cap tech companies that are also involved on the sales side that have good EBITDA and EBITDA margins and solid growth and good cash positions. Take-Two Interactive is one that I write about a lot. Actually, there's a post that I put up about that yesterday. Take-Two is the video game company. They publish for Rockstar. So they publish Red Dead Redemption, Grand Theft Auto, NBA 2K, and WWE 2K, and a couple other big titles. And they're an extremely strong company. They have a fantastic leadership organization or fantastic management group. Led by Strauss Zeller, and he's an amazing CEO who's compensated very well. They have a $2 billion cash position, which is 1/10 of their market cap, no long-term debt. They have solid EBITDA and EBITDA margins, a really good growth prospect within kind of the production and game publishing umbrella, and they're relatively undervalued on an overall sort of PE, discounted cash flow, price to sales basis, just looking at their future upside and the growth in their various segments like mobile gaming and PC gaming. And they're priced right now pretty conservatively at $160, $170, down from about $205 a few weeks ago.
Yeah, I've got it pulled up right here.
Yeah.
See.
So my personal price target on a company like Take-Two 3 years down the line is around 240, 250. And I think they could exceed an EPS of $7 per share, where they currently sit at around 350, 360. And that's conservative. There's some analysts that price forward EPS at like $9 per share, which to me, that could be 5-7 years down the line. But looking at, this is a company that's not sensitive to interest rate shocks as well, because they have no debt. So they're not going to slide like crazy when rates fluctuate. And they're going to continue to grow because they have an excellent production umbrella, good sales. I mean, GTA 5 is the top entertainment product in the world with 130 million copies sold and hundreds of thousands of active players. Then it's still a cash cow every year. I mean, the game's generated $800 million over the course of its life cycle, right? So you have to find companies with strong products, strong leadership teams that maybe not 100% in the public attention, but are still large enough to be conservatively valued in this market right now.
I'm reading some of the chat here.
I want to say I do. I love Take-Two. I mean, I'm a gamer myself, so I can see kind of the well, obviously with Grand Theft Auto. I mean, I would say I know they don't have any announcements for like when the next Grand Theft Auto is coming out, but the next Grand Theft Auto that does come out, assuming it does come out sometime in the next few years, could be like the most anticipated game release of the last 20 years or whatever. And that's not to mention just kind of like the stranglehold the company has with NBA 2K. I mean, from the younger crowd, it seems like that's like the go-to sports game more so than Madden now. And
right,
yeah, I like
the thing for me too is so if you actually dig into their 10Ks, you'll see that in 2022 and 2023, they actually have quite a lot of marketing spend priced in. So a lot of analysts look at that as evidence of, hey, we might see another AAA blockbuster title by 22, 23 really coming out and getting pushed quite a lot. So
someone in the comments. Wait, Mike, I got to ask you that. What comments did you see that you wanted to bring up from the chat?
Stephen, I just actually typed it in chat. Stephen Hockman was asking about covered calls. I am writing covered calls in that position on Norwegian, and I'm also lowering my relative position to my portfolio. So I'm not adding to the Norwegian stock.
That's a smart call from him, saying that you should be writing covered calls. And Mike was one step ahead of you.
The premium, he did. That's true.
But yeah, that's also. I do want to say that, like, back to Mike at the, you said that you do have some speculation in your portfolio, and kind of like my mindset is, even with value stocks, even with stocks that have great fundamentals that you think are trading undervalued, there's still some inherent speculation. Like, stocks at the end of the day are speculative assets.
100%. Yeah, I mean, you got to be willing to take some risk in this market, especially.
Yeah,
at these levels. I mean, retail couldn't have got in at a worse time. Like, this could have happened at any time in history. The GameStop phenomenon was huge because of where it was in its zeitgeist, like where it was in its moment in time. But that could have happened in the trough of a bear market, and it would have been better for retail investors if it did, because ultimately a lot of people are going to get whacked here. But it's the nature of the market to hopefully allow those people to buy back in at a lower price. It just would have been much more beneficial to investing in general and to the breadth of the market if this had happened during maybe less elevated levels.
Let's say 5 years ago, halfway into this bull run, even before the 2016 and 2018 equity corrections, this would have been even the 2018 dip, which we retested the lows of, last spring, would have been an excellent time to get in, and you still wouldn't have had nearly as much volatility as you have now, and everybody would be killing it, right? Wall Street Bets wouldn't be full of what they call loss porn, right? People glorifying their catastrophic losses of like their life savings in Robinhood.
I had some loss porn yesterday, but today I made some back up.
Well, that's the other thing too, is people get scared when their portfolios go down and they sell potentially a winning position because they don't think that it's going to recover. This always makes me think of the guy from Tiger King. Right, I'm never going to financially recover from this.
I love, yeah.
Right?
People are posting that meme all over, like
all the time,
Tech.
right?
Yeah,
every time the market is red like a
yeah.
percent. But if you just keep holding, look, the vast majority of stocks are mean reverting. What that means is, if they have an upward trend, they're probably going to continue an upward trend. So even if you have to sort of prime yourself, if you're going to be a trader, to deal with those intraday volatilities and position yourself with some kind of a delta hedge, being short some put, or having stock, or having diversity across sectors that's going to sort of soften the blow of those losses a little bit. And to me, a lot of that knowledge for me comes from my time in proprietary trading, which wasn't long. It was about a year and a half, but it was still there, right? And I worked for Knight Capital Group briefly, which was an options market maker. They're gone now. They actually were convicted of what was it? Naked short selling, along with Morgan Stanley in 2017, and they got acquired by another group, a bigger market maker. But when you look at sort of the principles of trading, they all still apply. And a lot of people, retail investors especially, step in very emotionally into these sorts of things. And if they can just learn to disconnect that emotion and have a little bit of a longer time horizon on their trades, man, I mean, they'd be killing it.
Yeah, and I do think it's important, like especially with the GME, the GameStop stuff in particular. Like, it's not lost on me that the whole thesis was from a fundamental value standpoint. I mean, Roaring Kitty's like he's like the epitome of like a fundamental value trader in that sense.
That was most of his portfolio was GameStop.
Right. And then it got, obviously taken over by the, like the retail mob crowd. But
but he had his deep convictions. Yeah. He had his super deep convictions, and
which I still don't fully understand, by the way. I still don't get the premise behind buying GameStop here. I'll never get it. I really won't. And it pains me to say that because that's my community.
Well, his premise was that when it got down to $4 where it was at last summer, that it was being undervalued. He was looking at the financials, everything, and saying that fundamentally this stock should really be at $12 or 3 times. He wasn't saying, I don't think, or that he thought GameStop was going to become like the next
$350 or
no.
Maybe it was the value of all their real estate he was looking at. Who knows?
But then why is he still holding it? Like, the dislocation's over. Now
I think he probably, but this is just me speculating, because he's now become like a symbol of it. And as soon as he lets go of that, then he loses his status.
This is my problem with anybody that's on TV or that's a part of this, this moment.
The zeitgeist.
So many of these people are just chasing clout. It's been unbelievable. I have never been, I've never gotten a front row seat into an experience like this because I was the #1 poster on the subreddit before this happened. People reached out to me on like NBC and stuff. And so I see the amount of eyes on this situation and what it does to people, man. Like Mark Cuban would never have been associated with Wall Street Bets 2 years ago. These are people that had raunchy memes that were saying things that were uncouth. And, he would have been kicked out of the NBA. And then he's doing an AMA on the subreddit, 2 weeks after, I guess, his publicist said it would be okay for him to do so. So, and then you got Chamath trying to get a piece of it. And everyone's trying to get a piece of this publicity pie.
Mark Cuban, who, by the way, has eroded some of his net worth since his sale of broadcast.com at the peak of the .com bubble. He sold it he made $5 billion off that deal, and he's now worth $4.5 billion.
Yeah.
So
I think his best investment since then has been the Dallas Mavericks, which that is
right. It's just a sports franchise.
Yeah, that's like something you do as a hobby. That's not
paying.
Really
it's paying his residuals, but it's not growing his portfolio as an investor. Yeah. So people like that step in and they kind of they capture the moment, right? Exactly what Mike was saying. They capture the moment and they try and ride off of it and chase some clout and get some more attention for their personal brand.
But it's even worse than that, in my opinion. It's even more disgusting because it's like at some fundamental level, people believe that these people are experts in their field. And maybe at one point they were, but now if you're on TV constantly, and this is my problem with Kathy Woods. I hate to say, I know people in your chat like Kathy Woods. If you're on TV, I don't want anybody managing my money on television. I don't want them chasing TV cameras. I just want, and I know Kathy's got to drive, inflows and whatnot, but it's left a sour taste in my mouth on anything that I'll ever see on CNBC. I'll put it to you that way. Anything that's being featured on that type of publication, it seems to me to be tainted 3 times over to the point where I'm wondering why it's there in the first place. And that's what I get skeptical about.
Right. And a lot of people forget how some of these companies work, right? Like ARK Invest was originally a managed accounts portfolio advisor. They're not in the business of publicly traded ETFs. Their core business is building private products in private credit and managed equity accounts for rich, high net worth individuals. They test those portfolios on high net worth individuals, and then they sell them as ETFs to retail traders. And there's a lot of risk baked into a strategy like that because the thematic investing that they do for individual clients, those clients may have a different risk profile. They're putting $5 million of $200 million into a thematic investment that, it has higher returns, but it's not the bulk of their portfolio. But then you have a lot of retail investors seeing ARK Innovation and they just jump right into it because they like the holdings. And so they're more likely to lose a lot of money. And, on top of that, I think there's just a lot of risk that there's people on both sides, right? Kathy Wood is a great example. Ray Dalio is another excellent example. People love Ray Dalio. They love what he does at his fund and they love his book Principles. But he's on Bloomberg once a week screaming about the threat of inflation while his fund is quietly buying up every commodity in sight to hedge their exposure to it, right? So you have to take everything talking heads and blue check marks take with a grain of salt, myself included, right? You never know what I'm doing behind the scenes in my portfolio. Full disclosure, I usually am in positions that I write about because I have conviction in them. But when you look at guys, again, like Dalio going on TV screaming about inflation, and then he's not actually telling anybody what to do about it, right? He's not saying go buy tips if you have if you're worried about hedging inflation and you want to match that return, or you want to conserve your cash value, or go buy commodities because we're at the beginning of a new economic cycle and companies that are working in home building and lumber production and certain parts of the real estate market and everything else are making tons of money. A company like LEN, which is one of my favorite companies, it's a home builder that had fantastic earnings, 50% up on every possible fundamental category. And they're just doing so well right now. And people are kind of ignoring it.
Yeah. I mean, Moses, I really like your kind of strategy and the intelligence and research that you bring to the table. We unfortunately do have to wrap up here. We got our At the Close show starting at 3:30. But I would love to have you guys back on again in the future.
Yeah,
Sweet,
absolutely.
Man. Thank you for having us, man. I really appreciate it. And you can find this on our Patreon page, Moses, if you want to let them know about it.
Sorry, I was just going to say, someone in the comments was asking where they could hear more from you. I have the Patreon link and the podcast link in the description. You might have to refresh the YouTube page if you were watching it before the show.
We do a morning show every day, every trading day, Monday through Friday, 8:30 to 9 at least. So
8:30, 9:15, and then we talk about kind of what we think could be flyers for the week. Monday morning, I send out a newsletter to certain patrons with the stock pick of the week. Could be something in value, could be something in growth that I think is really poised from a technical and fundamental level to perform. Key earnings. I post 3 days a week, some pretty deep diligence. This week,
real quick, we do Wednesday night and Sunday night are free podcast on Twitch, nothing to do with the Patreon. Wednesday, Sunday night, the next trade in chat.
Yeah.
Beautiful. And we got those in the chat.
And, this week, for example, I had an article about diversification, another one about thematic ETFs, I believe, and then one coming later this week, or I think tomorrow, about Bitcoin and really hedging your inflation exposure outside of cryptocurrency.
Yep. That's awesome. Like I said, I mean, I don't know how much time you guys have to hop back on, but we could have you on as soon as, next week, the week after.
We're happy to come on whenever.
Anytime. Awesome, guys. All right. That's the guys from the next trade. Y'all give them a like, give them a follow. And let's see. I think we're all set we got Spencer here for At the Close.
All right. It is time for pre-market prep at the close.
3 consecutive highs, opened, matched yesterday's low, and then once it took out there, that's all the breakout momentum traders needed.
Joel.
Good afternoon, Spencer.
I don't know what my expectations were for the day, but today seems rather quiet to me.
It is, it's definitely not a trend day. There wasn't huge fireworks off the open, that sometimes you expect on a quad witch. I did see 4.5 million to buy, on the close, but that could be, once again, that could be easily offset as well. We're not really far from where we were this morning, when we were talking on the show. Oh, let me bring up the right screen here, the right platform. We'll run through the numbers. And then we have Rob Friesen coming on to talk about his week, some of the symbols that he talked about last week, and just some of his overall setups perhaps for next week. We can do more on that on Sunday night. We had that dip off the open, and it looked pretty bad for a while. Got down to 38.75. We made a new low for the week on Friday. So that's important from the fact that, the market did show some weakness near the end of the week. Now, I'm not calling for a big turn or anything, but we're gonna be settling below some weekly numbers that I like to keep track of. So the market is starting in the hole a little bit for next week, but it doesn't need much to get out of it. So we'll keep an eye on that. Currently just bouncing around above and below 39.10. Crude, after getting shellacked yesterday, getting down to 59.01 today, a little bit of a rebound, up $1.61. You have gold continuing just a slow march higher. That's up $7.50 at $17.40. Silver going the opposite way. That's down a dime at $26.24. And Bitcoin, don't think we're going to settle over 60 in the futures. We're up $1,600 and $58,950 in Bitcoin.
So I'm not seeing too much of interest today, to be honest with you, Joel. I know I saw there was
interest from who? Interest from the people? Interest from you? What are you
too much of
talking
interest, like too much of interest, like in the market. Like there isn't like a lot.
Well, you know why?
Everyone's watching basketball.
Yeah.
Maybe you're right.
I almost came out with a short Comcast recommendation earlier today.
You having problems?
I had some problems, and I tried to reboot and unplugging the cord and everything. So then I had to call and spend 15 minutes on customer service, but I got it bad. No major upsets yet, though, is what I'm seeing.
No. Only like intraday headlines that I saw that really, caught my attention. There's, I guess, some widespread Facebook outages today, but the stock isn't really reacting too much. And Rackspace, there was some M&A chatter about.
Wait a second, isn't that gone?
No,
RXT. Oh well, there used to be another Rackspace. RAX. Am I mistaken? Is Bill Big D here?
I don't know.
Bill Big D, help me out, or someone that's old in the chat. Can you guys help me out? Because I thought there used to be a different stock called Rackspace. But anyways, what's the symbol?
RXT. There are some M&A, some baseless M&A chatter. Amazon reportedly showing interest. Yeah, okay.
They're doing okay. I mean, it's trading at the highs of the session.
Herd Scrambler and NCAL says yes, Joel. You are correct.
No, really.
Well, you're
thank
right.
you. So. I resemble that. I know we got some good. All right. S&P's making a little comeback here going into the close where intraday high is 1950. 2350 is the bogey for the pre-market high on the upside. And if they really get this rocking to the south or to the north, I got a target at 39.40, but I just kind of feel like that's out of the question. If there's smoke, there's fire here. I want to be short to stock with that kind of news out there. It's a new stock trading at the highs of the, it's trading right at the highs of the session. If you're a gap fill trader, you got that gap fill, and you got to take your profits where profits are warranted. Deal or no deal on the table. Dion says I'm right even when I'm wrong. That
wait, there was actually another headline that I forgot that was from this morning, and that was concerning Visa.
One more. I just want to say potential double top at if you're looking for more upside on this RXT, pair of highs 25.18, 25.20.
There was a headline out at about 10:30 this morning that the DOJ is probing Visa's debit card practices for antitrust competition practice.
That's not good.
No,
that's not good. Well,
but then again, how often do these things actually result in anything? Is my question.
Well, the bad news is it's down 11 sticks. The good news is that it's right on.
Only down 11 sticks now. I don't know.
Yep. Bad news is though, It's right on the lows of the session. And, when you're leading down on a low area, 208.67, that was your low going back a couple weeks. Your current low is right in that area. So maybe you hope that this low catches it. But I don't know. That's a big red bar. Had 2 other red bars. So, this is one, if you're looking for candidates to take home long over the weekend, this one, I'd say it's kind of leaning against you. I have no idea what the noise is.
Let's just, before we grab Rob real fast, let's just do a quick look at the S&P adds and deletes, just because I haven't looked at them all today.
Okay, let's do that. It's fun.
I'm a little curious. So Penn, up 6% today.
Yeah, but in perspective of where it was, that we talked about that this morning with Triple D. Got off the mat. If you're buying this thing at 140, you're dumping it at 110. For next week, we got an area to look at. It's very easy. The weekly low here, 111.59. That low was protected today. You had another low in that area. So let's get back half of this move from 140 to 110. Maybe take you up 127, 128. Doesn't look bad. I just don't like, note your weekly lows, folks. And, you take out the weekly low, you got to go. But what do you think about all these gambling apps, Spencer? They're giving all these people all this free money.
No, well, not everyone does the giveaways, right? Like,
well, why wouldn't you?
Well, why wouldn't you? If you want to save money on, you want people to actually use their real money. It's every offer that you give is money that's costing you, right? Like, as a business.
If you think you're any good and you're putting $1,000 in,
no, I know.
Aren't they giving you like $1,000? Am I misreading these ads?
Yeah, from the business perspective, right? Like, not every company wants to give away all that money, right? It's a giveaway.
They're all doing it.
Some more than others, right? I know DraftKings is doing it, but I don't know.
They're all doing it.
I don't know how much possible is,
Because here's my thoughts on it.
Yeah.
Okay.
Yeah.
So Spencer Israel,
yeah,
you got $1,000.
Uh-huh.
You put it in one of these apps.
Mm-hmm.
And they give you another 1,000.
Mm-hmm.
Then you lose that 2,000. You lose 2,000.
Yeah, sounds like yesterday. Okay.
So you going back to the well? You putting another $1,000 in there? You refueling that puppy up?
Look, I'll be honest. I am not the real person to talk to you about sports betting. No, I'm afraid of my own. I'm afraid of sports betting because I'm afraid I would like it too much. So I really, really, really try not to do it.
There's Mitch. Is Mitch chuckling in the background?
Mitch is laughing. Mitch has much more experience than this. I'm a total sports betting noob whale because I really, really try to protect myself by not playing the game.
I make income on this.
That's great.
Hey, Joel, I'd have to agree, though. I have to agree with Joel. I want to reiterate what Joel's saying here. Definitely the promos you got to watch for. And I actually pay attention to that because in the long run, it's kind of like their marketing scheme. Essentially, it's their marketing scheme. So the one that I've seen the biggest promos from is MGM, and that's the platform I'm on, guys. And there's a reason why. They give me free money, and if you give me free money, I'm down to play. So I think it's really at advantage when you look for those promos, but you gotta look for the companies and how much they're giving away. But like Spencer said, some less than others. So but the limit is a lot of the times for the match that you're talking about is 500. So at least they have a somewhat limit. But
why do they give you that?
Dude,
because they want to keep you.
It's all customer acquisition. Yeah, it's all customer.
Yeah.
Well, because they know you're going to lose your original stake.
No,
they
know.
They know it.
Yeah,
the odds are 50-50 at best.
And the point is, I'm already here. I already have the app. I might as well just keep going. To Joel, that's what Joel's getting at. I think
exactly.
Yeah,
exactly.
But this weekend, Money, 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 money. Dun, dun,
I
dun.
wish I had a.
Money.
My soundboard's not plugged in because I was watching basketball. But if I had my sound
The
plugged in, I would do my sound effects.
I just, for full disclosure, I'm all about, pools and suicide pools and, low risk,
Yeah.
high payouts, right? I mean, I've done my thing, betting on individual games and spreads and got hooked by a half a point. I mean, it's a tough game. I think you're much better listening to pre-market prep and also looking at odds and probabilities. So if that's not a great segue for Rob, can you bring in Rob Friesen?
I can't. That was me.
Show me the money!
All right. Feed it to Liddell. One-on-one. That's my basketball.
That was basketball.
Let's get
That
the
was
basketball out of there.
EJ Liddell
That was
from Ohio
embarrassing.
State.
That was embarrassing.
So
Rob
now
Friesen.
you guys know when we yell at Spencer during the show because he's not paying attention. This is what he does during the show. He's like watching TV. He's playing with his Rubik's
Rob,
Cube.
Get me out of here,
His
Rob.
slinky
Save
hand.
me. Oh my God, save me, Rob. How we doing?
You guys are like shock jocks, aren't you?
Oh no! Oh gosh, no! I certainly hope not. Rob, how'd the week treat you? It ended up being, all things considered, a rather quiet end to an eventful. I mean, Wednesday, and Thursday were very eventful days. Today, not so much.
Well, I mean, we had Fed, so you're always going to have some extra movement there. I mean, I can't say that for every Fed meeting we've ever had, but this one was particularly important because we're leaning on every word as to whether there's inflation to be worried about or not. Yep. And this 10-year has certainly had its rally here. So with rates rising, I mean, the question is on the table: is this short-lived, or is this?
Don't tell Jerome Powell that, Rob.
Well, what we don't like is that it seems to be like catching them a little bit by surprise, whereas
He ain't
traders,
moving now.
Traders
he's like an iceberg. He's like an iceberg.
Yeah,
he's an iceberg order. He is just, they're coming at him, and he is just not moving.
Yeah. Well, listen, on a more important note, you can plan your trades a week ahead of time, a month ahead of time, believe it or not. Joel, we talked on
Let's
Sunday, and even last Friday, we talked about this Friday. So maybe you can pop up that dashboard.
Yep.
That I sent you on your Skype there. So
let me see if it showed up on StreamYard.
The key is that, there are events that continuously repeat. And even though things are new and things are different, history is still there. So we look ahead, and the third Friday, there's symbols that you can take long, there's symbols you can take short. We recommend, looking at things from a relative performance basis instead of being absolutely naked to the market. Because here's an example. You could have bought all the stuff that's on the left side of that screen there, the green stocks. And what if the market, went into the abyss today? Maybe they wouldn't perform as well as you had liked them to, or would maybe they're all down. But if you had shorted some as well, then you would be involved in the relative performance between your longs and shorts. And so I know that some of our subscribers have taken exactly those trades today, and they've worked out to about 0.27% return on capital. So, we talked about it on Sunday. How can you possibly have your trades for Friday a week ahead of time?
Correct. And then now that's why I'm not going to ask you about your trades for next week, because
we can talk about, hey, listen, going into Monday. So there's a seasonality for every day, not just special events like expiration or first day of the month or whatever. But how about a Monday in March? Just generically, a Monday in March. It's looking like gold is, GDX, GDXJ, GLD are looking pretty bullish for Monday. And that's just from a statistical point of view. I'm not I'm not an advisor. I'm not recommending it, right?
Do you have something with a Monday in March following an expiration?
I don't have that, but I have just Mondays in March in general, or I can do Mondays in every month. What's every Monday look like versus what's a Monday in March look like? So for Monday, we're looking at gold is favored, and energy like oil, even the financials, KRE and XLF are looking weaker for Monday. So I know they've been recently strong because of the interest rates rising, but Monday is favoring gold over financials. Don't argue with me. Let's just see how it plays out.
No. I'd only argue with my wife and my kids and Spencer and Dennis. Could you just go in a little bit more detail what we're looking at here? And then I know you got some positions going into the close. Can you just explain, what we're looking at here? And
so on the left-hand side, the far left, it's giving you the odds of it being up for the open to close today, basically. So this is basically looking back in history at all of the third Fridays of the month and saying that this is how they perform on an open to close basis for the day. And on the right-hand side is the stocks that are favored to go down. So example, you might have taken a few shorts. You can always call it out by price of the stock, right? Like if something's very expensive, you might eliminate it or that kind of thing. Or if the odds are quite low. Like if you look at XEL, the odds were quite low on that one. There were only a 25% chance of it going down. And
okay. All right.
We lost you. Okay, go ahead.
No, you didn't. I'm still here. I just want to go into real quickly before we let you go. There's a lot of symbols here, right? And not everyone can employ all those symbols and all those strategies, right? What do you have? Like what do you recommend? I mean, obviously on a pattern day trader, retail platforms and whatnot, you're limited in what you can do. What's your solution? And we're just bouncing around like a ping pong ball here, folks.
I mean, if
we
you
are
have,
just moving around.
If you have enough capital, I mean, you can certainly spread it out into an abundance of strategies and different time frames. If you're really limited on capital, it's going to be challenging, especially with things like pattern day trader rule and stuff like that. So if you're really undercapitalized, I would recommend moving towards a prop firm. And if you got all the capital that you need for working with various strategies, then stay retail if you want. But the thing is, it's always better to spread things around and not concentrate so much capital into one idea. I find that the fear of missing out, the FOMO, causes people to take risks that you wouldn't normally take in life. That's sort of like when possibility's in the room, probability just disappears. You don't think in a probabilistic terms. So the fear of missing out tends to get people concentrating capital into a few names, and it may work out, it may not, but I'd rather focus on the earning side of the business, do things that are boring, that are predictable, things that we have data for, and just do it over and over and over and earn money from the market rather than try to win and hit home runs. This isn't, well, you do the same thing in sports betting if you wanted to make actually a living from sports betting. I mean, I know some people that do really well at sports betting. I don't know if you're one of them or not, but they have a certain way of approaching it, and a lot of it is
odds based.
Yeah, it's definitely odds based, and it's definitely like I even had a guy making money on. He was one of my traders, and he was making side money on horse racing, and
we talked about that.
Yeah, he only bet like Long Island, or I mean Hollywood and Long Acres or whatever.
Los Alamitos.
Yeah, I forget the two ones. I'm not into it, so I don't know. But it was one in New York and one in LA that he was always betting on. But he would buy handicap from 2 or 3 other sources and then do his own handicap. And he did really well. So, I mean, it took a lot of effort on the data side for him, but it produced. I just don't see a lot. I don't see a lot of discretionary traders making money from concentrating capital into a few ideas by trying to figure out, what the stock's going to do for the day off of, charts or even fundamentals or opinions or, the talking heads or whatever. I just don't see them doing very well. I've had a lot of them.
You know what they say, Rob? You know what they say about at the bottom of the sea, there's a lot of sunken ships. Right?
Yeah,
and what does everyone what do they all have? What do all those ships
on the
have
ocean
in them?
floor is still the chart. Yeah, they're charts.
They still got the chart room. That's correct. All right, Rob, we're going to let you go here. I am going to post a link. We're going to do our Sunday night gig again, and we are not going to be interfered by any Michigan basketball because we play tomorrow. And hopefully, if we can beat Texas Southern, we play on Monday. So we'll be at our regular time, 6 p.m. I just put the channel on there. I'll be tweeting it out, and hope everyone can come and join us and see how the future's open and see how things set up for next week. So, Rob, thanks for reviewing the week, and we'll look forward to what Stock Odds has to say about next week's action.
Sounds good. Thanks a lot.
Thanks, Rob.
Yeah.
All right, Spencer. We only have 6 minutes left here.
Wait, maybe we should have asked this before we let Rob go. But the Stock Odds Seasonal Almanac, where is it available? I don't know, Dimitri. You'll have to tune into the Sunday broadcast and ask that question. That's on Joel's Twitter at Spoos because we don't know that, but we should have.
We'll get it. Well, I don't think
asked
it's
that before
written
booting
yet.
Rob. Sorry, Dimitri. I'm looking ahead to next week, guys. Not much on the calendar. A couple of things of note. Jerome Powell speaking again. This time in Congress. I know, Joel. I don't make the schedule, okay? Just know that. I don't make the schedule. He's speaking on Monday. No, well, he's speaking Monday, but really the main thing is going to be, was it Tuesday morning or Wednesday morning? He's going to be in front of Congress. Make sure I got the date right. Yeah, it's Tuesday at noon. He's speaking in front of the House Committee of Financial Services Tuesday at noon. So you want to have that on your radar. And also Tuesday is a big day. Tuesday is a big day. Tuesday is the day we've all been waiting for.
Retail earnings?
Specifically Tuesday afternoon. A very specific retailer, Joel, has earnings that we're all waiting for.
Lululemon?
Lulu. Get Lulu out of here. No, forget that. We all want to hear from GameStop. And they report earnings on Tuesday after the close. The conference call is scheduled for 5 o'clock Eastern, which means it'll probably be out around 4, the numbers. And I'm not sure. Benzinga may try and I'm not sure about the legality of this sort of thing, but if it is kosher, Benzinga may try to do a show and a live stream and react as it's happening. Mitch and I will have to talk about that over the weekend. But GameStop earnings Tuesday afternoon. That's going to be the story of Tuesday. I can't wait. I'm excited. And that's the big announcement for as far as next week is concerned. There's really not much on the calendar. It's GameStop, man.
It's not gonna be about their earnings. It's going to be about.
Nobody cares about the Q. They're reporting for Q4. Who cares? Nobody cares about the quarter. Nobody wants to know about the quarter. Everybody wants to know about what's going on. Are you raising money? What's happening?
Yeah.
Is the government talking to you? Is the SEC? What's going on there? That's what we want to know. All
right. Well,
also, Joel, I have some trivia for you. Some college basketball and stock market trivia.
Okay.
At the same time. There is actually a publicly traded company. There's a publicly traded school in the tournament this year. Do you know who that is?
A publicly?
Yep. There's a for-profit college. They're publicly traded. They are in the tournament. Can you get the school? And bonus points if you get the ticker. The ticker would be insane if you got that. All right, I'll give you the ticker.
Give me a hint.
Give you a hint. It's in the western half of the United States.
Someone said DeVry. Is that it?
I thought that's in New Jersey, I think. The ticker is LOPE, and they get that from their mascot, which is the antelopes, if that helps you at all.
No.
No? All right. Grand Canyon University. GCU. I'm all over this trade. All right. They're a 15 seed. They'll play in Iowa Saturday night. And
GCU?
Yeah, Grand Canyon.
It's not coming up for me.
Well, no, because the ticker is LOPE, LOPE.
Oh, okay. All right. Let's take a look at it.
Well, wait. We lost your charts. Bring your charts back.
Okay. All right, hold on here.
LOPE. If they beat Iowa on Saturday, that means that means they play Monday during the market.
You got me on that. I was gonna say no. You totally stumped me on that, Spencer.
Hey, points for Spencer.
Yeah, Spencer, get you out of the doghouse for being so lazy this week. Let's see, LOPE, LOPE.
Hey, where are your charts? Come on.
I did. I got it off. LOPE.
No. Oh, there we go. Okay.
Some people were looking for the upside. There's some good resistance here.
Yeah.
But if they take the lead and they can bust out, I'd say 112. S&Ps are completely coming undone here. I was thinking about this, and I was trying to look for a whole number, where they would carve people out. And I was looking at the cash, and the futures, I was thinking about 3,900, folks. That's just where we tick, 3,900. We are now red on the session after fighting to be green all day. Let's see where the cash is to see where people are getting carved out on the cash. Not the close you wanted to see. Let me see the cash here. $sign INX. Oh, the people that had the 3,900 calls, where'd the cash go? The cash is a little bit higher. So not a great close, folks. Closing 25 handles off the low for the week. Well below my weekly number. So if there's been a bearish Friday, this is it. Probably for the first time in like 17 years. So we'll see what happens. We'll see what happens on Sunday night. Tune in Sunday night if you want to know what's going on and get some trades for the week.
Smash that like button, everyone. Thanks a lot, Joel. I'll talk to you again, if not over the weekend, during the
Go Blue.
Then Monday, Go Blue for you. If you liked my trivia question, guys and girls, we've got more trivia starting right now. Zinger stock trivia. Usually it's at 3:00. Today they were lazy, so they said, "Can we do it at 4?" And I said, "Okay." So trivia questions that I came up with. Yours truly came up with these questions. We're going to find out how knowledgeable the Benzinga trivia crew is, and whether I can stump them with my deep knowledge of the markets. Guys, do we have a video that we're playing or what? Or if not, I'll just blabber on until we promote you.
No, we're liking the blabber.
We're liking the blabber?
Yeah, it's great.
All right.
I appreciate the blabber.
Aaron, producer Aaron is here.
What's up, everybody?
You're working today.
I'm working. I work every day. What are you talking about?
All right. I don't know. I didn't see you on Slacker at all. You're not in the office today.
That's the only difference.
All right. Zinger stock trivia, guys. How we doing this? We need Michael Murray, don't we?
Yeah, Mike Murray doesn't feel like entering. Should we end here? Mike Murray.
Boom. Oh. What is going on?
What are we doing here, dude?
What's going on, folks?
We like to have fun over here.
Yes, we do. It is time for Zinger Stock Trivia. Mike, there's actually a button. You should hit the soundboard real quick.
My soundboard never works.
Yeah, why does Michael always get the soundboard position?
It's working.
I hit 2. Dude, it actually works this time. I'm gonna have fun with that.
Yeah, well, I mean, we'll have to turn it down once we get the trivia music, or we can leave it up.
Oh yeah.
What do you feel like? You want soundboard or the music?
I gotta have music.
All right. Well, you got to give me
Let's
a
go
second to
with
get
music.
that loaded. All right. What's going on today? We got Aaron, not in office, wearing beanies, being a hipster with his glasses.
My hipster glasses, yes.
There's a bit of an echo here. Let me turn on my echo cancellation just to save the audience. And all right. Enough. Usually we're here in the office. Aaron's usually on a ladder. Someone said, "Yo, Aaron."
What up? The real life.
Yo, Aaron.
Rodgers.
Joe says, "Nice cut, Mike."
Thanks, man. Just got it. It's a fresh cut. Yeah, my old hair was too heavy.
But folks, I think it is about that time. Well, you know what? While I set this up, Aaron, do you want to run the rules?
Yeah, absolutely. So the rules, as you guys know, we run stock trivia. We have a slew of 10 to 12 questions today. First person in the chat, once we present the question, you will get presented the answers. Out of the 4 options, the first person in chat to type the correct answer with the fastest response will get that answer correct and be awarded that point. The total or the most amount of points by the end of the show is the winner. Pretty simple.
Pretty simple, folks. That is, in fact, correct. The first person to respond with the best, most accurate response to the question is the winner. And Michael, do you know what the winner wins this week?
Yeah, they get swag, bro. Swag from the swag store.
Something that not everyone can buy. Clearly, Mike Murray hasn't had the chance to buy it. But
because I don't win at this show. Thanks for
No, I was saying you don't have swag, bro.
Oh,
dang.
I don't. That's true.
Nice.
I'm not even here to defend myself today. I'm just chilling.
Jay chilling.
Nice.
All right, so
I'm trying to keep it a little more low key today because I got so ripped on for my language last time. I think I'm just not even really going to say.
Yeah, absolutely. I was going to address that at some point. You did say the F word a couple times last show. Let's keep it a little clean.
Listen, folks, you just have to be patient with Mike Murray. He can get frustrated sometimes. It's understandable. He's not the best loser, but he is a loser. So with that, folks, I think it's about time we get that countdown started. Let's get this show on the road. It is time for Zinger Stock Trivia. And that is a blank screen, but it is starting in a second here. All right. I'm going to add the music, all right?
Nice.
Feel free to talk.
F word, we don't mean fundamentals. Although that is an F word, that we try not to say or like to say, but depending on who you are.
The F word I'm talking about. Nope. You know why? Because this show really brings out the worst in me. And I think it has since the first time we played it, because I just never get these answers right. And honestly, it's going to be even worse today if I don't get anything right, because Spencer's sitting like 20 feet away from me, and I know he wrote all these questions.
Oh, he's watching you like a hawk.
I'm going to be extra pissed if I get none of these, because that means Spencer's better at market knowledge than I am, which is probably true.
I can't. I mean, he does run pre-market prep every single day.
That's true.
It's a great show. Check it out.
That's true. What's one of those stocks? What's AESE? I don't even know. Where's our music at?
Where's our graphic?
Where's our anything? Do we have anything going on right now?
Let me know if it pops up, because I hit start and then it's just like, all right, we're having a little slight technical difficulty with the thing. Let me just restart it here. All right, folks. Michael, why don't you tell them about what we just recorded?
What? Oh, first trade? We just recorded first trade. Yeah. Took a hot minute, but yeah, it was a good episode. It was a good episode. We had Jay Robb on, actually. Jordan Robertson, shout out, sitting at the far end of the office right now in the very corner. She was a great guest.
Awesome.
Talked about TikTok, talked about some of the ways she uses it to buy stocks and crypto. And yeah, it was pretty solid. It was a good show.
Nice.
I was not focused. Levos and I had just ordered buffalo mac and cheese, so I had mine sitting in the kitchen for me. So my head was not in the game at all. I was not even thinking about the episode.
Interesting. I mean, understandably so. Buffalo Wild Wings. I'm done for the day.
Buffalo mac and cheese from Buddies, bro. It was like that buffalo chicken with the mac and cheese.
Oh, you got buffalo chicken from Buddies.
Yeah.
I thought I heard Buffalo Wild Wings.
Parmesan, dude. Parmesan mac and cheese.
We have a working stream, folks. We have a working trivia. So sorry about that, but it's time we get started. We have 40 seconds out.
All right, let's get into it finally.
It's time you prep your fingers to hop on that keyboard. 1, 2, 3, and 4. Those are your options. 6, maybe 7 if we are at room temperature. Folks, are you ready to get started? We have 25 seconds on the clock. I'm trying to get some music in here. That also doesn't want to work. It's not the best situation. Can someone? All right, Michael, why don't you ask the first question when it pops on?
I was just trying to do that terrible fail sound on the bottom.
No, what happened? It cut off again. What's happening?
This is the worst day we've ever had. Spencer, another disaster here.
We changed the time once by an hour from 3 to 4, and this is what happens to us.
Utter disaster.
Utter disaster. What is happening? Yeah, I have one of those too. You want to check it out? All right. Here is something I propose. It sucks because the audience won't be able to, answer, but maybe Spencer can come on and ask us the questions.
Spencer never gets a break. He was expecting to just be off until 4:30, but no.
The live reacting studio just wasn't having it for Spencer, Let's see. I mean, it popped up again. We'll see if it actually works. Should we wait it out or do we just run the question?
Like it's running down the countdown and then just
quitting on us?
Can't even get the music at the very least. That's sad to me.
Do you guys need me to
Yeah, Spencer, why don't you just ask the questions? Let's
ask
pull the plug on this. Yeah.
All right. So here's what we'll do. I'll just read the questions and then I'll put answer number 1 blank and then put 1 for that answer in the chat. 2 for that answer, 3 and 4. Right. That's what we'll do. All right. You ready? Can we at least get some tunes up in here or something?
Yeah, 100%.
We have 0 tunes right now.
Oh man,
we're waiting on the tunes. You have to do
this. Here we go. Turn up for trivia. We're trying to.
All right. Can I start? Do we need to wait for the tunage or should I just start? I'm gonna. How about I just start and then you get the tunes when you get the tunes. All right. Yeah. Here we go.
Maybe some wine will help this.
Question number 1. Question number 1. Which internet company had its IPO on the NASDAQ on this day in 1992? Is it A, AOL, or 1 AOL? 2.
There we go.
2 Yahoo, 3 Microsoft, 4 Amazon. Again, 1 AOL, 2 Yahoo, 3 Microsoft, 4 Amazon. Here's a hint. This company IPO'd. It had a market cap at the time of $62 billion. It was acquired in 2000 for $182 billion in what was the largest takeover, or still is the largest takeover in U.S. history. Again, IPO on the NASDAQ on this day in 92. 1 AOL, 2 Yahoo, 3 Microsoft, 4 Amazon.
I'm gonna go Microsoft.
I'm gonna say AOL.
Oh, dude, you took my answer. I was gonna say AOL. AOL is one of those classic '90s companies,
You can have the same answer. It's okay.
All right, well, I'm taking that answer then too.
All right. Unfortunately, we're not really able to keep score in the chat, but just answer for fun, guys. It is 1. AOL is the answer. AOL was bought by Time Warner in 2000 for $182 billion at the very top of the .com bubble. Okay, question number 2. Actually, no, we can't do this one. All right, we kind of can, even though I just asked it to Joel. So chat knows the answer, but you guys don't. All right?
All right, hit us with it.
All right, there is one school in this year's NCAA tournament that is also a publicly traded company. Which is it? Is it 1, Liberty University, 2, Abilene Christian University, C, Grand Canyon University, or D, Texas Southern University?
I'm guessing Grand Canyon.
Any hints?
Yeah, their stock. I'll give you their ticker. It's LOPE, which is in honor of their mascot name, the Antelopes.
Okay.
Oh, that didn't help me at all.
It didn't really help you. No. So again, Liberty, Abilene Christian, which is in Texas, Texas Southern, which is, you guessed it, in Texas, or Grand Canyon.
All right, my guess is GCU, but I'm probably wrong.
I'm gonna go GCU too. I thought that was their mascot was the Lopes. I think.
Yeah, clearly we're testing you on your mascot knowledge as well.
That's exactly what we're doing.
I'm gonna guess GCU.
You are all correct. It is Grand Canyon.
Hell
University.
yeah!
Hey,
all right. Oh wait, you know we could get some sound effects, right? All right. Question number 3. This legendary banker famously saved the U.S. stock market during the panic of 1907. Is it 1, Henry Wells, 2, Marcus Goldman, 3, J.P. Morgan, 4, Charles Dow? And the hint is this person also named his bank after himself.
Oh, I thought that was pretty obvious then at that point.
Is it? Is it obvious?
I feel like it's JP Morgan.
Wait, what were the answers again?
It was Henry Wells, as in Wells Fargo.
Oh.
Marcus Goldman, as in Goldman Sachs.
Oh, they're all banks. Dang.
JP Morgan, as in, I'm not that dumb, guys. JP Morgan, as in JP Morgan.
Hey.
Or D, Charles Dow, as in the Dow Jones Industrial Average.
Oh man.
I'm going Henry Wells.
And you said the bank was a bank? I can't go with the Dow then.
I feel like that was the only one that's not the answer.
Yeah, I'm gonna go JP.
Okay, Aaron goes JP. Oh,
my boy JP.
Should I be keeping the score between the 3 of you? No, who cares?
Ooh, how about this? How about we
As long as Michael doesn't
all 3
win.
of us, and then the winner picks a random person from the chat.
Okay, that's what we'll do. Crap. So let's pause it for 1 second so I can say, okay, you all know Aaron got number 1, right? Aaron was winning against AOL, didn't right?
Yep.
Okay, and then we had 2. You all got that right. Okay, and then 3. We're on 3.
We're on 3. I said JP.
Okay, Michael Murray. What do you say?
I'm gonna go Wells. I gotta say Wells.
Rohan and Michael Murray both say Henry Wells.
I feel like Morgan is just too obvious. You know,
Yeah,
I feel like it would be too easy.
It was J.P. Morgan actually.
Let's go.
Aaron is winning this one. Okay,
let's go.
Number 4.
I got you, Chad. I got you.
Yeah, let's try.
Dude, can I just? Why are there so many people that like to drink in the chat? The chat is just full of people drinking right now.
That's great. It's Friday afternoon. That's great.
Hey,
Number
you're gonna need a drink to get
Number
through.
4. Number 4. Which of these stocks has not made an all-time high this year, in this calendar year, 2021? Is it 1, Coca-Cola, 2, AutoZone, 3, Stanley Black & Decker, or 4, Dick's Sporting Goods?
So you're saying 3 of them have, just one of them hasn't.
3 of them have made all-time highs this year. One of them is not. Again, 1 Coke, 2 AutoZone, 3 Black & Decker, 4 Dick's Sporting Goods.
I'm going to say, how the heck would Dick's have done well this year?
I'm going to say AutoZone.
I'm gonna say AutoZone.
Yeah.
I want to sing the jingle.
But you know what, Dick's?
Hold on. Dick's has the play of people, having time to go out and pursue sports and do that on their own. So I'm going to change my answer here.
Oh, wow.
I don't want to just say AutoZone, though. What were the other 2?
1 Coke, 2 AutoZone, 3 Black & Decker, 4 Dick's.
See, Black & Decker would have done well as well because, home improvement, people have time for that. Coke, people not really going. Yeah, I'm going to go with Coca-Cola.
Wow, that's
Well, you know what?
I would have guessed.
I mean, it's the biggest company out of the 3 by far, right?
Is it? Yeah, it probably is.
It is. I'd say so.
That's my guess.
All right. Wait, I'm sorry. So Rohan gets Coke.
Yep.
What about the other 2? What about the
I
rest?
said AutoZone.
They both said AutoZone.
Oh, all right. Congrats, Rohan. It is Coke.
Okay.
What? Are you serious?
And I am
great success.
I would never lie to you. I would never lie
I
to you.
wanted to get in the zone,
You're not. You're very much not in the zone.
Dang.
All right.
I was.
Question number 5. This is one that this one did not come from me. When was ARK Invest founded? Is it 1, 2008, 2, 2001, 3, 2020, or 4, 2014. These are all close together. So it's 2008, 2001, 2020, 2014.
I think it was 2014.
I'm gonna say 14 as well.
Yeah, I think it was fairly recent.
2014.
I just read an article. Yeah.
I'm gonna give it 2008.
Was that Aaron who said that?
That's me.
Yeah. I just read an article about her the other day. I want to say it was like brand
Right.
new when she started. This.
Aaron, you are the weakest link. You're wrong. The other two are right.
Hey,
you made it sound like I got that right initially.
Yeah, you did a really good job of fooling me.
Okay, so this next one, guys, hang out for a second. I'm going to see if I can display this one on the screen because it's kind of long. So let me figure out the best way to do that right now. I guess I could just share my screen probably. And
yeah, you don't have any of the answers on the screen.
No, I don't. So I'm just going to zoom way the hell in, and share my screen. And then it's in a Google Doc. All right, here we go.
I'm just going to say this now. Let's make sure we're like ready to roll on the trivia thing next week so we don't have to do this
Alrighty.
improvisation.
What does NASDAQ...
The program kind of failed us today.
What does NASDAQ stand for?
Oh, okay.
Is it A, National Association of Securities Dealers Automated Quotations? Is it B, National Association of Stockbrokers, Dealers, and Quantitatives? Is it C, or 3, whatever, North American Stocks, Debt, Assets, and Qualities? Or is it number 4, North American Society of Debt and Quality Assets?
I'm going to go C.
Okay.
I like number 2.
Okay.
National Association of Stockbrokers, Dealers, and Quantitative. No, actually, shoot, my bad. I'm gonna
wow,
with
Aaron,
1.
that was dirty.
All right. Aaron's going with 1. Rohan's going with 3.
I'm gonna go 2.
1. We got a 1, 2, and 3. Wow. The answer is number 1. Was that Aaron?
Wow.
Oh, we're back out here.
All right. Good job, Aaron.
Nice.
Very nice.
I try.
Wow.
I'm doing this for the chat. I want to pick the winner.
Okay, number 7. Adidas was founded by 2 German brothers until one of the left to start his own rival company. What was that company called?
Reebok.
Is it 1, Reebok?
Oh, really?
Is it 2, New Balance? Is it 3, Puma? Or is it 4, Nike?
Oh,
Nike.
I'm going to go with my original answer, Reebok. Why not?
I'm going to go Puma. I'm going to go 3.
I'm going to go Nike. But quick question for all of you guys.
Yep.
Do you guys know what Adidas is an acronym for?
That was actually my fun fact.
Really?
Their brothers were Adolf and Rudolf Dassler. So Adolf, A-D, Dassler, Das, Adi, Das. And they got their big break by persuading Jesse Owens, the famous U.S. sprinter, to wear their running spikes.
Oh, then it's Puma.
Yeah, so Kevin Costello.
Oh, no, you're saying Adidas. Never mind. I'm wrong. Don't listen to me. I'm all over the place.
You also
I'm
can't
going with Reebok.
You can't change your answer. You said Reebok.
It's Reebok.
Michael Murray said Puma, and Aaron said, what did Aaron say?
It's definitely not Nike.
Aaron, what did you say?
It's not Nike. I got that one wrong. I'm sorry.
Okay. Michael Murray said Puma. Michael Murray is correct.
Whoa.
All right. Finally. Dude,
But what I was saying is Adidas is an acronym for All Day I Dream About Sports. And then Kevin Costello in the chat said, all day I dream about stocks, which, I mean, it makes sense.
All right. Number 8. Number 8. In 2015, the company formerly known as Google changed its name to what? Is it?
Ooh, I know this.
It's Alphabet.
Is it 1, the search company? Is it 2, Alphabet? Is it 3, Larry plus Sergey? Or is it 4, the ABC company?
I'm going to go ABC company.
I'm Alphabet.
I got to go Alphabet too. There's why there was this look on Spencer's face when he said Alphabet and somebody shouted out immediately where he was just like, you fool. But I don't know if that was serious or if he just like, I don't know. I'm going to go Alphabet. I can't overthink
So
it.
Aaron says ABC, Rohan and Michael say Alphabet. Michael and Rohan, you're correct.
All right.
Yo.
Thank God I didn't
Alright.
second guess myself that time.
I must have dreamed
All
it
right,
then.
someone
You got
Falcon 505 commented Rohan bad. What does that even mean?
Well, all right, number
Okay,
9.
sorry.
What is the stock ticker symbol for Harley Davidson? Is it 1, Biker, BIKR? Is it 2, HD? Is it 3, Motor, MOTR? Is it 4, Hog, HOG?
I think it's Hog.
I'm picking Hog.
I'm gonna go Biker, BIKR.
I wish it was Biker. It is not Biker. It is Hog, Rohan, and Aaron.
Damn it.
You got that one.
Boom, boom,
Dude.
boom, boom.
That one was too easy. All
I'm
right.
pretty sure I'm in the lead right now, so you guys need to step
All
it
right. The
Hey, I feel like I'm up there.
The International Oil Cartel, OPEC Plus, consists of the original OPEC members, plus which of these countries? Is it 1, Saudi Arabia, 2, the U.S., 3, Antarctica, 4, Russia?
Oh.
All right, yeah, you're throwing me for a loop with that one.
I might just go Saudi on this one, even though they're like the main oil people, but
I'm gonna say Russia.
Okay, Rohan,
All right.
Saudi, Michael, Russia.
I mean, I'll pick Antarctica to be funny, but I'm gonna just go with the United States.
Well, all different answers. That might be your first. So Aaron, U.S., Michael, Russia, Rohan, Saudi.
Yep.
Michael Murray. Congratulations on that one.
All right, dude. 2. I never get
Nice.
2. That is sick.
All right.
This is like my favorite show.
that's your
There's 2
metric,
more.
getting 2 questions right.
There's 2 more. There's 2 more. There's 2 more.
2 more questions. Let's do
Which
it.
of these is not a cryptocurrency? 1, fake coin. 2, pancake swap. 3, sushi swap. 4, YOLO cash.
I'm picking pancake swap on that.
This is why I hate cryptocurrency.
Yeah,
This sucks,
they
dude.
all- they all
None of
suck.
these are real words.
I feel like the YOLO one is definitely one.
Oh.
All right, again, fake coin, pancake swap, sushi swap, YOLO cash.
Well,
gotta be
fake coin is
pink.
misleading.
I'm gonna go. I'm gonna go pancake swap as well on this one.
Sushi swap.
Aaron,
I said pancake swap.
you're all wrong. It is fake coin.
What?
Oh, come
Pancake
on.
swap is real.
It
sushi
seemed
swap
like
is
such an
real.
obvious answer.
YOLO
Wow,
cash is
we got
also
faked
real.
out.
You got faked
Dude.
out. All right, last one. This is it. Where is the Hershey Company headquartered? Is it 1, in Milk, Pennsylvania? Is it 2, in Kiss, New York? Is it 3, Hershey, Pennsylvania? Or is it 4, Chocolate Town, New York?
Hershey, Pennsylvania.
Hershey, Pennsylvania.
Pennsylvania, but I would love to visit Chocolate Town. That sounds interesting.
All right, that was apparently not a
Sounds
very
like a
hard
place for
question
me.
because you all got that one right. All right, so allow me to tally this up, and you guys can all schmooze for a minute while I just
Schmooze.
Yeah,
Schmooze.
Is this smoozing?
yeah. All right, I have to count.
I don't know what it is, but
That was
Just
was weird.
That was something. It wasn't schmoozing or whatever.
I was gonna make a weird face, and I didn't want to traumatize the audience. Honestly,
Dude, you know what?
Oh,
This
thank
is
you for
why
that.
cryptocurrency is just so weird, though. Sushi swap, pancake swap, like, dude, those are real tokens and real things.
yeah, I bet you can just buy sushi with it.
pancake swap it.
Why can't we just have dollar bills like we used to have back in my day when I was?
This was actually. Oh man. Oh, all right.
Michael, you're not even that old. Back in
Michael,
the
you're
day.
younger than all of us.
Didn't count
He's the
for this.
youngest one on here. Boomer wannabe.
Didn't account,
am-
guys. Listen up. We have a tie. This is a problem. We do have a tie. Michael Murray came in last with 5, but he was
As-
only
as
one
it should
short.
be.
He was only one short though. He was only one short. Aaron and Rohan each had 6.
Shoot.
So that means
Oh,
we have to
man.
do a tiebreaker.
Rock, paper, scissors.
I'm going to come up with a question.
Wait, dude. You know what?
let him do a question.
We should let
Yeah,
Elliot
yeah.
Lane choose the winner. I see him in StreamYard waiting right now.
Elliot Lane.
We should let Elliot Lane choose the winner.
Choose between Aaron and
Yeah.
Rohan.
Yeah, he should just thumbs up or thumbs down. Call
Joe
up one of
says
their names
fight
at
to
a
the
time.
death.
Yeah,
Aaron's not in
yeah.
office today,
See?
otherwise they could do that.
Yeah, that's what I'm saying. Elliot gets to choose. Thumbs up, thumbs down.
Here's what we'll do. Okay. Let's do this. It's going to be an open-ended question. Whoever gets the closest is right. Okay.
I'm
All
ready.
right. What is the market cap of Tesla?
It's over 7 million.
7 million?
Billion.
I was going to say over 4 billion.
It's a little over 7 million. Yeah. What is the market cap of Tesla? Aaron and Rohan. You don't say
4
over.
billion.
Got to give me a number.
4 billion.
I'm gonna say 7.5 billion.
Oh man, wait, Rohan said 7.5 and Aaron's at 4.
Yeah.
All right, Rohan is closest, but you're both way off. 600, somewhere around $628 billion.
Whoa.
Rohan,
This is why we're the tech guys.
that was terrible.
I started trading like 5 weeks ago.
Oh my
okay?
goodness. Oh God, Rohan. All right, Rohan is the winner, and he picks the winner from the chat randomly.
Dang.
All right.
I wanted to do it for you guys. Sorry, I couldn't.
Guys, that was 7 and 4 billion. Oh my God. That's like a
wasn't
Wait.
That's
Who's
like a
the guy
mid-cap.
who said Rohan bad? That's the guy who wins.
Jason D, we do suck at stocks. Sorry.
Oh, these guys are look, without Aaron and Rohan.
Falcon 505, you are the winner. Email powerhour@benzinga.com. Congrats.
Listen,
you commented Rohan bad.
Without Aaron and Rohan, seriously, these guys are like production aces. We wouldn't even be able to like do half this. Like, you should see the studio they built from scratch in our office. So we'll cut them some slack, but that was fun.
Definitely not our forte though. So
Yeah.
No, yeah, exactly.
thanks for being patient.
Hey, listen, it's 4 o'clock on a Friday. Everyone chill, right? Everybody relax. We do have the Cannabis Insider coming up next. Isn't that correct?
Yep. Yes, we do.
All right, we got Elliot Lane, and we got
Patrick.
Patrick Lane. I'm not quite sure if they're related, and if they are,
I think they are.
If they are, in all seriousness, I do tend to forget which one is the older one. I guess we can ask. I suppose we can ask. Yeah, let's ask. Let's bring him on and ask him.
How could you forget?
You should make that clip and tweet it to Elon.
Look at which one of us is wearing a friggin' sweater, and the other one's got a backwards hat on, and then ask that question again.
Fair point, Patrick. Fair point.
Hey, everybody, whatever. Come on. We're remote here. But I'm serious. Tweet that. And Rohan bad.
Yeah.
Rohan bad. If you learned anything from this episode, it's Rohan bad.
At least you own it, man. This is good. This is
Guys,
good.
that's fun. Is this like an every Friday thing?
I like this.
Yeah, usually we're at 3 o'clock though.
And,
so today we're a little bit later.
Usually there's a software that's running and that's doing the questions and not me.
Not you.
Reading it out
I
loud.
thought you did great, Spencer.
Thanks.
That was really good.
Okay.
This is great.
Rohan bad. That's it.
This is great.
All right, I'm gonna hop out of here. You guys have fun with Cannabis Insider.
Let's do it.
Thank you, fellas. Thank you.
Yeah, that was fun. Thank you for the laughs.
Happy Friday.
Yeah, if Elon Musk is still watching, happy Friday to you as well.
Yeah, Elon, what's up, man?
Glad to have you in your $7 billion market cap company.
Yeah.
What's up, Patrick?
I hear they're doing okay over there.
Yeah.
Nothing, man. It's Friday. It's almost the weekend, so I'm pumped. I am pumped. Only a little bit of cannabis news over the past couple days here. Good God.
Comparatively, though, it actually is a little bit. There was so much to start the year.
Well, it's earnings. It's earnings, right? You've got all these announcements coming out, and then just a few moves happening, but big ones for us to talk about today. So that's good. But yeah, I'm excited.
Yeah, Aaron, you there? Let's do it.
Let's roll it.
Started.
The music always gets me, man.
I know, it's great, right? But for the Cannabis Hour theme, my fiance found a very similar chordal progression to Bones theme song. So
really, okay.
Yeah. So everybody go watch Bones. It's also known as Cannabis Hour. You know,
Good show. Good show.
Dust off. Exactly. Anyway,
somebody get David Boreanaz on the phone, please. That would be great.
Guys, welcome to Cannabis Insider. We're here to talk Canna stocks. We got some great news. Patrick's got a lineup. I got a lineup. We'll see who wins out and gets their stuff ready to go. If you're ready to talk about, some cannabis companies, maybe some revenue, some quarterly earnings, maybe some stocks to watch, drop a 1 in that chat.
Let's do it.
It's fun. It's happening. We're here to give you guys some answers about stocks you want to know about too. So drop those in the chat. Let us know what you think. Patrick, start us off, man. What are you interested in today in the cannabis industry?
What am I not interested in? So here's the thing. You say a lighter day of news, and you're right. Today was a bit lighter, but let's just rattle off a few things here, and we'll dive back into them individually. I know you've got some stuff here as well, but we had a slew of companies talk about earnings and release Q4 revenue, mostly revenue. Let's say some pro forma still for some of these guys, but GTI. So again, that's GTBIF. You've got Columbia Care. That's CCHWF, Air Wellness, AYRWF. Cureleaf was a bit earlier in the month, but they've had some adjusted things come out. CURLF. But top of mind for me right now is Cresco Labs going into Massachusetts. CRLBF, I believe. CRLBF. $158 million acquisition. They've vaulted really into, and again, a limited license market, the top 3 position in that market, right? And I think it's the only one one of 3 as of now to be above $1 billion market, right? So Massachusetts is not something to snooze on these days.
Now,
right?
You don't hear about it a lot because they're very difficult to get into.
Oh, yeah.
Very, very difficult to get a Massachusetts license. So that makes it that much more valuable for Cresco and for Revolutionary Clinics and Tilt and Forefront, for these companies that are actually there. It means that much more than a license in California. I mean, maybe not that much more than in California, but like for a state with tons of licensees, that's huge.
Yeah, no, it's nuts. And Charlie Baxel, the CEO over there, he's been in the industry for a long time, right? We talked about Joe Caltabiano a couple days ago and what Joe's doing with his SPAC. But they built that company. Cresco's a juggernaut. They're one of those that always seems to be jockeying for position with Cureleaf and TrueLeaf and the rest, and GTI, right? But really, really great company. And that Massachusetts acquisition, I think, is more important than them acquiring Bluma Wellness and going into Florida earlier this year.
Yeah. Well, speaking of Florida, let's talk MedMen a little bit.
Let's talk about MedMen.
Again.
I had a feeling you were going to bring that up.
Well, you can't bring up Florida and TrueLeaf and then me not leave the fact that MedMen, who just sold their New York assets to Columbia Care, I think, or somebody in New York. They sold them to somebody. They then get a $20 million Canadian raise to go and acquire and go into Florida, which is a much more competitive market.
Thank you, Luis. Thank you, Luis M. in the chat.
Why?
Well, and listen, the first thing you said, though, I can't sit here and call a company trash, but LOL, indeed, right? Here's the thing. MedMen, MMNFF, I believe is the ticker. We've been talking about this company all week, right? Because they're trying to make some moves here, right? They sold to Ascend in New York. And I think, honestly, you're gonna see some of these companies, and this is just my opinion, right? And I'm not giving advice right now. My opinion, I believe you're going to start to see companies jockeying to get bought, right? And I think maybe that's what some of this is, right? You've got purchasing, raising money to purchase more of a footprint, so maybe you can jack up the price a little bit more. We all know they had some trouble paying their bills over the last, I believe, 6 months to a year, right? They were trying to pay their employees with stock rather than, or no, not their employees, vendors, trying to pay their vendors with stock rather than actual funds, right?
They benefited a lot more from that volatility than I realized.
They did. They did. I mean, they're hanging on. And the raise is not a bad thing for them, right? In fact, you could make the argument that now's the time to get in, right? Because that they're going to be a target for someone. They've got a footprint. Clearly Ascend paid them some money for that New York location. So who knows?
Tony, FKA Jeff, the original guy spent millions and they made millions. is also an additional thing I would say there. Listen, I think what the management is doing right now, if it's to what you're saying, is smart, right? I think increasing your footprint, increasing your value, sure, but I mean, they're not going to beat out even Consortium.
No.
They're not going to beat out one of the smaller players, let alone challenge truly for any type of market share. So
I would be shocked. I think that they would have to do a complete overhaul in order to even try to do that. I think this is jockeying for being in that consolidation mix,
so
right?
who does this set them up for? What markets are they in now? I mean, they're West Coast based.
I'd have to look it up.
Yeah,
right.
me too.
I mean, California is the big one for them, right?
Yeah.
And I know that they're in Chicago. They wanted to get into, right?
Yeah.
But Florida, New York, California. Spencer's back. Hi, Spencer.
I just wanted to jump because I remember their presentation at one of our conferences a few years back in Toronto.
Yeah, they were the battle of the ball at that conference.
Yeah, and the whole shtick was, hey, listen, nobody has a better position to retail footprint than us. Nobody is in Times Square. We are. Nobody is in like this super cool LA neighborhood. We are. That was their whole thing. Was like we have the best retail footprint. We are in the highest trafficked locations. That was basically
they paid dearly for that real estate too.
That was right, and that was the main argument. Was hey, look, it's location, and we have it. So that was the argument then. That was 3 years ago.
The opening of the markets in Illinois, positioning GTI. Thank you, Spencer.
Thank you. That was good. Good commentary.
That was really good feedback. But I mean, they obviously don't have Times Square anymore because they just sold it to Ascend. But also, look at Illinois coming on and Michigan. Maybe that has decreased the overall value of their value add in that retail footprint. I don't know. We'll see. So anyway,
so I had a couple more. More because only because I think it's interesting. This AFC Gamma, right? It's a cannabis mortgage REIT. AFCG is what they're going to be on the NASDAQ. They're going public. I forget the projected date, but it's soon, right? 119 mil, right? Here's the thing. Len Tannenbaum from Tannenbaum Investments founded Advanced Flower Capital, and it started really started at our Miami event 2 years ago, right? I would say this past year, but God knows it was a COVID-friendly year in terms of what happened. But Len Tannenbaum's a really smart guy,
he is.
And a great investor. And what he's done with really the little time that he's been in the industry, it's been very impressive. So, I think we were talking about IIPR on Wednesday, and whether or not some of the access to capital markets that's coming with the Safe Banking Act is going to affect them. I think it definitely opens the playing field, and maybe if Lens Group can come in and offer better pricing, IIPR might be
Well, and since we're on this conversation, yes, the debt conversation is something that you and I have been harping on for a bit, but IIPR is not going anywhere. They'll adjust. No. They're going to take a hit, but they're going to adjust. They'll bounce back, whatever hit that is after legalization / banking. But when it comes to the whole debt conversation, good leadership like AFC Gamma apparently is going to have. I didn't realize that was Advanced Flower Capital when we looked them up a couple of days ago. I just saw AFC Gamma. So I think that was Pam who asked that a few days ago. So Pam, if you're watching, an additional piece of information
it's a
there.
Good group.
Yeah, Len's awesome. Len Tannenbaum is awesome. So that's interesting, but also to what Patrick and I have talked about before, just look at what Canopy Growth is doing they just borrowed $750 million. It'll be
What do you make of that? What do you make of that?
I mean, they're not going to dilute their company any more than they already have. So at least at this point, unless BlackRock wants to get in, debt to me is the only reason they would raise that much money. But look at the percentage, 8.5%, because they don't have to take ridiculous rates anymore.
No, that is actually pretty exciting. And I think what we've seen in the debt space, and maybe you're about to say this, I'm sorry for interjecting, but what we've seen in debt up until this point being really some of the only method for moving your company forward in this capital crunch that over the past year and a half has affected this industry. It's easing up now, right? Mm-hmm. Those percentages, which again were in the mid-teens, it's astronomically.
I think as high as 17-18%. I saw.
Yeah.
Like, it was ridiculous. So, I mean, like IIPR, like, I mean, they again, that $51 million deal with Forefront, that Forefront is basically paying for. Like, I mean, they're sitting pretty right now. So, you know, short them, do what you want. They're not going anywhere. AFC Gamma Power REIT is another one that has some good real estate.
Well, and there was another one. I don't, are they public? I can't remember. Let's see. There was another one that got bought today.
Oh, it was
New Lake acquired
Yeah,
Green Acreage, right? And Green Acreage has been around forever, right? They were some of the OGs in this space. I think they came to one of our first conferences, right?
And New Lake was at our last in-person one in Miami.
Yeah. Anthony over there is really, really smart. Really good guy too.
Patrick, let's. Well, this is the second time Gage has been brought up. You know Fabian well, or you know the team over there well.
I do.
Any insight into this? I mean, we probably can't say anything if Patrick does know, but
we cannot. Here's what I can tell you. It's going to be sooner than you think, right? The last conversation I had with them, again, I can't get into specifics. There's really only one more shoe to drop before this happens, but they're busting their butts, and it's a great company. We all know that, so it's exciting stuff. Sorry, I can't give you more information there.
No worries. Another one in the chat from Mike Kaufman, Halo Collective. So I'm
Halo, formerly Halo Labs?
I think so.
Okay.
You know, they acquired. I mean, it seems like they acquired the world with how many acquisitions they made. I'm surprised I haven't been bought by Halo, to be quite honest with you.
You might be.
So they're big in Oregon. I think formerly, was it like Golden Leaf? What was that? What it originally was?
Golden Leaf's still around, I think.
Then Golden something. But anyway, they're big in the cannabis oils, concentrates. I mean, but they cultivate. You know, I think they have great management. I think they are. I think they have spent a lot of money, and I'm anxious to see how that plays out for them in the next couple of years. To your point, Mate Kaufman. I personally am not going to buy their stock right now. That doesn't mean there's not value there. You know, these acquisitions could very well be paying off as we speak, but you know, that's just my personal opinion.
Here's something. Let's jump back to Green Thumb Industries, GTBIF, for a second, right? Alan Brockstein, who I talk to regularly, calls this company the monster of the Midway, right? They're one of like 3 or 4 juggernauts, all located in the Chicagoland area, right? Or all headquartered there, right? You've got GTI, you've got Cresco, you've got Verano, and I want to say there's one more that I'm going to get in trouble for forgetting, but these guys, with their earnings that they announced recently, they were way ahead, right? Unlike, I mean, listen, some really good companies are not necessarily meeting expectations, right? Curaleaf fell just slightly short of expectations for Q4. GTI was well ahead for both revenue and EBITDA.
I'm going to let you continue. I just want to say a real quick number: 157% year-over-year growth.
Oof.
157.
Crazy.
Up to 556.6 million in 2020 of revenue. Back to you with those giant numbers.
Yeah, I mean, I think, again, right now, you're going to see such consolidation. I think we all know the big MSOs. Maybe there's some monster deals, an Afria Tilray deal in the wings somewhere here. But as of now, there looks to be a small circle of winners in this industry, right? Whether you're talking about Trulieve or Curaleaf or Cresco or GTI, and you've got some newer players like Air Wellness and Verano, who are killing
Columbia
it.
Care
And Columbia Care, right?
They're a tier 1 operator. They're killing it.
And you've got some others. You've got some other big ones that haven't made a ton of noise recently, but you know, you go back a year, even 15, 16 months, and maybe they were at the top of the heap, like your Harvest Health and Recreation, right? They were monsters in this space. So I don't know. I would say right now, GTI looks really, really good.
Oh, yeah.
Right? Ben Kovler is a very smart guy. Again, he comes from Lord, I forget the brand, but I want to say his family owned one of the big bourbon houses in Kentucky. I'll have to go back and do that.
I was just about to reference this, Tony. They give back in a lot of ways. Curaleaf does too. I love Curaleaf's their 4-pillar program, but GTI does a ton as well. They donate to charities. They make sure their frontline workers have access to COVID vaccines.
Yeah.
They have a whole social equity program entitled Leap Social Equity. They made a documentary with Last Prisoner Project. I think they give back to the Bailey Legacy Fund, which is all about rescuing animals and dogs and sheltering cats. So,
that's cool.
Yeah, I know. I like GTI. I think is they put their money where their mouth is. So does Curaleaf, and these big companies need to do that for this space to continue to move forward. And investors are putting pressure on them to do that. Take that for what it's worth. But in my interview with Khadija Tribble, 2-3 weeks ago now, there was a stat that was thrown out there. 85% of people are looking for impact investing right now.
Yep.
They have active investors when I say people. So, I mean, these companies that are putting their money into that, like a GTI, like a Curaleaf, they're gonna reap the rewards of that too.
Yeah, clearly, and let's not beat around the bush either. I mean, I'm in complete support of that. I also think it's a very wise way of going after that Gen Z group of investors on Robinhood and Webull who want to see that, right? They want to know how the climate's being taken care of, or social equity is being involved. They want to understand that. So props to these companies for getting in there and doing that.
Long way to go. And another one I'll mention, Aaron, I apologize for throwing this one out of the blue. Zone Properties. Switching from like social equity to more of like the sustainability. That's a conversation that I feel like gets lost right now. Is sustainable growing and sustainable building. And Zone Properties actually, when they build their franchise locations, their retail centers, they do it with sustainability in mind, and they're actually completely carbon free, if I'm not mistaken. Zone Properties is. So very cool company. Zone Properties is public. Pulling up the ticker right now. You like my song? They are listed on the OTC ZDPY. ZDPY. That's a pretty cool company.
Okay,
Cool.
so two more for you, really quick. This company is not public, but I would be shocked if they didn't end up that way soon. So keep your eye on them. It's Dutchy. If you haven't heard of them, they are insanely popular, right? This is
that's actually, it's 1.7 billion.
Yeah,
it's not 1.7 million.
No, yeah, billion. They're now a unicorn, right? They just closed a 200 million Series C. They bought Leaf Logics and Green Bits, and it's a platform where you can order cannabis and have it delivered, right?
Well, and I think I throw this stat out the other day. 10% of legal cannabis sales globally are processed through Dutchy now.
That's
with
insane.
Those 2 acquisitions.
That's insane. Imagine the data that you have access to. Anyway, private company, really, really cool though. So definitely keep your eye on them. It's absolutely insane. The Lipsons are badasses and friends, by the way. Good guys, both of them.
So
did you have something else? Go ahead.
Well, I was just thinking about like the brand side of things. With GTI, they also announced a partnership with Cann. I mean, their private Cann, CANN, is a private beverage company. It's drinkcann.com.
You guys all know about Cann, though, right? That's the one that Reese Witherspoon and all these other celebrities.
Not Reese.
Gwyneth Paltrow.
Gwyneth Paltrow.
Reese too?
I don't know. Maybe.
Oh, maybe not.
Not to my knowledge.
Reese, get on that, Reese.
Yeah, right.
You gotta get on that.
Gwyneth Paltrow, Darren Criss, and Rose. I forget the last name. But regardless, they are celebrity backed and very, very well liked, and a very cool brand just all the way around in California. And GTI is taking them national. So keep an eye on Cann. They're going to be on the scene very quickly. But GTI is going to add that brand into their portfolio of just an already incredible suite of products. But I was thinking, looking at like what Cookies has done with Gage, and what Can could do with GTI, and it took me roundabouts to the Cookies and Next Green Wave partnership as well. What other brands do you think have that kind of power right now? I mean, power being like, I congratulate people for partnering with these brands. So like a Can, like a Cookies.
Yeah, I would say that there are a couple that always come up when I have this conversation. One of them is a private company out of California that anybody in cannabis knows. It's called Sherbinsky's, right? This brand is there. If you're partnering with Sherbinsky's and you can have that in your dispensaries, especially if it's exclusive, it's going to constantly be sold out, right? Those guys are very, very well known for doing a good job. Thank you, Aaron. Another one, public company out of Denver, is Slang Worldwide. I believe it's SLGWF. But I think they just partnered with a bunch of dispensaries here in Michigan. And I know that they're in Canada, they're in 10, 12 other markets. They're sort of all over the place. So I hear their name all the time, and they're a very, very undervalued stock for their footprint, I would say.
Very cool. What's their market cap?
It's a great question. I don't know.
Whatever.
Yeah.
Anyways, guys, drop your tickers in the chat. We love it interacting with you all. We want to hear what you guys are excited about. Drop a 1 if you're having fun. We love talking about cannabis stocks. It's what we do best. At least Patrick and I, and Spencer and Mitch can do the rest.
Indeed.
What about Neptune? People were dropping Neptune in the chat earlier this week. They acquired a novel foods company, right? And it's similar to what Valens did as well. So that they're kind of bringing their brand and their access of extractions into other markets is what it seems like to me. But maybe I'm overreading that.
No, I mean, it's tough to say when it comes to especially some of the extractors, right? And who's really killing it these days, right? And I haven't talked to a couple of these guys in at least a month or so now. But you've got Metafarm Labs, you've got the Valens company, you've got Neptune, you've got Paul Peterson's group at Nextleaf, right? All of those guys are good. And then you've got some of the American companies like your Precision Extraction, and
yeah, that's what I was going to say. Precision, they're private, and it's just like they are one of the cooler ones. I think they work with TerraSynth, they work with Canopy, they work with tons of big names in the industry, and it's like, go public so I can buy you. Come on, I want to own you.
Yeah, one quick thing, and we've got about 5 minutes left, so I want to hit Tony's comment here. Oh darn it, just got removed. Or maybe I just need to scroll down. No, that's there. Canadian cannabis companies are only a trade, not an investment, in my opinion. So Tony, I read something today. I want to say Alan Brockstein put it on New Cannabis Ventures, which, if you guys don't know, is a really, really good site. I love benzinga.com/cannabis. That's where I'm getting my news. But after us, I would absolutely be going to Alan Brockstein's site and checking out his headlines. His index is really, really strong too. So check that out. But listen, he wrote something today about Canadian cannabis sales slipping something like 6% over Q4, right? And I don't think that's anything to scoff at, right? 6% is not, it's not terrible, but it's also not small, right? Especially for that market and one that was really leading the charge. I would kind of expect them to be further along by now. I know that's kind of been the trumpeted tune that everybody's been singing for a year or so now. But you ask about ACB. Somebody in the chat asked about ACB. That's Aurora Cannabis. It's been a roller coaster, right? And I'll say this: we know Aurora, and we used to see them all the time. Obviously, they had to batten down the hatches when things went south. No one really knew what was going to happen, right? They're a $2 billion market cap company, so I think they're going to be fine. But obviously, just like we saw with Canopy and a bunch of the other Canadians, they had to cut a lot of people, cut a lot of real estate, basically selling everything off to stay afloat, right? I would not. I'm not looking at Aurora to be the powerhouse, right? I look at Afria, Tilray, I look at Canopy, and then, funnily enough, especially after the investments made, I'd be looking over at Village Farms or Organigram before I'd be looking at ACB these days. So, not to say that the company's not going to make it, but I expect them to be a target, much like some of these other ones.
Yeah. So, Will Lee in the chat, if you had to pick one weed stock, what would it be? Disclaimer, this is my personal thoughts. I'm going to give you two. One that I feel is my personal, like, I think this is going to be a big winner. And then one that I feel like there's a ton of value to be had there. So first one being Canopy. I think pretty obvious choice for me. I'm a big Canopy fan. Their celebrity backing, their product suite. They have lobbying arms. I mean, they're in every facet. I just don't see them going anywhere. They're in no threat to be bought. Canopy will be doing the buying. So that's one for me. If I'm looking at value, I'm going next green wave. That's just my personal opinion. I think they have done
cool stock.
Very good job at saving money. I think next green wave I think they have been as profitable as anybody, at least percentage wise. That's just my personal favorite cannabis stock right now. I don't know.
No, I think that's good. I think that's good. Listen, if I had to choose, and I'll give you two sides of the same coin. I think, here you go, Tony. Gird your loins, buddy. Here it comes. So if I had to pick one right now, I'm going GrowGen, GRWG. It's a solid company. You're looking at, again, picks and shovels. It's a company that's going to keep growing, right? And I hate that pun, so I'm not even going to make it. But I feel like everybody in this industry hates those puns these days, guys. It's not cool. The puns are not cool. Can we stop with the growing puns?
You're the only one making it right now. It's just you.
Well, I'm. That's fair. That's fair. I'll take that. But GRWG, great stock, and obviously going to be around for the long term. But here's the thing. And I know everybody's worried about this in this industry. As investors, I don't think we need to be, because there's money to be made either way. But I know a lot of the purists want the industry to stay strong and to stay independent. They don't want big alcohol or big tobacco or whomever coming in and buying up everything and turning it into, whatever the heck those industries are, right?
Mm-hmm.
But I'll say this. If I had to pick a company that I thought didn't need a big tobacco or big alcohol or big CPG to come in and buy it in order to be successful or competitive, I would look at a GTI or I would look at Trulieve, right? I think those two companies by themselves, even with Ben Kohler's, sort of big alcohol experience with his family ties and everything, I would say each one of those companies could stand on their own, right? And without the need for a giant investment from those two. Again, just my opinion, but I'm a believer.
Awesome. Guys, it's 5:00. Will, it was NXGWF, I believe, is next green wave, right?
Yep.
NXGWF.
Yep.
Awesome. This has been fun. Come back, hang out with us, throw some tickers, bring us stock ideas. We will analyze them and go through them live here with Benzinga Pro. Shout out to Spencer and Mitch and Aaron behind the scenes.
Thank you, boys.
So much is happening in cannabis. Tony, thanks for joining us. Will, Lone, Jeff, always good to see you, Jeff. I hope you guys have a wonderful weekend, and we will see you Monday at 4:30 p.m. Eastern Time. Patrick, bye.
Sayonara, guys. Been real.